World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world's most powerful investors don't ring a bell. They quietly reshape entire industries. From private equity and credit to venture capital and M&A, investors don't ring a bell.
Not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
There's just an extraordinary demand right now for fast inference. We're the fastest, not by a little bit, but by more than an order of magnitude. You know, we're 15 times faster than the next nearest competitor. And as AI has become useful, everybody wants it to be fast. Nobody wants to wait.
That was
Test. Dinig ba? Dinig.
many countries.
Rodrigo, just given you know, the supply crunch for a lot of this.
Dinig ba? Dinig. Okay. Kaya F muna natin tong Bloomberg. Alright. Para sa mga bago, paano ba gumagana tong terminal natin? So sa mga naka-PC, ang makikita nyong pag login nyo dito sa terminal, ito agad, main dashboard. Pero para dun sa mga signal, paano ka makakaano ng signal? Kailangan may click tong brain terminal. Tapos, pag click mo dito, kailangan mo to i-refresh upper right. Kasi hindi yan automatic na hindi yan automatic na pagpunta mo dito, yun na. Kailangan i-refresh mo yan. Para siya. Para magtawag siya dito sa 7 agents natin. Kung yun yung updated na bias nila. So, ito, nakita natin na ito na yung pinaka-latest, sa baba, 923. So, sa ngayon, ang structure bearish, pero ang execution natin is naka-wait. Kasi wala pang entry model. Yan, no trade pa siya. And kapag tinignan naman natin yung talagang market, mahirap rin talaga pasukan tong ganito. Kasi pag nakita nyo, di pa ako sanay mag-chart dito. Maliliitan ako.
Okay. Ito napansin ko dito kanina eh. Bago ako matulog. So, para sa mga mga bago, nagtataka bakit tumulo si gold. Unang-una, fundamentals, meron yung effect syempre. Pero overall, bakit? Ano to? Ano tong pattern na to? Para sa mga matagal na nagte-trade. Common to. Ano tong nakikita natin? Ayan, ano yan? Ano yan? So, itong nangyari ngayon, HNS, H4, pupunta ang H1, HNS din. Head and shoulder to. Mga ano to, shampoo. Anong tinarget niya? Left side support. Natulo talaga. 4-7 to 4-5. Check natin sa candle analysis. Ito yung kung napansin nyo, sa mobile nakatago to sa more. Sa more, tapos pangatlong folder siya. Unemployment ba ngayon? Hindi pa na-check na. Ano ba balita ngayon? Yes sir, binalikan talaga. At saka, usually, di na ako nabibigla sa mga ganitong Friday, sunog day talaga to. Nag-exit yung mga tao. Yun din nag-alert sa akin kanina eh. Yung meet and greet ni Trump tsaka ni Xi Jinping. Ayan no, tsaka kung makikita natin dito sa dashboard. Ayan no, nag-notify din. Ano pa ba naging balita kay Trump? US and China are aligning on Tehran must make a deal soon. Wala na kasi mabibigla sa akin. Wala mabibigla. Pasok kasi ng pasok, boss. Yan tayo eh. So, kung tatanungin niyo ako sa current situation na ito, pukain na mo. Nag-signal siguro. Kita niyo ba yung screen? Ay, hindi pala lumalabas, no? Hindi lumalabas yung pop-up na 455. Ang tipe level na ito. Ayun nga, meron nga. Meron ngang signal. Meron ng sinignal si Tradex. Tapos, kung gusto nyo maintindihan bakit yun yung bias, i-click nyo lang yung bawat agent. Pero, pinaka-best na dyan, si Master. Master agent kasi nakapaliwanag na. Pwede ba si signal mailagay sa main dashboard as part of the market verdict? Teka, hindi ko ba nalagay sa widget to? Pwede siyang ganito, bro. Teka, pakita ko sa'yo. Paano setup. Ganito siya, bro. Teka nga. To. Ganito. So, ayan, kinlear ko na yung di ba, nasa baba. Clear ko na yung nasa baba. Ang pwede mong ilagay sa widget is itong 7 agent overview. Ay, puking ina, hindi pala updated pa to. Yung luma pa rin yung gamit niya. Wala bro, buti lang sinabi mo. Ayusin ko to. Ngayon ko lang napansin na. Ito, MTF bias. Wala rin to. TV hit na yung kakabato lang na signal. Kung na-check nyo. Basta guys, para malaman nyo kung may signal na si tradex, kailangan lagi nasa kayo, brain HQ. Pagka punta nyo dito, kailangan naka-refresh siya, tapos titingnan nyo yung oras kung anong oras. Kasi mamaya, meron nga tapos hindi mo pala updated. Diba? Yap. May delay lang to po kaya na. Tinamaan na niya pero open pa rin daw eh. Sira ulo rin tong terminal ko eh. Ayun, natulo na si Loco. Next support natin, 4, 5, 10. Ako siya pwedeng potential na punta na ba sa Grekta talaga to? Or 5-10 tapos psychological level 4-5. Pero pag na-break si 4-5 baka dumiretso doon ng saan ba daily natin? Lalim min 4-3. Si execution, pwede. Teka, gawin ko ng ano. Ano bang gusto nyo? Like, si specific na agent lang o itong buong to pwede natin ilagay sa widget? Yung 7 agent overview. It's natin, bro. Si execution. Walang nga. Nangyari ba't wala? Check natin quiz kung ano. Pwede natin malagay na ano, specific agent. Luma pala yung ano, nasa widget ngayon. Hindi yun yung updated eh. So meeting. Ingay ng aso dito. Ayan na siya. Bro, ano, inaayos ko. Gawin natin ng paraan yung ano. Execution agent. Tulo kung tulo talaga. Signal dashboard. Ano ba nangyayari sa mundo? Dami rin talagang gera no? Paano nabawasan to? Karen must make a deal soon. Tingnan nyo. Tingnan nyo gaano ka-detail yung balita. Oil prices up 2% as Trump and Iran's comments then peace hopes. May 19. May mga quiz na-try mo na ba tong PNL? Nagsisync ba yung mo? Sensation. Di nalalag. Nasa bro, kailangan mo siya i-connect. Ito. Add exchange. Kaya lang, wala pa tayong option sa ngayon para makonect yung MT5 kasi may bayad siya. Ayoko naman magbayad kayo ng additional para lang makapag-journal, diba? Kaya nilagyan natin ng ilagyan natin ng option na mag-log na lang kayo ng manual. Like, kunwari, asan ba yun? Ang araw ngayon? May 15 ngayon, di ba? Ayan, log trade. Tapos kung panalo o talo. Kung talo, syempre, negative. Hindi natin 1.5. Tapos, ayan. Note mo na lang din kung gusto mo detail bakit ka natalo. Hindi ko sinunod. Setup. Ayan, lalabas na siya dyan. Diba? C-Trader. Teka, pwede natin lagyan ng option. Feeling ko mas flexible si C-Trader eh. Kumpara sa Meta MT5. And bali ganyan, ima-manual log mo lang siya pero may option na mag-connect kayo ng nyo, ng platform nyo. Pero sa ngayon, ayan palang available natin. Binance, Bybit, OKX, MT5. Ko-connect nyo yung account nyo. Huwag kayo mag-alala guys, hindi ko kayo i-hack. Secure yan. Parang may FX book. Pwede. Madali lang yan guys. Lagyan parang detail talaga ng trade mo. Pwede. Like parang data talaga na no. May mali dito sa signal history. Kailangan ayusin to. Try natin yung ko is C-Trader. C-Trader. Hindi ko pa naisip yung C-Trader na yun. Yung pala ginagamit ng iba. Tapos ito pala ba sa mga hindi pa nakakaalam sa mga bago. Ang tawag dito? Kasi 'di ba pag nagbato ng signal yung agent natin hindi nyo alam kung anong lot size o kaya leverage. Ay dapat gagamit kayo ng ng lot size calculator based to sa account nyo. Buong ngayon talaga itong signal history na to Kanina pagpunta natin SL hit tas ngayon TP hit. Pero yung actual na nangyari, TP hit talaga siya. Based dun sa batong signal kanina. Mali lang yung nakukuha ng data. Bakit hindi TP hit agad yung lumalabas dito? Bigyan ko yung sample 4556 4551 564551. So, kung sa prop firm tayo, 100k account. May mali dito ah. Ba't ganito yung computation niya? Mali ito. Magsi 005 ka sa 5k. Kung inasunog ka dyan. Tapos recommended niya sa 100k, 1 lot. Negative to. Ayusin to. Fund account para pwede mag-set up lot size to trade. Pwede bro. Actually, pwede rin naman yan dito sa sa lot size calculator. Since pwede mo i-customize kung anong account size mo dito. Automated. Iba yan quiz eh. Kasi yung automation na yung auto trade, EA na yan. Hindi na siya, pero madali lang kung tutusin. Kaya naman gumawa ng EA. Kaya gumawa ng EA. Pero ang problema kasi sa EA ko is kailangan may VPS ka na uma-under 24/7. Yung VPS, yun yung tawag dito, yun yung server na nagra-run real time. Kumbaga, pinapanood niya yung market, real time na galaw ng kandila. Tapos, tsaka mag-execute ng trade yung EA. Siyempre, yung EA, may logic pa rin. Hindi lang basta pasok. Teka. "24/7 quiz" kasi hindi gagana yung EA kung walang server. Ang kailangan mo rin dun tawag dito, ang kailangan mo rin dun VPS talaga, tsaka naka-on yung PC mo. Pero meron ding ano, tayong tinatawag na cloud server. Pwede rin cloud server, pero monthly ano rin siya, monthly subscription. Magastos lang pero good siya. Kung magandang ano, logic ng EA. Hindi lang basta pasok. Kasi marami akong nakikitang EA na ano, yung mga ginagamit ng mga ano, content creator. Sunog. Sunog kung sunog kasi hindi siya, wala siyang logic. Siguro sinalpakan lang ng random na strategy. Ang initial plan ko kasi dito ko is etong tradex. Ginawa ko talaga to sa ano. Ginawa ko siya tawag dito. Ang vision na nakikita ko dito bago ko tubuin is Bloomberg talaga yung ano, approach natin. Yung approach natin, Bloomberg, in a way na gagamitin talaga siya ng trader. Hindi yung parang hindi parang bot yung magte-trade para sa atin. Kasi yung bot, hindi hiwalay na yun sa tradex. Ibang ano na yun, ibang project na yun. Kasi ito, ang habol ko talaga dito, support system. Kumbaga, bilang tayo mga trader, wala tayo kasing resources eh. Ibig ko sabihin, limited yung resources sa public. Like yung mga info na nakikita natin ngayon dito, yung mga info na nakikita natin dito, kaya wala na pala akong access sa truth. Kaya isa pa. Tingnan mo. Yung mga fini-fetch na data dito, binabayaran to ng iba para makuha natin. Itong routers, Truth Social. Yung Truth Social, libre lang kasi pwede ka naman mag-ano dyan eh. Pwede kang gumawa ng account dyan tapos login ka tapos bantayan mo lang yung account ni Trump. Kaya lang, hindi siya auto ano. Kailangan nakatuto ka talaga. Unlike dito, fini-fetch na talaga yung data. Fini-fetch na yung data, di ba? At the same time, meron din siyang analysis. Hindi lang basta ano. Kasi ito yung nakita kong problema ng iba eh. Alam mong may balita. Di ba? Alam mong mayroong balita, pero hindi alam ng trader kung ano ibig sabihin ng balita na yun sa market. Problema ko yun dati nung hindi ko pa alam yung mga fundamentals. Testing. Hindi pa ata updated. Teka lang nga. Saglit lang quiz. Naayos ko lang tong widgets natin. Kasi kung EA yung yung direction natin quiz. Pwede naman, pero ang kaso kasi hindi na siya related sa tradex. Kasi itong tradex, ang vision ko talaga dito, support system, hindi para mag-execute ng trades para sa atin. Kasi gusto ko mag-improve yung trader talaga. Mag-improve yung trader, hindi yung asa lang talaga literal sa EA. Ang alin quiz? Anong M15 H1 H4? Yung analysis o itong trading view natin dito? Nag-hold talaga yung 4-5 din. Yep. Doon sa 7 agents. Ano meron? Ano meron dito ko sa 7 agents? Alin quiz? Itong execution. Ito. Ito ba? Itong nasa taas. Yung pa na-try itong 7 agents sa BTC. Kasi na-focus tayo sa gold eh. Teka, may ina-update ako ngayon eh. Na-push na ba? Testing. Check natin. Di naman binago eh. Kalang ko isa. Testing natin kung ano. Okay, ganito siya. Ito na yan. Ito na yung quiz. Minsan yung sinasabi mo. Add mo lang siya. Add mo lang tong widget na 7 agent overview. Tapos pwede mo i-filter kung ano lang yung gusto mo. And kung ano yung gustong agent na nandito. Ako siguro kailangan ko lang dito execution tsaka master. Pero kung gusto nyo detail talaga, isama nyo na yung trend tsaka price action. Kung hirap kayong malaman yung bias. Pero ako kasi madalas unang tingin ko pa lang sa chart, alam ko na yung Kaya ang kailangan ko na lang itong execution tsaka master agent. Ayan, quiz. Okay na ba yan? Ito parang may kulang. Meron pa rin overview. Okay, meron pa rin. Alam ko isa. Dami ko inaayos eh. Sabihin nila. Uy, dito ka lang. Wala tayong bagong preset. Ang kaso, hindi na siya one screen. Kailangan mo na mag-scroll. Na-OC ako pag kailangan mag-scroll eh. Ano meron kay ARM quiz? So, dapat meron na to. This. Okay, meron na rin. Goods. So, ilagay natin tong refresh button dito para sa para malaman natin kung updated ba tong ano niya. Para di na kailangan pumunta sa sa Brain HQ. Pero ako kasi gusto ko tumatambay dito sa sa Brain HQ, parang may nakikita akong visual. Pero ayusin ko pa to. Lalagyan ko to ng interactive talaga. Kasi ngayon stock image lang nakikita natin eh. Gusto ko nakikita natin gumagalaw talaga yung mga trader, mga agent. Quiz pag ang tawag dito, pag inad mo yung ano mo, yung widget, ito, diba inad mo, save mo yung ano mo, layout mo. Kunwari, di ba may custom ano ko dyan eh. Naka-custom yung setup mo, di ba? Save mo dito. Save layout. Para pag login mo sa ano sa tradex, hindi na mababago yung ano. Hindi na mababago yung setup. Try ko mag-sign out. Testing ko kung magana. Notification sa gitna. Pwede natin gawin natin. Di na save. Yung alin quiz. Yung layout mo. Wala pa akong ginagawa. Teka, check ko tong ano. Inad na ba? Ayan. Quiz, meron na tayong si trader. Testingin mo kung ano, kung working siya. Ay, kailangan pa rin ng meta. Pucha talaga. Kailangan pa rin ng API ng ano. Teka nga. Gawin natin. Baka may band-aid solution to. Kala nga. Sa ano to, Koy? Sa PNL calendar. Ito. Hirap kapag hassle yan kasi kung magbabayad pa yung user. Okay. Sige. Ito, Kuis, may nahanap na akong band-aid solution para makonect mo yung C-Trader. Nang walang bayad. Tapos auto journal na rin yung mga execute trades mo. Ayusin natin. Okay. Guys, kung nakikita mo yung bagong update, ganito na siya lumalabas. Hindi siya mawawala hanggat di mo ini-X. Ayos ba yan? Sa may oras kung kailan nag-send yung alert. Diba? Pero parang napapangitan ako sa alert niya. Pangit ng alert niya. Hindi siya aesthetic, men. quiz, tawag dito. Sa signal, meron tayong, filter kung na-invalid na siya. Lalabas yun sa signal history. Pero siguro lagyan ko na lang din ng alert. Itong MT5 ang gusto kong masolusyonan eh. Kasi majority na nagte-trade MT5 eh. Buti pa yung C-Trader, merong libreng API eh. So, ayun lang, hassle pala to. Hirap pa. Wala, sa mga MT5 manual pa lang talaga muna. May bayad kasi. Lugi naman sila kung diba? May bayad na nga, gagawin ko pang subscription tong tradex tapos may bayad pa yung yung PNL calendar. Si C-Trader. Na-try ko na rin yung C-Trader. Para siyang trading view na pwede ka mag-execute ng trades. Si MT5 tsaka MT4 kasi luma na yung tawag dito. Luma na yung style niya. Tapos wala ka halos tools pang technicals. Unlike sa trading view na kumpleto. Ang problema ko kasi quiz ngayon sa totoo lang, di naman hassle na i-manual log mo yung trade mo. Like, lalagay ka lang naman ng number tsaka kung ano nangyari sa trade na yun eh. Ang kaso lang, baka yung iba tamad. Baka yung iba tamad. Iba majority gusto nung iba, naka-auto na, auto lahat. Yung maganda sa ano. Sa MT5 wala. Talaga sa MT5 ka dapat mag-trade. Kaya dilemma ko rin yan actually dati. Nung nag-i-scalping pa ako. Kasi 'di ba sa ano sa trading view, delay ng ilang seconds yung galaw ng kandila kumpara sa broker mo. Yung broker mo kasi syempre 'di ba may sarili silang liquidity. So iba yung ano ng galaw niya. Kaya ang nangyari, kunwari nag-technical analysis ako sa ano sa trading view. Tapos mag-execute na ng trade. Syempre sa MT5. Iba-iba yung ano eh. Kaya kailangan meron din talagang platform na andun na yung analysis, andun na yung execution para pasok na lang agad. Lakihan yung notification. Pwede naman. Gawin natin ano. Pero papalitan ko to ano notif. Napapangitan ako sa pop-up niya. Legit. Yan yung downside ng copy trade. Hindi siya real time. Okay, testingin natin tong ano, C-Trader connection. Quiz pa test since ikaw yung may C-Trader sa atin. Kaya lang, i-run ko lang sa ano, database. Para mag-update na siya. Consistent talaga yung aso sa labas Okay, naran na. Tapos, consolidating. Okay, magka-consolidate muna talaga yan kasi laki ng tinulo niya from ano 4.7 4.7 siya galing kanina, diba? Tulo malala Teka lang. Kailangan pa pala kumuha ng secret key para sa C-Trader. Feeling ko gana na to pag na-set up natin. Okay, nakain ako. Nasa yung menu dito. Ito. May error quiz pag pinasok. Ayun, solve. Napagana mo, quiz? Teka nga. Hindi ko pa na-check Na-update na ba? Paano gumagana? C-Trader account. Wala kasi akong C-Trader Testing ko nga. Saglit. Set up natin tong ano. Pag ito napagana ko, baka lumipat na ako dito. Applications. Teka lang wala pa, di pa ata gagana yan quiz kasi hindi ko pa siya na-add sa ano, database. Get application. Tradex. Anong yun, quiz? Napagana mo na? Kala ko napagana mo na. Hindi kasi hindi ko maayos yung MT5 eh. Okay. Hindi ko maayos yung MT5 kaya di pa tayo sa ano. Di pa tayo sa gumagana. Okay, ito yun. Add lang natin si C-Trader. Teka. Hirap mag-setup na ito. Okay, testing. Quiz, pa-test nung pa-test nung C-Trader. Kung gumagana na siya. Alam, baka di pa pala gumagana, quiz. May ano pa eh. May nag-update pa siya. Error. Anong, pwede mo ba i-screenshot yung error quiz? Ano lumalabas? Error. Anong, pwede mo ba i-screenshot yung error quiz? Ano lumalabas? Error. Anong, pwede mo ba i-screenshot yung error quiz? Ano lumalabas? Error. Anong, pwede mo ba i-screenshot yung error quiz? Ano lumalabas? Error. Anong, pwede mo ba i-screenshot yung error quiz? Ano lumalabas? Error. Anong, pwede mo ba i-screenshot yung error quiz? Ano lumalabas? Try kong testingin. Hindi ko magana. Teka lang ah. Wait lang. Testingin natin. Si trader. Si trader account. Dito. 5821. Okay. Nare-redirect ka niya. Mali naman to.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash, brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. It's a broad market sell-off. The major average is down close to 1% or more, and technology shares right now, they're taking the brunt of the selling today. The concerns have grown that the effective closure of the Strait of Hormuz is going to deepen the energy disruptions, push oil higher, and fuel more inflation. Those inflation worries have yields higher, and that's primarily the big driver today. 10-year, which is the benchmark, up 9 basis points higher. The yield up to 4.57. Let's call it 4.58. The long bond is at 5.11, the yield right now. Ford's blistering rally, that has come to a and reporting after the close of regular trading on Wednesday of next week. Right now, those shares down 3.3%. And after its initial public offering yesterday, and the big pop it got yesterday, Cerebras shares, they are down right now 2%, still $304.89 a share. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Munis in Focus is brought to you by BAM Mutual. Put America.
Guys, hear that?
Was on my grind cause times was harder than the cellar float. My mama told me never steal and never telling folks. I grew up looking up the niggas that was selling coke. Oh, I was raised by the stop sign. No religion, I was getting saved by the Glock 9. By the minute I was getting paid like the hotline. Certain rolling, fiends was calling. We was that kind, well connected, well respected and well protected. And get accepted, was rejected, now they regret it. And get my
campus in Ohio. Talk to us about that.
Yeah, so about around 2008, Bank of America invested in an Ohio college, and it bought bonds directly from a private liberal arts school called Notre Dame College, not to be confused with the other Notre Dame that everyone is familiar with, but this is a small Catholic institution that ended up closing in 2024. Last year, B of A filed a lawsuit seeking to sell the school's campus after its closure. And last week, we got some insight into what that campus is worth. A buyer offered $8 million for it, but B of A's outstanding investment in the school is more like $18 million. So it looks like they are not going to recover the full value of that investment a long time ago.
And it looks like Bank of America is the sole debt holder of this college's debt as well. Amanda, what's interesting, of course, is the reason why this small Notre Dame college closed. And it's a familiar one for those of us following the higher education story, right? It's small, it's declining enrollment, and obviously a lot of debt. But the fact that there does not seem to be a change in the fortunes of more students applying to the school is really not just something that's affecting this particular college, but a lot of colleges across the U.S.
Exactly. This is a major theme that our team here is covering. Is just these enrollment challenges that all sorts of institutions are facing. They all have different profiles. Some of them are religious institutions. Some of them are arts focused. Some of them are just plain old liberal arts schools. And all of them are just contending with fewer 18-year-olds, fewer high school graduates, and more students that are questioning why they would pay high tuition prices when the job market is changing and maybe they could go into a trade and it'll be easier to get a job. There's a lot of different factors that are kind of working against these institutions.
You know, one of the factors is, which is different from my generation, kids today, and including my kids, they're going, like in here in the greater Northeast, they're going down to University of South Carolina, University of Alabama.
These are public schools that cost a lot less, too.
Yeah, but I mean, they're all going to these big Pac-10 schools, but all these SEC schools. And I think that's hurting some of these Northeastern liberal arts colleges that had historically drawn those kids. Another story you guys are working on, and this is kind of in the metro New York area, Northeastern University, which is based in Boston, taking over Marymount Manhattan College. This turned into a pretty good deal for Northeastern. Tell us what happened.
Yeah, Northeastern is one of those institutions that's thriving right now. The large colleges are doing pretty well, and Northeastern in general is a major success story. They've been expanding across the US and into Canada, and they have been actually buying other colleges as part of their strategy. One of the schools that they bought, or they announced that they would merge with, is Marymount University in Manhattan. That was 2 years ago, so that deal is supposed to close soon. But as part of that, they are expected to add over $200 million in assets. Most of that is from real estate in New York, given that the college had a lot of, or had some student housing space that Northeastern really needs as it grows its enrollment. And so this deal has kind of been a no-brainer for Northeastern. We also saw them buy Mills College in California, which was also another deal that added a bunch of assets for Northeastern. Another stat that I would highlight on Northeastern is that they saw about 106,000 applications for the fall. That's not quite at NYU's level, but they're getting pretty close to NYU.
Well, they're based in Boston, and their model of having kids complete these co-ops during the school year really resonates with what people are looking for from a college education these days.
Like when I was growing up, Northeastern, I knew about it.
It was a commuter school.
Yeah, but now it has morphed itself into this major institution.
Yeah, definitely. And by buying these schools, Mills College in Oakland and now Marymount Manhattan, Northeastern needs to borrow, right, Amanda? I mean, it's set to borrow a lot of money.
Yeah, and these this upcoming borrowing that Northeastern is doing is actually just related to typical campus projects. They're overhauling their arena. I think they have some Boston projects. And so they've really been able to manage this expansion in a way that hasn't, hurt its credit rating. They've really only seen all of the metrics that investors look at. They've only seen improvements in revenue and fundraising. So they've really managed their expansion very well. A lot of credit, of course, goes to their president, who has really kind of been the brains behind this. We had a 2024 story looking at we called them M&AU, looking at how smart this strategy was for Northeastern, and we continue to see that pay off.
And of course, he's been very, very smart about how to make sure that Northeastern ranks higher and higher on all the different metrics that they use for the best colleges and universities in the U.S.
I mean, they acquired real estate. The acquired real estate includes 4 buildings totaling 285,000 square feet on East 71st Street. That's valuable, I would think.
Absolutely.
I know some that area. Also, a 55th Street residence hall with 32 floors of student housing. So some prime Midtown Manhattan real estate. I think that's a good thing. Amanda, thanks so much for joining us. Really appreciate it. Amanda Albright, municipal finance reporter for Bloomberg News. I'm going to talk about the new issue market because we had a big IPO this week. Cerebras, I think, is kind of how we figured out how to pronounce it.
We've said it every which way at this point.
Bailey's advice to me yesterday, I went up, he was on TV afterwards, and I said, how do you pronounce this? Because I got to do the story. He goes, just pronounce it both ways. That way they can't accuse you.
You say it correctly. As long as you say it correctly one time, that counts. That's what I believe.
Okay, Cerebras. Anyway, they went public yesterday. $185 was the IPO price. It traded up to like over $300 bucks. Just extraordinary. Trading off 1 or 2% here this morning. Bailey Lipschitz, he joins us here. He covers all this IPO stuff and all the equity markets. So, Bailey, if you're looking to go public, this was a good first one to come out the door. I mean, if you're thinking about SpaceX and Anthropic and all those other ones.
Yeah, it really does kind of serve as a quite large appetizer, if you will, in terms of just the sheer size of it. Again, north of $5.5 billion. I don't know if we've confirmed that they've exercised the green shoe. You have to imagine that happened almost instantaneously. So this would be the largest chip IPO of all time here in the U.S. And the big focus is, again, in a few weeks, what happens with SpaceX looking to raise $75 billion and how the market can digest that capital, and just thinking through how that does set the table for an Anthropic and OpenAI potentially later this year. Just given that across those 3 deals, it's pretty much an entire record year of IPO proceeds.
Yeah.
And there was a lot of drama surrounding this IPO because we had reporting that showed ARM Holdings and SoftBank, which owns ARM, the majority owner, wanted to buy this company a couple of weeks before the IPO.
Yeah, it's kind of unsurprising. For all intents and purposes, the interesting thing from that reporting from Ed Ludlow and team is kind of the question around the cash and stock component. And when you think about the fact that right now, Cerebras, however you want to pronounce it, is about $65 billion in market cap. Yes, ARM is $225 billion, but there is an interesting kind of financial gymnastics that would have had to be kind of accomplished to complete that deal. And the question then going forward is just how large would the company be?
I mean, the selling point Cerebras has, or Cerebras.
Cerebras.
Okay, let's just sit on Cerebras. The benefit it has is that it's an AI chip maker, and that hits on so many different things right now. Is it a competitor to NVIDIA?
Yeah, that's how they're billing themselves. And
but is it actually?
Yes, in the future, potentially. I mean, it goes back to what is a TPU and how does the market kind of evolve over time? And the big debate when you talk to folks on the buy side, whether they were interested or not in Cerebras in 2026 or even back in 2024 when they wanted to go public the first time was, okay, how large can this company be if we say NVIDIA is worth $6 trillion? Is there a path to $100 billion? Is there a path to $200 billion? And just using essentially basic math is if there is going to be a real competitor for NVIDIA and it is Cerebras, then the valuation can make sense. Again, based on the trailing data, based on what they've actually attained for now, it is one of the most expensive, if not the most expensive.
That's kind of where I wanted to go. I mean, we got a $65 billion market cap, trailing revenue, $500 million.
Yeah.
So, I mean, what are we doing here? Was there any pushback on valuation? I'll answer that. No.
So we saw them launch initially with a range of like 115 to 125 bucks, as you mentioned. It prices at 185. According to the people around the deal, they had $10 billion of demand before it formally launched, which is not something you see. The vision going forward, though, is OpenAI is now a customer. They are diversifying away from G42, which was kind of one of the bear cases a few years ago for the company. So if you're buying into the idea that these hyperscalers are going to spend, then investing in the companies that are actually producing the products that they're selling at least has the upside, because they're not going to bear the cost if we are over-indexing and overbuilding like many people are fearing.
Is there a cornerstone investor in Cerebras?
No, not that I.
In my day, we didn't do cornerstone investors. We just
that's a thing in the 2020s.
Yeah, we worked for a living. Real quick, SpaceX, is that a June thing potentially?
Yeah, we expect the formal filing to go public next week. That would set the table.
Gonna be nice.
That's going to be a lot of fun for us. I will be on vacation starting Wednesday, so I'm getting out of the country. But yeah, so expecting that formal flip next week. That'll set the stage for a listing likely before Juneteenth.
And then 15 days after that, perhaps an entry into the NASDAQ 100 and the Qs.
Oh, I see what you're saying there.
Yeah,
okay, that's
passive investors need to buy in.
I mean, talk about interesting. It's going to be fascinating to watch, I don't know, a double or triple levered SpaceX ETF, day 3.
There's already filings for all these ETFs for companies that haven't even gone public yet.
There's a levered Cerebras ETF, and it's T
a
plus
levered
6
OpenAI
hours.
ETF.
Bailey, great stuff. As always, Bailey Lipschulte covers all the equity markets, the new issues, any of the crazy stuff out there. He is our person to go to. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're brought to you by Chapter. The average couple spends over $300,000 on healthcare and retirement. Want to know how much of that you could keep? Find out today in under 20 minutes with one free call to Chapter. Go to askchapter.org to get started. Well, happy Friday. This is actually the ugliest open for the S&P 500 since back in early April. Tech and materials leading the declines right now amid renewed concerns about rising energy prices and how that's going to push up the rate of inflation. And that is also reflected in rising yields. This was actually worth a red headline across the Bloomberg just a couple of minutes ago. The 10-year yield, 10 basis points higher. We are up to 458 on the benchmark. I know you're trying to refinance, but ain't going to happen.
Nope.
Let's note that tech stocks, they often falter in the run-up to NVIDIA's earnings, and a few days afterwards, we're going to get those results from the tech giant Wednesday after the close of regular trading. Tech bull Dan Ives at Wedbush Securities is pushing back. I know this is shocking. Pushing back against the idea this is a frothy market.
I mean, this is an AI revolution. And when it comes to the chip trade, that's going to continue to move higher because demand to supply, and we've talked about from NVIDIA, 10 to 1. And that ripple effect is across the board from inference to infrastructure. And that's what investors are focused on around the world.
And he was speaking at a tech conference in Poland, Dan. S&P 500, 70 points lower, down 0.9%. Dow is down 1%, down 481 points. The Nasdaq Composite Index down 310 points. That's a decline of 1.2%. You better learn to use AI in your job because you're being watched. United Health tracking how often some employees use artificial intelligence tools. The company monitoring whether some workers in the Optum Services division perform at least one query a day with programs such as ChatGPT. And AI has become kind of central to United Health's plan to rebuild confidence on Wall Street after the profits collapsed last year. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube and at Bloomberg.com as well. We're talking about Mr. Ackman, Bill Ackman. He's out with some more social media posts on X. We sold Google and bought Microsoft. So there you go. From Bill Ackman. Let's look at these markets as John was just reporting, selling off on the equity markets. We've got yields surging higher, energy grudgingly moving higher yet again. Not bueno for some of the risk assets out there. Let's check in with a professional here. Dana Dioria, Co-Chief Investment Officer at InvestNet Solutions, joining us up there from Hartford, Connecticut via Zoom. Dana, you see a day like today, but put it in context, these markets have just been ripping higher here. What are the conversations you're having with your clients these days?
Yeah, so it's interesting because it certainly is a lot of back and forth, right? I think clients are, and we cater to advisors, and advisors then, kind of working directly with end investors. And, there's obviously a concern around, does this at some point, this exuberance kind of die off, right? And what's the thing that what's the catalyst that can kind of drive that? And it certainly hasn't seemed to be geopolitical risk, right? I mean, we just, consistently the market has shown that it's willing to look through the geopolitical risk. We have no end in sight to the blockage in the Strait of Hormuz. And, you have any number of experts who will tell you that we're going to have lagged effects from this. And yet, we hadn't seen a lot of concern. Of course, now you have, bond yields are starting to step in. And I think, most people in the industry know that when the bond market is upset, there's, you potentially have a problem. 4.5 is typically a level that you would be worried that, you're starting to have impacts on the equity market, and we're there.
We are there. In fact, we got to 4.58%, and we're at session highs at the moment. The 30-year yield is now at 5.12% as well. Talk us through what happens now that we are at that level, and if we stay at these levels, what kind of allocations changes to allocations are investors likely to make or thinking of making?
Yeah, what happens when, you start to, you swing from this FOMO, right? And get it in, and oh my goodness, it doesn't seem to matter all these warning signs that, we perceive. Inflation is obviously, heating back up and et cetera. But the AI trade seems to be powering everything, fantastic earnings season. So you have everybody sort of in equities, right? And kind of not wanting to miss out. And then, at some point this happens, right? And you say, okay, maybe some of this, maybe the check is going to come due. And what tends to happen is advisors start to get calls around, should I be going to cash? Should I be taking money out of the market? Should I at least be taking some risk off the table? If I'm in a 80-20 portfolio, 80 equity, 20 fixed income, should I be moving down to a 60-40? And 60-40 is, like the typical, right? If you took the average across all the allocations on the platform, you'd land somewhere maybe a little higher than a 60-40. So maybe it's a 40-60. But, advisors in this moment have to start taking these calls, and they have to try to parse out, is this just somebody trying to time the markets, but they're in the right risk tolerance for the long, how long of a horizon they have? Or is this somebody who, if I don't get them out or at least take some risk off the table, they're not going to be able to manage this volatility?
Dana, the bulls will come back and say, yeah, we know the breadth has gotten a little more narrow like it was before, and it's focusing on technology companies. But the bulls will say, yeah, but look at the earnings. That's where the earnings are. How concerned are you with the lack of breadth in this market here?
Yeah, I do think it's a problem, right? And you're talking to somebody who first principles, kind of looks across the market, looks at price, right? Tend to lean toward value investing for what that's worth. So I do think it's something of a problem. And of course, if we're higher for longer and now even the prospect of an interest rate increase is back on the table, that's obviously going to be painful to smaller companies. That's going to narrow breadth, because they're more reliant and, oftentimes have more floating rate debt. So that's not a good sign, for breadth for sure. And, look, we've been contending with this concentrated kind of top heavy market for a long time now. And, there is a storied history of this market where, trying to outsmart what the overall market cap weight is, doesn't always, oftentimes does not benefit the individual investor. So if all the, if all the assets are on these companies, you kind of have to, you can see the bull's point. But, at the end of the day, when you're investing in a retail audience who this is their retirement money, this is long-term necessary money, you want to try to diversify as much as possible. It's not because you're not here to hit out the lights, right? You're here to try to get to an end that's, reasonable and a steady state of return. And so not seeing the breadth is a concern. Yeah. And investors should try to allocate, to where they can elsewhere.
So very quickly, Dana, we have, of course, earnings as the rationale for why equities can continue to move higher, at least stay at these levels. Earnings season, for the most part, feels largely over. We've got the retailers due to report. And of course, next week, we have NVIDIA as well. This is where it gets difficult, right? Because the retailers, the consumer-facing companies, there's some pain that they're seeing from their consumers.
Yeah, I would say that I would pay close attention to, the comments around what's coming in terms of just, these supply chain effects, and are they going to be under, kind of more pressure? I think obviously these earnings seasons, it's always backward looking. So if lagged effects haven't hit yet, it's not going to show up in the earnings, right? So to the extent you're seeing some pain already that you're alluding to, that might not be the worst of it, because they might be facing cost pressures at the same time, obviously, that consumers need to pull back because energy, they're paying more at the pump, et cetera. So there could be some trouble there for sure. And I think it goes without saying, where goes NVIDIA, in large extent goes the market. So yeah. Exactly right.
All right, Dana, thanks so much. We appreciate getting a few minutes of your time. Dana Dioria, Co-Chief Investment Officer at InvestNet Solutions here. The market's off the bottoms, but let's be honest, we're selling off pretty hard here. The S&P's off about 1.1%. The Nasdaq's off about 1.4%. So some movement there. Oil up about 4% here. So you got WTI just above $105. Got Brent right around $109. So that's higher by about 4% for both of those. 10-year Treasury yields up 10 basis points, 4.58%. 4% on your 10-year. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Also streaming live at Bloomberg.com. You can go Bloomberg.com/video. That's where you'll find us here. Taking a look at Boeing right here. Boeing, as you know, the CEO of Boeing went with President Trump over to China, in large part looking for some business, presumably. And I guess President Trump put out on social media yesterday, Trump said China would buy 200, quote, big aircraft. I don't know. The stock traded off about 4% yesterday, off about 3% today, so maybe a little underwhelming. But let's check out what's going on with Boeing and China, a huge market for Boeing, of course. Sid Phillip, Deputy Team Leader for Global Aviation, joins us here. Sid, were you surprised that the stock has been trading down on news that China's going to be back buying some Boeing planes?
So on the face of it, Paul, it looks like a really good deal for Boeing, given the fact that it's a 200 plane order. At the same time, the expectations were much higher for this order from China. And so the expectation was that they would order 500 737 MAX jets, as well as a large number of wide-body jets. And unfortunately, the details still aren't clear on what the order comprises, what the aircraft types are, what the timing of it, and both Boeing and China have not really talked about what the order entails. And so the market is a little underwhelmed by the order, given the fact that the possibility was much larger.
So just give us a little history here for Boeing. How big is the China market for them, and how has that market evolved over the last year or two?
So for Boeing, China is a really important market. China is the world's second largest aviation market, and given the fact that Comac, which is the Chinese rival to both Airbus and Boeing, isn't really producing airplanes at such a large scale. So for Boeing, this is an important market and a market that hasn't really seen any order momentum in the last almost a decade since when Trump was last in China. So for Boeing, this was the moment that they would get their next big break from China. Unfortunately, that hasn't happened. I mean, Airbus in that meantime has secured over 700 plane orders. And so for Boeing, they're sort of really playing at a much smaller level in terms of the overall market in China.
But given, as I understand it, the China aviation market continues to be in serious growth mode, can Airbus fulfill that growth, support that growth, or does China at some point need Boeing?
Well, China definitely needs Boeing. I mean, the Chinese airlines that are looking to secure their next generation of aircraft or replace older aircraft with more fuel efficient ones will definitely need to order Boeing planes. And so it is something that the Chinese airlines have expressed a need for, and it is in Boeing's interest to sort of supply those aircraft. So especially at a time when jet fuel prices are rising, like fuel efficient aircraft are really valuable. And so for the 737 MAX, this is an important market both for the Chinese carriers as well as for Boeing.
So let's just say it's even at this lower than expected number of 200 aircraft. That would still be would that be the first real order from China in almost a decade?
It will be. It will be the first major order by China in almost a decade if this order materializes, even if it's just for 200 planes. And then Trump, on his way back, talked about the possibility of up to 750 planes. And so again, specifics aren't clear, and it's not really clear what the order entails because Trump said that it depends on whether Boeing is able to fulfill the 200 plane order, and then they would order another 700 up to 750 aircraft. So details are sort of murky at the moment, but it could be a sign that there may be a thaw towards ordering those Boeing planes from China.
Before, I mean, I guess without the help of the executive branch, whoever that may be in office, what can Boeing, it looks like Boeing doesn't have much influence or ability to shape the conversation with the Chinese because, again, as you mentioned, they have gone almost 10 years without a sale.
Yes, so China, especially for its state-owned airlines, tends to order planes in bulk. And so whether that's from Airbus, whether that's from Boeing, and so those big orders from the Chinese carriers depend on government-to-government relations. And Boeing has featured prominently in most of President Donald Trump's negotiations around the world. I mean, remember in Qatar where there was that massive order, the biggest order by value for Boeing planes. And again, like Boeing planes have featured prominently in trade announcements, trade deals, and for China, getting those Boeing planes is sort of valuable, and they need to get it done. So we do expect them to buy it, but timing again remains unclear.
All right. Well, if the Chinese are listening, I just flew 2 flights on a Boeing 777. That thing is a beast, man. That is huge, and it gets you where you need to go. So I'm a big Boeing fan. So hopefully they can get some of these deals done. We can get some details from some of these potential orders coming out of China resulting from this summit. Sid, thanks so much for joining us here. Sid Phillip, Deputy Team Leader for Global Aviation, Bloomberg News, joining us via Zoom there. Again, looking at Boeing stock here today, it's down about 2.8%. It was down about 4% yesterday when that news came out of the potential order of 200 planes, which, again, as Sid Phillip was just letting us know, was probably less than, or certainly less than the street had been anticipating. So, again, until maybe we get some more clarity on a potential order, a little bit of weakness there in the Boeing stock, off another 3% today. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment as this market continues to sell off. The S&P off 78 points, that's 1%. The Dow's off about 485 points, that's about 1%. And NASDAQ a little bit more, off about 360 points, that's about 1.3% sell-off here. Bonds moving higher. 10-year Treasury yield up 10 basis points. Wow, 4.58%. And WTI crude oil, it is higher. We're now north of $105 per barrel. This is Bloomberg. Good morning.
News. I'm Mike Dubusky. With that high-profile summit with Chinese President Xi Jinping now in the rearview mirror, President Trump is touting areas where the two countries agreed. ABC News Chief White House correspondent Mary Bruce.
Trump, who brought along with him over a dozen top American business leaders, also touting what he claims are, quote, fantastic trade deals, saying China will be buying American soybeans and 200 Boeing planes. But the Chinese have not confirmed these commitments.
Trump also says both sides agree that Iran should never have a nuclear weapon. As the president makes his way back to the U.S. right now, he's telling reporters on Air Force One that he didn't ask for China's help with reopening the Strait of Hormuz, but that China has an interest in getting that key waterway open.
I don't need favors. I think he will. I think automatically he'd like to see it opened up. He gets about 40% of his energy or his oil from that.
ABC News has learned the president is preparing to drop his $10 billion lawsuit against the IRS, which accused the agency of leaking his tax returns. Instead, he says he's going to create a $1.7 billion fund that would pay out taxpayer money to alleged government victims of government weaponization. ABC News national correspondent Stephen Portnoy has more from Washington.
The House Judiciary Committee's top Democrat calls the idea a giant affront to the rule of law. In a statement, Jamie Raskin of Maryland says Trump has no authority to conjure up billion-dollar compensation schemes. Sources tell ABC News the $1.7 billion fund would pay out claims to those who say they were unfairly targeted by the Biden administration, including those who were pardoned for rioting at the Capitol on January 6.
A newly unsealed criminal complaint in New York accuses an Iraqi national of firebombing a Bank of New York Mellon building in Amsterdam, all in an attempt to stop the U.S. and Israel from waging war on Iran. Prosecutors say he's aligned with the Iran Revolutionary Guard Corps. You're listening to ABC News. Cuba facing more pressure from the U.S. with CIA Director John Ratcliffe's sudden visit to Havana. ABC's Matt Rivers has more.
This surprise, unannounced trip to Cuba comes at a time of some of the worst tensions between the United States and Cuba that we have seen in generations, as a U.S. oil embargo continues to put near unprecedented strain on the island, choking off its fuel supply. Blackouts, which have long been a problem on the island, are now worse than ever. Just yesterday, half the island's power grid failing, and we know Donald Trump has threatened military action against the island for months now.
The CIA told Cubans they need to stop allowing adversaries like China and Russia unfettered access to the island. The Census Bureau's latest estimates show some of the nation's biggest cities are shrinking, while smaller ones are growing. New York City is still the biggest city in the country, but its population shrank by over 12,000 between 2024 and 2025.
Meanwhile, Charlotte, North Carolina added 21,000 people over that time. And the fastest growing city in the nation for the second year in a row.
Our small town's not so small anymore.
Michaela Everson runs a bakery in the Dallas suburb of Salina. And while constant growth has its drawbacks,
now that I have a business hat to put on, that makes me really happy.
Salina grew by nearly 25% in the Census Bureau's latest count. Jim Ryan, ABC News, Dallas.
A strike deadline is looming for the Long Island Railroad, the busiest commuter railroad in the country. The center of the dispute? Pay. I'm Mike Dubusky, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump leaves China without making a commitment on Taiwan. Welcome to the Friday edition of Balance of Power, as the summit with President Xi wraps with an unprecedented conversation about Taiwan's independence. Little, though, In terms of deliverables, and we'll get the latest from Bloomberg's Tyler Kendall, who's still in Beijing, the stock rally hits a wall today with rising interest rates and oil prices. Bank of America pointing to capitulation arriving in June. We'll get into it with Edward Harrison from the Everything Risk newsletter. And as South Carolina moves to redraw its congressional maps, we'll talk gerrymandering with our political panel. Rick Davis, Jim Kessler are with us. As for Wall Street, let's see how the markets are faring here at the lunch hour in New York. Charlie Pellet has the latest from world headquarters in New York. Hey, Charlie.
In a word, lower, Joe Matthew. The Dow, the S&P, NASDAQ all very much in the red. A sell-off in global bonds halting a rally in stocks. Concern is intensifying that central banks will be forced to tighten policy. As a result, we do have stocks selling off. S&P right now retreating back below 7,500, 74.21 where we stand right now, down 80. That is a drop of 1.1%. We've got the Dow down 525 now, all below 50,000, down by 1%. NASDAQ Composite Index down 358, drop there of 1.3%. The VIX back above 18 with a 10-year currently yielding 4.58%. The 2-year 4.07%, and look at the 30-year, 5.11% now on the 30-year. Gold down $116 the ounce, down 2.5%, 45.35 the ounce, while West Texas Intermediate crude holding above 105 a barrel, 105.52. WTI up today by 4.3%. Brent crude 109.52, barrel of Brent right now up by about 3.6%. After earnings, we do have Applied Materials shares right now trading lower, down now by just about 0.6%. And Bill Ackman says Pershing Square has built a new stake in Microsoft, taking advantage of a decline in the company's share price to invest in a business that he says is stronger and more resilient than investors think. At the PGA Championship right now, topping the leaderboard, we've got Alex Smaller with right now 1 under par. So again, recapping here, S&P 500 index down 82. That is a drop right now of just about 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, the voice of Friday for us today. Thank you, Charlie. He'll have more coming up in about 15 minutes. Here on Balance of Power. Yeah, you made it to Friday. Welcome to the threshold of the weekend, and thank you for meeting us here on Bloomberg Radio. If you want to see what we're talking about, get on YouTube. Watch the radio on TV by searching Bloomberg Business News Live. If you've got your Sirius XM, it's channel 121. Now that Charlie has told us how not good the markets look today, Bill Ackman's buying Microsoft? Has he talked to Donald Trump about this? We'll get into it later on this hour, but new disclosures about the president's own stock trading. He sold Microsoft, and based on the action that we've seen in that stock, well, I guess that was a pretty good move because this was back in February. Sold between $5 million and $25 million each of Microsoft and Amazon. That latter one he might have regretted. And he piled into NVIDIA February 10, days before the company announced a multi-year partnership with Meta, his disclosures show. The fact of the matter is, though, you remember the old saying, sell in May and go away. And that might, in fact, be the refrain. According to Bank of America, a market ripe for profit-taking in early June, says Michael Hartnett. We'll get into this a little bit later this hour with Edward Harrison. Growing price pressures having a broad impact in the U.S. from energy to transportation to rents that will eventually cause this rally to come to an end. And maybe today is the beginning of that. It's going to take us a little while before we know. As we try to read the tea leaves here and figure out exactly what happened in China, the president's in the air right now, wrapping up the big summit with President Xi, a 2-day affair. They're both declaring success for what it's worth. Progress and stabilizing our not always great relationship. They had tea at lunch. Do you think Donald Trump has a lot of tea? Was there a Diet Coke button in Beijing? Top aides, translators, all in the room. Very formal, above-board affair. Nearly 3 hours of talks before they wrapped up the 3-day trip to China. An incredible visit, said the president. When he spoke about this later on, he put a good shine on what was accomplished. Here's President Trump from earlier.
This has been an incredible visit. I think a lot of good has come of it. We've made some fantastic trade deals, great for both countries.
President Xi's an incredible guy. got along, made a lot of great trade deals, including over 200 planes for Boeing with a promise of 750 planes. We need to discuss tariffs. I mean, they're paying tariffs. They're paying substantial tariffs.
No, Boeing shares are lower again today, and well, so are shares of GE Aerospace, because that Boeing deal left everybody wanting more. We talked about it at this time yesterday. 200, they wanted 500 in the market. President says if it goes well, maybe 700. The market's not waiting around to find out. After that, well, we're not too sure what we have to show for this meeting other than a warning from about Taiwan from China. We told you about the warning yesterday in their first meeting, and apparently when they sat down over tea, President Xi asked Trump directly if he would defend Taiwan if the mainland were to invade. Trump telling reporters on the plane he didn't answer. The pretty remarkable moment, historic moment. What it will lead to, we don't know. And that's why Tyler Kendall flew all the way around the world to Beijing to cover this historic summit, for better or worse. And she's with us right now, picking up the pieces now that the administration has left. Tyler, you've been great keeping us posted here. Is there anything new that I'm missing?
Well, Joe, no, I think you did a great job setting this up. And I know you said earlier in the week that we weren't going to use the phrase pomp and circumstance, but there was a lot of pomp and circumstance and more symbolic gestures. But there wasn't really a lot of deliverables in terms of what came out of this meeting. Now, some analysts have said that's not necessarily a bad thing, though, right? A lot of this was about maintaining the stability in the U.S.-China relationship, which, as you alluded to, hasn't always been stable. Just look at where we were about a year ago amid the height of the trade war between the two countries. Instead, this visit very much felt like laying the groundwork for progress down the line, right? Both sides have confirmed that they have agreed to establish a U.S.-China Board of Trade, a U.S.-China Board of Investment. That doesn't mean that that mechanism is established yet, but they are going to get that going. They both said, actually including Chinese state media reporting, that they did address concerns on agricultural products, something that we've been waiting for. The USTR Jamison Greer telling Bloomberg Television earlier today that the U.S. is expecting billions of dollars worth of agricultural purchase commitments, but we haven't gotten those details yet. So this felt a lot like keeping tensions calm, though, of course, you did mention Taiwan, which we could talk about. But broadly speaking, it was a relatively cordial summit here in Beijing. Mm-hmm.
Let's talk about Taiwan then. The president said he made no commitment over Taiwan. He wouldn't answer him directly when he asked if the U.S. would come to Taiwan's defense. But he also said that he would soon make a decision over this planned $14 billion arms sale to Taiwan. That's significant, Tyler, that he would not confirm that sale, is it not?
It is, considering that we know that Congress is already broadly in support of it. We won't get into the wonkiness of how this would actually work, but Congress has essentially greenlit this package, and they're waiting for the president to authorize and send it over to them so that it can go through the appropriations process. With that said, U.S. officials have been very careful and clear that the U.S. position regarding Taiwan's independence has not changed. But, Joe, I will point you to a nugget in the analysis by our analysts at Bloomberg Economics that say that when it comes to China's leverage going into this meeting, if they want to extract change regarding U.S. weapon sales to Taiwan, we should look at how they are using export controls, and that our analysts think that maybe there could be a threat related to the licenses around critical minerals and magnets that could apply pressure to the U.S. With this said, though, we should make clear the administration says that there has been no decision on this. President Trump has said that he hasn't decided yet. So there may not be a change when it comes to this, but it's definitely something to watch because it would upend what has been decades of diplomatic practice when it comes to the U.S. making sure that Taiwan is supported, including through weapon sales appropriated by the U.S. Congress.
Well, let's hear the president's framing of this. Tyler, as you know, he went to the back of the jet, went to back of Air Force One to talk to reporters in what was at times a very contentious conversation. Here he is on China and Taiwan.
He doesn't want to see a movement for independence. He says, look, we've had it for thousands of years, and then at a certain period of time, time it left, that we were going to get it back. They had the Korean War. A lot of things happened. We have all this. But on Taiwan, he feels very strongly. I made no commitment either way.
I made no commitment either way. It's really interesting, Tyler. Great piece by our colleagues Jeff Mason and Skylar Woodhouse on winners and losers from the summit talks. Winners, they write Xi Jinping, Jensen Huang, even though he didn't get a big deal that we're aware of. Visa, Iran, a big winner. The losers, number one on the list is Taiwan, followed by Boeing and others, including congressional Republicans. This is going to be a big debate when you get home, Tyler, about what to do with these weapons shipments, no?
No, definitely. And Joe, we should also highlight the fact that any sort of delay, including the delay that we're already seeing, considering this package was queued up back in January, just adds to what is a conversation that we often have about the lengthy procurement process, when it comes to actually making and shipping weapons out the door. And that perhaps will also add to some of the tensions here. I'll put a little bit of finer point on President Trump's point here, because he also spoke to Fox News before he had departed, and he was pushed on what he is looking for in terms of to give that approval for this weapons package. And his response was, I may do it, I may not do it. And then he was pushed and he said, but what's your hinge point? He said, well, I'm not going to say that. I may do it, I may not do it, but we're not looking to have wars. And if you keep it the way it is, I think China is going to be okay with that. President Trump went on to say that he wants to see both sides cool down the tensions, but it is hard to see how the tensions will cool down, where, as you're highlighting, there is going to be this focus on Capitol Hill when it comes to the future of weapons procurement packages to be sent over to Taiwan.
Wow. What an exercise. Tyler, thank you so much. She'll be back in our second hour here on Balance of Power before we finally let her come back to the United States of America. Bloomberg's Washington correspondent in Beijing. Hey, at least maybe a movie will come out of this. You see Variety reporting that Brett Ratner was on the trip. The man behind Rush Hour, said to be the president's favorite movie franchise. Was Chris Tucker on the plane? Jackie Chan? Yeah, Brett Ratner was there, according to the South China Morning Post, on hand to scout locations and prepare for production of Rush Hour 4, which the president personally requested the studio make. This is the same man, of course, behind the Melania documentary. Commander-in-Chief reportedly requesting that Paramount revive the Buddy Cop series. We'll have more on this for you as we learn it here at Bloomberg. I'm Joe Matthew in Washington. Edward Harrison in next. Balance.
It's 12:20 on Wall Street. We do check markets all day long here at Bloomberg. We've got a sell-off underway on this Friday with the Dow, the S&P, NASDAQ. They're all very much in the red right now. S&P 500 index on the week, however, looking at another week of gains. For the week right now, looking at an advance of 0.4%. But today we are selling off with the S&P down 1% right now. We've got the S&P pulling back from a record, back below 7,500, down 74 points right now. A sell-off in global bonds, halting a rally in stocks. Our Ed Harrison will have a whole lot more coming up in just a moment. The Dow down 476, lower by 1%. NASDAQ retreating from a record as well, down by 1.3%. The NASDAQ 100 index also down by 1.3%. The 10-year currently yielding 4.58%, with a 2-year 4.07%, and the 30-year 5.11%. Bottom line here, equities selling off again, bears repeating, the S&P down now by 1%. Spot gold down $114 the ounce to $45.38, down 2.5%. West Texas Intermediate crude is surging 3.9%. WTI back above $105 a barrel. Brent 109.25, up by 3.4%. Job cuts at Starbucks. The coffee chain is cutting an additional 300 corporate jobs, its latest move to hit cost reduction targets. Starbucks shares, they're up by 0.4%. And Papa John's International shares are now up by 5.1%. Reuters is reporting that the investment firm Earth Capital is working with the pizza chain's largest U.S. franchisee, who controls around 10% of its domestic restaurants, to take the company private. Again, shares of Papa John's, PZZA on the ticker, up now by 5%. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Charlie Pellet's always making us hungry here at the lunch hour on Bloomberg Radio. PZZA has to be one of the best ticker symbols on Wall Street, right? Charlie, thank you. He'll be back with more on the markets in just about 20 minutes' time here on Balance of Power, as we keep our eyes on the president's own trades. Seems to be doing a lot of trading at the White House, as we learn in these new disclosures to the Office of Government Ethics. And those disclosures once again came late and will result in a fine for Donald Trump. I think he'll be able to afford the $200 fine. Although the president is required to publicly disclose stock transactions exceeding $1,000 within 45 days. He was fined for the same infraction in March and in August, and now again, as we learn that he sold between $5 and $25 million each in Microsoft and Amazon stock back in February. And he was doing a lot of buying at the time. With those proceeds, presumably, he also purchased NVIDIA stock February 10, just days before the company announced a multi-year partnership with Meta. Company shares up 2.5% after the deal. He also purchased shares of Microsoft and Amazon months before the Pentagon announced deals to deploy their technology in classified computer networks. It's just interesting, as we talk so much about Nancy Pelosi. She's got an ETF, right? The Nance ETF. You want to get rich? Follow Nance. Well, maybe we should follow Donald Trump, although I think some people already are. We won't get into crypto here with Edward because we have too much to talk about. You heard Charlie mention the interest rates. And that really does seem to be the story today. The bond market driving stocks lower, because God knows we've seen higher oil prices than this, and we still ended up at record highs. Has anyone told Pam Bondi we're not at Dow 50,000 anymore? Crude oil in New York right now, just if you're keeping score, $105 a barrel. Brent's at 109. They're both up more than 3.5%. But the conversation today is about interest rates. And if you read the Everything Risk newsletter, you probably saw this coming. The man behind it, Bloomberg's Ed Harrison, senior strategist. Great to see you, sir. Welcome back. Walking through this market is a bit of a minefield today. When you see 2-year treasuries above 4% and the 10-year above 4.5%, what does it tell you?
It tells me people are coming back to reality that in an economy where you have large deficits, you have an AI boom, and you don't have a whole lot of layoffs, that there's enough growth that inflation becomes the prevailing risk for the Fed. In fact, if you look at the markets, they're actually pricing in a hike next year.
Yes.
Kevin Warr says he wants to cut,
right,
but the markets are saying that there is a chance that, they've fully priced
more likely than
25 basis points next year.
You buy that, though, or is this the market
I didn't
being a
buy
little
it
weird.
before the earnings and before, like we saw the capital production today, which was off the charts high. I think that the U.S. economy is doing so well as a result of those two factors, that is government largesse and AI, that it's very difficult to puncture that. And in that case, the Fed will have an inflation problem, and they may have to hike.
So sell in May and go away was the old refrain. I don't think any of this stuff matters anymore, right? Because it's such a different market now. But it might end up being a strategy that works this time. Did you see Bank of America this morning? Market ripe for profit taking in early June. Michael Hartnett is out with the note here. Really interesting. A series of key dates next month, he says, have the potential to spur caution in equity markets. You've got the next OPEC gathering, start of the World Cup, G7 summit, first Fed meeting under Kevin Warsh. I don't know if you agree with that idea here, but are we going to see Warsh dissenting in his first meeting as chair?
I don't think he will dissent in the way that Stephen Myron was dissenting. I think that he will take a more measured approach. His real question is if the economy still holds and therefore the market is still pricing in these rate hikes, how does he shift the balance towards a more sort of neutral perspective? The real question now for interest rates is we've already seen real rates go up a decent amount.
Yeah, right.
Inflation expectations haven't gone up that much yet. If the Fed continues to say, you know what, we may cut, markets will think that's bad for inflation, and inflation expectations will go up as a result of that.
Right.
So we'll have the opposite effect of what they wanted to have, and that could send 10-year yields up to as high as 5%.
5%. And now we've got a real alternative to stocks, as we've seen repeatedly when that happens. And that's your sell-off in June that you just laid out the ingredients for here, right? So when you look at these markets at all-time highs, considering the fundamentals out there, yes, earnings are really strong, but the headline risk is so high right now with China, with Iran. Would you plow new money into this market?
If you haven't been plowing money in, you've been losing out. I mean, if you think of it from a money manager's perspective, and why the market is going up, having to chase the winners because they weren't fully invested. It's a very difficult market, especially given the differential in the price-earnings ratios of, say, the Mag 7 companies, which is something like 35 times, and the rest of the market, which is 25 times. It's very difficult when they're doing incredibly well to not just chase that.
Otherwise, you're missing out, to your point. But if you look at a price-to-earnings ratio on a stock like Micron Technology, like these memory stocks have just been straight up like a rocket ship. When you look at the chart, you say, oh my God, I wouldn't go near this thing. But Micron's getting cheaper as it goes higher because it's experiencing a massive earnings boom thanks to a shortage in memory. So when you think about everything risk, do you go to the technicals or the fundamentals on something like that?
Ultimately, the market doesn't really fall out of bed until you have a significant economic slowdown.
Okay.
And these stocks are the ultimate cyclical stocks. I mean, if you look at what happened during the internet bubble, it was just a disaster for the semiconductors. Again, same thing in 2008. Complete disaster. And because a lot of their earnings profiles back at the back-loaded part, because their growth is so high, if you take, 50, 100% growth and you turn that into a flat or even declining number, that has a huge impact on the valuation of that company. So you can lose 50% or more as a result of that.
Wow. And it can happen fast, Edward. Were you a Dow theory guy in the olden days? I don't know if you're a Dow theory guy, but if you look at the transports, right, they're supposed to lead the way. This is not good. J.B. Hunt, the rest of them are paying over $6 a gallon for diesel. Is that an indicator in itself?
It's an indicator that the stresses are building. I would have expected by the end of this month that we would start to see earnings misses, or not earnings misses, but earnings projections that are going down. We may not see that, and if we don't, it's just another sign of the resilience. But the longer the Strait of Hormuz, and it's incredible, no one's talking about that, remains closed, the more these oil prices will go higher. Eventually that will catch up to the U.S. economy, irrespective of AI, irrespective of the deficit spend.
Well, after, I guess, arguably a parabolic first half, and I know that there have been sectors not included, in real estate among them, could we be in for a terribly volatile second half because of all of this? Is that your expectation?
As long as the Strait of Hormuz remains closed, the volatility will increase because that's a situation that needs to be resolved in order for these stocks to go higher on a sustainable basis.
Sure.
It can't remain closed because if it does, $100, 105, and 109 that you mentioned today will become 130, 150, and at some point that's going to be demand destructive, and that's where we see all the things that we're talking about in terms of the numbers starting to fall apart, and of course, obviously, yields will be going higher at that point.
Imagine being somebody who bought NVIDIA 2 days ago. All-time high, $235. We're going to the moon, baby. And then it goes straight lower for 2 days. We're down at 228 now, down 3%. And it's ahead of earnings. NVIDIA earnings are next Wednesday. With your everything risk hat on, do you go near a stock that's hitting an all-time high less than a week before an earnings report?
Yeah, I wouldn't necessarily add to it, but I wouldn't go away from it.
Fine, but some people bought it this week, Edward.
Well, let me give you an example. During the internet bubble, a friend of mine, he was very negative on on stocks like Juniper Networks and Cisco. So he had some shorts on Juniper. The earnings came out. This was after. This was probably in November of 2000. They beat, the stock went up, he had to cover it. And
awful.
These stocks, the volatility is going to be very high. You really don't want to be trading on the negative side because you could miss, and especially because the stock's been coming off into the earnings. That gives it even more upside momentum potentially if it does pop.
We've got 1 minute left. Earnings season's wrapping up. If NVIDIA's reporting, we're at the tail end of this thing. What's the next catalyst? Does it just come down to what happens in the Strait?
I think the next catalyst, besides the Strait of Hormuz, is IPOs.
Okay.
On Wednesday,
you're going to freak everyone out now.
We had the first AI IPO.
Cerebras blew the doors off.
So
is there more? Only 30 seconds. Is there enough money in this market to get SpaceX, Anthropic, and OpenAI off the launch pad?
Yes.
Without blowing a hole in NVIDIA and Tesla?
It all depends on the float, because we know that when these floats are very small, there's going to be a frenzy of people looking to get into those stocks, and that will automatically bid them up and cause other stocks to come onto the market.
But they're going to pull it all out of Tesla and NVIDIA, right? This is the problem. Edward, come back when that happens. Well, hopefully sooner. Love talking to Edward Harrison. The Everything Risk newsletter is available on the terminal and online, and it feeds our conversations right here on Bloomberg Radio. I'm Joe Matthew in Washington. We'll assemble our political panel next. Live from the nation's capital, this is Balance of Power, only on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are selling off. The Dow, the S&P, NASDAQ, all very much in the red. The catalyst, a sell-off in global bonds, halting a rally in stocks. Concern is intensifying that central banks will be forced to tighten policy to keep inflation in check. Right now, the S&P is retreating from yesterday's record, back below 7,500, 74.32 right now, down by about 0.9%. Dow Industrials down 430, lower by 0.9%. The NASDAQ Composite Index down 312. For NASDAQ, a drop there of 1.2%. The VIX just above 18 right now with a 10-year. The 10-year, 4.58%. The 2-year, 4.08%, and the 30-year, 5.11%. Gold is down $106 the ounce, down 2.3%. Spot gold at $45.46 the ounce, while West Texas Intermediate crude just above $105 a barrel, up now by 3.8%. Bitcoin back below 80,000, 79,278 on Bitcoin, down now by just about 2.6%. So again, the Dow, the S&P, NASDAQ, all declining, with a 10-year currently yielding 4.58%. Round 2 of the PGA Championship underway in Newtown in Pennsylvania. At last check, Hideki Matsuyama of the U.S. of Japan sits atop the leaderboard right now at just about at 3 under par. And for our listeners in New York, Boston, and Washington, D.C., yes, we'll bring you live play-by-play coverage of the PGA Championship starting right here after the closing bell on Bloomberg Radio. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, many thanks. Happy Friday to you, my friend. He'll be back at the top of the hour, 1 p.m. Eastern Time, as we welcome our global television audience to the program. And Kaylee Lines, for that matter. She'll be with us coming up at 1 p.m. Eastern as well. Producer James has said it more than once. It's going to take years of therapy to unpack all of this. And he's apparently not alone. You fight about politics with the family, with your brothers, sisters, your parents. Do you avoid certain people so you don't have to get into it? You dread the holidays because you know how the conversation's going to end. You are not alone, as it turns out. Great story in Politico magazine that made me think of our panel today. With anxiety over politics reaching new heights and crises flashing across our screens, mental health professionals say they are seeing an influx of patients distraught about the news coming out of Washington. It's pretty wild. Veronica Calkins, a clinical director at Pacific Mind Health, says it's the first time we're actually seeing people initiate therapy because of political anxiety. It started after the president's second inauguration. And there's polling that might make some of this feel justified. 65% of Americans, you know, we always talk about what issue they favor. Check this out. 65% of Americans say politics is a significant source of stress in their lives. This is the American Psychological Association doing polling on politics. More interesting than that, the leading cause of stress, concern about the future of our nation, 76%, outranking the economy or work or money. Maybe we're getting to something. This is why we have a panel every day. It's somewhat therapeutic for me, and we should bring them in now. Bloomberg Politics contributor Rick Davis, our Republican strategist and partner at Stone Court Capital, is with us. And delighted to see Jim Kessler, Democratic strategist, executive vice president for policy at Third Way. And these two guys used to work together and fought a couple of battles in the olden days, so it's always a lot of fun to put them back together here. Rick, I don't think you're the type to seek therapy. You're the guy upsetting everybody, right? You're a political strategist.
I'm afraid I may be the cause of some of that crisis in the therapy. In fact, I've avoided talking to therapists for fear that I would destroy their careers at the same time. I'm sure Jim feels the same way as I do. But yeah, I get it. Come on. It's supposed to be stressful. Politics is a blood sport. You want to get in it? You want to pay attention to it? You're going to pay a price.
Are you surprised to hear these numbers, Jim? Maybe not. 76% say their stress is about the future of the nation. What does that tell us about the environment we're in?
I wrote those numbers down as you were saying them because I'm going to use them. I think it feels accurate to me. And just quick anecdote, we have a second home in Cleveland. And when Donald Trump won his most recent, the second term, my wife said to me, "Kid, you're on your own. I'm heading out there." And we basically live in separate places and see each other maybe, 10 days out of 30 in a month, typically.
Oh my
Because she's
God.
like, "You fight them, I'm done."
Well, Jim, it's come to this. You're living the life of a lawmaker. You never thought it would happen.
Exactly.
You see your spouse 2 days out of the week. Well, this isn't what we came together to talk about, but I guess the thing that concerns me is we're just starting the midterm campaign cycle here. And it's all coming with this massive effort to redistrict the country. And I'm guessing this is adding to a lot of uncertainty and anxiety as well. Look no further than South Carolina, where the Republican governor, Henry McMaster, is expected to announce a special session today to push forward a 7-0 gerrymander to basically remove Democrats from the map. Rick, we've been going back and forth on this state by state. Will South Carolina be the next one?
Well, just to be precise, remove one Democrat from the map, Jim Clyburn, who may be one of the most powerful Democrats in Congress today. So this is a big one. And I think everyone's going to watch with bated breath. The governor, Henry McMaster, great guy, chose not to call a special session. The Senate couldn't pass a 2/3 vote to call it themselves. Now he's flipped, probably got a few calls from the White House. And and he's calling them back today. Come on back, guys. We're going to vote to do this. But I must admit, the people who don't want to do it are Republican rank and files who are sitting there saying it's going to create more vulnerability for our districts by trying to grab one Democratic district. And we'll see how the fallout occurs. This could be either a very wise decision or a very foolish one.
What's your view on South Carolina specifically, Jim Kessler? Because if you talk to the man who holds that seat, Jim Clyburn, he says, go ahead, redraw it. I'll win it anyway.
He just may. And there's a very real possibility that if they redraw the state the way the maps, the Republican maps look like, it'll go from a 6-1 state to a 5-2 state. Democrats could possibly pick up a seat. Now, that's because the environment is so bad for Republicans right now. Donald Trump is so unpopular and he's underwater on a lot of issues that even in South Carolina, at a seat that might be like a Trump plus 10 or 11, Democrats could win that seat. So I agree with Rick, like beware what you wish for because you might not get it, in this case.
Well, Rick, you mentioned blood sport, and I think more people are getting the tune here. There's a new political poll out specific to redistricting, gerrymandering. The poll shows both parties believe that it is influential or decisive and back it to counter the other party. For Democrats, 63% either support or strongly support an effort to neutralize Republican gains. Only 8% oppose it. Republicans, not quite as much, but 54% either support or strongly support an effort to match or neutralize Democratic gains in redistricting, with 10% against it. We're just going to redraw the whole country here, right? It's not just this cycle, Rick. They're going to keep redrawing maps going into 2028.
Oh, for sure. I think that Virginia's a classic example where they didn't do the process early enough to be able to make this cycle based on what the court said. But for sure, they'll do it for the next cycle. And they'll be followed by, many other states who aren't getting it done this year. Who will try to do it next cycle. And by the way, I mean, like a poll like that is just a recitation of the party's talking points. I mean, if you're listening to Republicans on Fox News, you're that 54% saying, yeah, we got to stop the Democrats. And if you're a Democrat listening on CNN, you're saying, oh my God, the Republicans are stealing the election. We got to do this. So, it's not like the people are waking up every morning worrying about redistricting. They're hearing the talking points on the networks that they watch that only give them the party, point of view, and they're now regurgitating that to any pollster who will, call them up.
Yeah, to be clear, this isn't about supporting the concept in a vacuum. This is about neutralizing what the other party is doing, to Rick's point. I want to ask you both about Texas, because the president was asked about it on the plane back home last evening. course, a massive and very important Republican primary. It's gone to a runoff there between John Cornyn and Ken Paxton, the Attorney General. Whoever wins that will go up against a Democrat by the name of James Talrico. And you've actually heard him on this program. He's become a bit of a cult hero on the left, thanks to his interviews with Joe Rogan, Bill Maher, etc. The president's obsessed with his diet. The fact that he used to be a vegan, apparently, and in Texas, that's a problem. I guess he's not a vegan anymore. I did some research on this. This goes back to a talk that he gave to the Texas Humane Legislation Network about 4 years ago, in which the seminarian said that his State House campaign was a non-meat campaign. They only purchased products from local vegan businesses. Well, but a storm was created here. So they've been trying to turn this around, because I guess he eats meat now. He went to a state fair, ate a hickory smoked Big Tex turkey leg, bacon and egg breakfast tacos. He caught fried alligator in his mouth. The president still calls him a vegan, although he doesn't say it that way. Listen.
I'm looking at it very strong. I like them both. I mean, I'll tell you what I do think. I think the Democrats have a weird candidate. 6 genders, a real hit on Jesus. I mean, this guy is bad news with his mask from relatively recently. And he's a vegan. All of a sudden, he's not a vegan. He was a vegan. Now, all of a sudden, he's not. Texas doesn't like vegans. I do believe either one of them will easily win the race.
I'm so confused. 6 genders, he said. A real hit on Jesus. This guy's bad news. He's a vegan. A vegan. The fact is, he was asked about endorsing in this race, and I guess he's not ready to. Rick, is he going to whittle this down between Cornyn and Paxton? What's going to happen in Texas?
Right now it seems satisfied to let them, ballot out and let the voters of Texas, at least the Republicans, decide who they're going to put up. And actually, this is quite unusual for him to even weigh in on this race. It's probably one of the most important Republican races in the country, and he's really kind of left it alone. So. He also then started talking about, oh, gosh, I beat all those guys in Indiana. And maybe he's going to pull a Venezuela if we're not careful about this, right? Yeah, it worked so well in Venezuela. I'm going to try it in Iran. So who knows what he's going to do? But the clock's ticking. The primary is going to occur soon, and it may not make a difference one way or another. And the last thing he wants to do is endorse someone who might lose, wrecking his perfect track record on endorsements. So that's probably what's going to drive most of the outcome here.
The comments about Talrico reminds me of when Trump was insulting Afton Bain, the candidate in Nashville, because she hated country music, apparently. Can you get elected in Texas, Jim, if you're a vegan?
The ad maker who created Where's the Beef ad passed away yesterday, so I think this is all very topical.
Fantastic.
So I just want to go, I think Talrico has a real shot. I think if Paxton's the nominee, he's got a better shot. But I also want to put this in perspective. To win in Texas, a Democrat needs to win 74% of self-identified moderate voters. That's not impossible to do. There have been Democratic candidates who have won upwards of 75% of the moderate vote, but that's what you need to do there. That is the ideological breakdown of the state is such that that is your task. And, as compared to, let's say in Maine, Graham Plattner needs to win 51% of moderates to win the state of Maine. Roy Cooper needs to win 64% of moderates to win North Carolina. So it's a tough race for any Democrat in Texas. The wind is at our back because Trump is so unpopular. Even in Texas, he's not that popular. But vegan or not vegan, that's what you have to do. And that's hard.
Yeah, fascinating. Joe Settlemeyer, the auteur behind the Where's the Beef ad, indeed has passed at 92, directed nearly 1,000 comedic commercials. This one for Wendy's, we will never forget. Well played, Jim Kessler. Rick Davis with us, too. We've got a great panel today, and they'll be back in our second hour here on Bloomberg. Where's the beef? Right here on Balance of Power. That's why you're with us. Kaylee will join shortly. We'll welcome our global television audience to the conversation and continue our view into what took place or didn't take place in China. Tyler Kendall standing by in Beijing with the deliverables. The president's on the plane home right now. I'm Joe Matthew in Washington. This is...
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump says he will soon decide on weapons for Taiwan. Welcome to the Friday edition of Balance of Power as the summit with President Xi wraps up with an unprecedented conversation about Taiwan's independence and little to show in terms of deliverables. I'm Joe Matthew alongside Kaylee Lines in Washington. Remarkable, Kaylee, that President Xi directly asked President Trump if the U.S. would come to Taiwan's defense.
Yeah, and the president said that he was uncommittal.
Yeah.
Basically didn't answer him either way. It raises the question, what was committed to over this summit? Yes, Boeing planes, perhaps a couple hundred of them going to be bought by China. They're going to open the door again to beef coming from the United States, but not necessarily as many tangible deliverables in hand as the president makes his journey back to Washington as maybe some expected or hoped for as he headed off to the summit.
And now suddenly questions about whether a multi-billion-dollar weapon shipment to Taiwan is in fact supported by the president. It certainly is by congressional leaders on Capitol Hill. And when he comes home, this may be the next conversation that we have. All the while, big questions about the impact on the economy with an ongoing closed Strait of Hormuz. Kaylee, that part hasn't changed, and the summit didn't seem to change the contours of our standoff with Iran. Oil prices are back up and interest rates are too.
Yeah, in a massive way. Huge selling pressure in the bond market today. Right now, we're up 11 basis points on the 10-year yield, just shy of 460 once again. Clearly a market that is growing increasingly concerned around persistent inflationary pressures and wondering what it's going to mean for monetary policy on what just so happens to be the very last day of Chairman Powell's term at the Federal Reserve. Of course, it's Kevin Warsh's challenge to inherit. It's a tough
Welcome to the party. By the way, does Jay Powell get a cake or something? Is there a handing of the gavel? Nothing formal on the schedule over there?
Maybe they could give him a cake in the shape of a hard hat.
That would be cool, I think.
That would be cool. We might have to arrange that. Hey, Charlie Pellet liked my joke. Charlie, let's check on the markets on this Friday. How you doing in New York?
I was thinking pretty much the same thing, but you beat me to it. Just kidding here, Kaylee. The Dow, the S&P, NASDAQ, all very much in the red right now. We got a sell-off in global bonds. That has halted a rally in stocks. Concern today intensifying that central banks will be forced to tighten policy to keep inflation in check. So here's where we stand. S&P 500 index right now lower by 71, 74.29 where we stand. That is a drop of 1%. You recall yesterday trading at a record above 7,500, a retreat today. The Dow also pulling back, was above 50K, down now by 430 points, drop there of 0.9%, while the NASDAQ Composite Index down 326, a drop there of 1.2%. We've got the 10-year currently yielding 4.59%, the 2-year 4.08%, and the 30-year 5.11%. Keep it locked into Bloomberg for the very latest on these fast-moving markets. Spot gold down 101 the ounce now to 45.30, drop there of just about 2.2%, while West Texas Intermediate crude, another concern for the market, WTI up 3.8%, 105 even a barrel right now, barrel of Brent just above 109, Brent crude up by 3.2%. Bitcoin back below 80K, Bitcoin at 79,233, Bitcoin down by 2.6%. Bill Ackman says Pershing Square has built a new stake in Microsoft, taking advantage of a decline in the company's share price to invest in a business that he says is stronger and more resilient than investors think. Microsoft shares on a down day for a lot of tech names, on a down day for much of the market. Microsoft up now by 3.7%. Briefly after earnings, we got Applied Materials down now by 0.6%. Just getting word from the Justice Department, it will seek the death penalty for Elias Rodriguez. He's accused of fatally shooting 2 Israeli embassy staff members in Washington. He will face federal hate, crime, and murder charges. Round 2 of the PGA Championship underway in Newtown in Pennsylvania. At last check, Japan's Hideki Matsuyama sits atop the leaderboard at 3 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet checking on the markets and golf for us. I wonder if President Trump has the PGA Championship on the plane television on Air Force One on his way back from China. I would imagine so. It's a long flight. You got to entertain yourself somehow. In part, the president did that by speaking to the reporters on Air Force One as he journeys back from China about the trip after we heard him speaking next to Chinese President Xi Jinping in the last day of their summit together today, where we understand much was discussed, yet not as much formally committed to. But this is how President Trump has characterized things.
This has been an incredible visit. I think a lot of good has come of it. We've made some fantastic trade deals, great for both countries.
President Xi's an incredible guy. Got along, made a lot of great trade deals, including over 200 planes for Boeing with a promise of 750 planes. We continue to discuss tariffs. I mean, they're paying tariffs. They're paying substantial tariffs.
But they, of course, did not talk about tariffs and any number of other issues, according to the Chinese. And there's a bit of a back and forth on what exactly was said because the readouts don't completely align. There was a deal, as Kaylee mentioned, to sell 200 Boeing jets. There does not seem to be a purchase requirement or guarantee, whether it's jets or beef. Also, beef imports resumed. So the news seems to be surrounding Taiwan and the conversation that these two world leaders had, which is where we start with Tyler Kendall. Bloomberg's Washington correspondent is still on the ground in Beijing, picking up the pieces after this three-day summit. Tyler, will Taiwan be the takeaway?
At this point, Joe, it definitely was the largest point of contention. And in fact, just breaking in the last few moments, we're getting a statement from Taiwan, apparently in response to President Trump being a non-committal about that $14 billion weapons package that is queued up for his approval. Taiwan's Foreign Affairs Ministry reportedly saying, in part, quote, regarding arms sales to Taiwan, this is not only a security commitment to Taiwan, but also a joint deterrent against regional threats. This definitely dominated the conversation and did threaten to derail the mood here in Beijing, which was rather cordial, if you will, considering that both sides had said that they were going to prioritize stability. And I think that's the other big takeaway from the meeting that happened here in Beijing, which is that the dialogue is going to continue. The two sides were stable enough that they're going to keep the conversation going. As Chinese state media confirmed earlier today that Chinese President Xi Jinping will accept President Trump's invitation to come to the U.S. this fall. Because beyond that, a lot of the deliverables, as you're outlining, didn't have that many firm details. Yes, we got the Boeing deal. In fact, we can confirm that Boeing officials were still here on the ground in Beijing today, meeting with top economic officials in an apparent good sign for that deal. But we didn't see many details around agricultural purchases, for one example, or energy products, as President Trump had pledged that there were conversations around these items. In fact, there had been an expectation, right, that we could even see some movement on NVIDIA's H200 chips, considering that NVIDIA CEO Jensen Huang last minute attended this summit. President Trump did say that they spoke about those chips behind closed doors, but ultimately not about whether China would be a buyer, allow companies to buy those chips, saying that instead China wants to develop them on their own. So still a lot of questions here, but it is clear that the conversation is going to continue.
All right, Bloomberg's Tyler Kendall live in Beijing for us. Great work throughout the last several days, Tyler. Thank you so much. And we want to go live to Capitol Hill next as we're preparing to be joined by Republican Congressman Vince Fong of California. And I want to begin with the issue of Taiwan. As Tyler was just talking about some of the tension that existed in the remarks around Taiwan here, let's listen to how President Trump characterized what she asked of him and what his response was earlier.
Doesn't want to see a movement for independence. He says, look, you know, we've had it for thousands of years, and then at a certain period of time it left, and we were going to get it back. They had the Korean War, a lot of things happened, and all this. But no, on Taiwan, he feels very strongly. I made no commitment either way.
On Taiwan, he feels very strongly, I made no commitment either way. And that's where we bring in now Congressman Vince Fong, as I mentioned, representing California's 20th district, the Republican joining us live here on Bloomberg TV and radio. Congressman, welcome. The president also apparently has not decided whether or not to commit to a $14 billion arms sale to Taiwan. He suggested he will be making a decision about that soon, knowing, of course, Congress has already greenlit that sale. Do you hope that he decides to move forward?
Well, this is certainly going to be a flashpoint that will continue on to the future. But yes, I mean, we need to support Taiwan. You know, you see the great powers competition that the United States is engaged with China. You know, China is trying to dominate and outcompete America in a variety of areas, whether it's AI, whether it's in technology, quantum, whether it's on space. You know, you look at biotech as well, robotics. And so, you know, we are going to have to deal with this relationship for the long term, but you know, we need to support Taiwan, and it's going to be a continuous challenge for us as a country.
Well, I'm just trying to figure out, Congressman, we appreciate your joining us here. If anything has actually changed, we've heard some tough rhetoric over the past couple of days, but should America's friends in Taiwan be more worried today than they were before this summit?
I don't think so. I mean, certainly, look, the president is going to China in a position of strength. Again, as I've said before, China, the rise of China and the great powers competition. I mean, this is going to be the issue that will dominate our relationship and the global relationships across the world when it comes to stability for the next century. And so we are going to have to confront this challenge head on. The president is certainly tackling that. He is going to China. He is confronting the president. He is going to negotiate. He is going to talk. He is going to address these issues forthrightly and bring them to the forefront. I mean, we can't hide from the fact that this is going to be an issue that we're confronting. But at the end of the day, we have a president now that is willing to address it immediately with a sense of urgency.
Well, and it's understood, Congressman, that just the act of talking, of participating in a summit like this is important in and of itself. But is the president walking away with enough firm in hand? Where are all the deals that we expected to come from this? The commitments to China that China we thought might make when it comes to purchases of U.S. products. Are you disappointed?
No, I mean, look, this is the first of many conversations and many interactions between the United States and China. The president is going in with his eyes wide open. Again, China is not our friend. And so when we look at the competition that we're engaged in, look, they're stealing our IP. They're terrible on human rights. When you look at the challenges right now in cybersecurity, we just had a briefing on Mythos and the vulnerabilities that it has exposed. China is actively trying to develop those same AI platforms to exploit our vulnerabilities. When you look at commercial space, they are trying to be dominant in that arena. You look at emerging technology, biotechnology. 80% are probably the reagents and the things that make our medical devices and our pharmaceutical products come from China. I mean, think about this: if we were back in during the Cold War, we would never allow the Soviet Union to make 70 to 80% of the things that make our economy function. Fast forward to today. China does make 70 to 80% of the things that make our economy function. So the president is trying to put an industrial policy together. He is trying to rebalance the relationship, ensure that America is strong in a variety of industries. This is going to be an important thing, and the president is leading from the front.
What do you make of some of the analysis today from Bloomberg? A paltry set of deliverables underscoring the rushed and chaotic planning for the trip as he grappled with the Iran war and a range of domestic issues. Axios, nearly every force shaping U.S.-China relations is in fact pulling them apart. And the Washington Post, in pageantry and politics, China summit yields Xi's goal, equal footing with the U.S. It's that last point I want to ask you about, Congressman, the image of these two superpowers on similar footing. What the president referred to as the G2 in an interview yesterday seems to favor China, does it not?
I don't think so. I mean, I think that's a lot of rhetoric. We're going to look at the specifics, but again, the president is leading. I mean, you look at the previous administration and the administrations before that. I mean, we are dealing and confronting a real challenge. We are in a great powers competition. I mean, as I said before, China is going to be the challenge. They could either be a force for good in partnership with us, or they could be a force for instability. And so this is something that our eyes are wide open when it comes to Taiwan, when it comes to the entire Indo-PACOM region, when it comes to our competition in a variety of industries. I mean, we have to lead. And when you look at the president's investments in bringing back manufacturing, when you look at the use of tariffs to expand our leverage, when you look at the investments when it comes to hardening our supply chain, when bringing back critical minerals to the United States, when you look at our leadership in AI, all of this is to confront the growing threat that China poses to us.
Congressman, finally, as you have a seat on the Transportation Committee, I'd love to ask you, as we consider another geopolitical challenge the U.S. is facing, it's obviously how to extract ourselves from the conflict with Iran and how to get the Strait of Hormuz back open and energy flowing out of the Middle East once again. The president has floated an idea of a federal gas tax holiday. Do you support it, knowing it could mean a hit in the fund that funds so much of our critical transit infrastructure?
Well, we're looking at it. I mean, certainly affordability is probably the top issue facing Americans right now. Gas prices, number one. In California, gas prices has surpassed $6. As someone who advocated for suspension of the state gas tax, we should look at the suspension of the federal gas tax, but it's not a permanent solution. We certainly have to look for ways to keep the Highway Trust Fund solvent. So we're looking at every single angle to fund our roads, but we have to bring back the price of gasoline. The solution to the price to reducing the price of gasoline is to expand supply, to invest in energy infrastructure, to expand our refining capacity. These are the things that President Trump is doing. Contrast President Trump's energy policy to the policy of Gavin Newsom. No question, Gavin Newsom has made California weaker and more vulnerable. We cannot follow down that path. We need to follow President Trump's lead in expanding energy production. That is the long-term solution to reducing gas prices and making America energy secure.
Congressman, it's great to have you. Thanks for being part of our conversation today with us live from Capitol Hill. Congressman Vince Fong, California's 20th District, as we assemble our political panel for their take on what we just heard. Bloomberg Politics contributor Rick Davis is with us, Republican strategist and partner at Stone Court Capital, alongside Democratic strategist Jim Kessler from Third Way. Jim, what do you think about that response on a gas tax holiday? It doesn't appear the leadership is in favor on Capitol Hill. Does this see the light of day?
It's hard to say. Gas this time last year was $3.19 a gallon. Right now it's $4.55 a gallon. And it is purely because a war of choice in Iran that was a bad idea, it's going to take months and months, perhaps years longer than anyone anticipated, and it's not going to achieve its results. So, gas tax, I believe, is 18 cents. And, that would be nice to go from $4.55 to $4.37. It would drain our resources in which we fund roads and bridges. But, this is a problem of Donald Trump's making, and frankly, nobody else.
Well, Rick, I know that you see the political opportunity for basically anyone who's in elected office right now to pursue a federal gas tax holiday. My question is, how quickly do you think it realistically could happen? How quickly would it need to happen to have the desired effect?
Yeah, I know I disagree with many economists who say it's bad policy, but it's good politics. And the reality is that Congress has done little to help support the Americans who feel the pinch on cost of living. And this is one area that they can at least side with the American public. The reality is that getting, the feeling of it is the feeling of action, not the feeling at the pump. I mean, Americans are never really going to be impacted politically by a couple cents at the gallon coming down. But if they see Washington at least making an effort to try and take over their priorities of cost of living, of affordability, and doing something about it, it can soothe what is right now a pretty grumpy, angry consumer.
All right, Rick Davis and Jim Kessler will be back with us for more in just a few moments as we continue on here on Balance of Power. We'll also be bringing you a taste of what will be on Wall Street Week this evening. Bloomberg's David Weston is going to join us just straight ahead right here on Bloomberg TV and radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We've got a steep sell-off for the U.S. equity market with the Dow, the S&P, NASDAQ all falling. Yes, a down day for the S&P 500 index, retreating from a record. We are on track, though, for another winning week for the S&P. Here's where we stand. S&P currently at 74.40, down 60, drop there of 0.8%. A sell-off in global bonds is halting a rally in stocks. There is concern intensifying that central banks will be forced to tighten policy to keep inflation in check. The Dow back below 50,000, down 399 now, down 0.8%. The NASDAQ Composite Index and NASDAQ 100 Index are both down by 1%. The VIX back below 18 now with a 10-year 4.58%, the 2-year 4.07%, the 30-year 5.11%. West Texas Intermediate crude oil, $105 a barrel, up 3.8%. Brent, the global benchmark, at 109.11, up now by just about 3.2%. Round 2 of the PGA Championship underway in Newtown in Pennsylvania. At last check, South Africa's Aldrich Potgieter sits atop the leaderboard at 4 under par. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie, many thanks as we keep our eyes on President Trump returning to the United States from a 3-day summit in China and exactly what the United States has to show for it. When we consider the analysis at Bloomberg News, the paltry set of deliverables underscored the rushed and chaotic planning for the trip as he grappled with the Iran war and a range of domestic issues. The market clearly not getting a lift out of what we heard even yesterday. Shares of Boeing and GE Aerospace were lower on disappointment over a deal to sell jets to China. Both of those stocks are lower again today. And of course, oil prices have resumed their climb because, well, we haven't been talking about it all day. The Strait of Hormuz, yes, remains closed, and it appears that China will not be helping us reopen it. David Weston joins us now live from World Headquarters in New York, of course, the host of Bloomberg Wall Street Week, who's delving into the matter that the president was discussing, many of the matters with President Xi following this summit, what it means for the world's 2 biggest economies. And David, it's great to see you. That Bloomberg News analysis may be a bit between the eyes, but there is something to be said for what appears to be the lack of advance, the lack of agreements before these 2 gentlemen sat down.
Yeah, it's interesting, Joe. I'm not sure exactly what we expected, what the markets expected, how much they expected. We had talked to people beforehand who said, don't expect too much coming out of this. The goal might just be stability. I mean, if you remember, it wasn't that long ago, we were at daggers drawn over a thing like rare earths. At least they weren't fighting over those. I mean, President Xi wasn't threatening things. So I'm not sure exactly what we expected to come out of this, but I think it's fair to say that there were no big breakthroughs, at least from the United States point of view.
Well, so if there was no big breakthrough, David, no big fundamental changes, what does this mean for an investor who already has had to navigate previous trade wars with China, try to figure out how to make decisions around this relationship in the 2 largest economies?
As always, there's a short term, Kaylee, and there's a longer term. In the short term, I'm not sure how much difference it makes. It may stabilize things. We're not increasing our tariffs. Maybe they'll buy some more soybeans, buy some more Boeing planes, although not as many as we would hope for. But then there's the larger, longer term issues about exactly what happened. And although there were no breakthroughs, there might have been some fundamental changes just in the nature of the relationship between the United States and China. We see a China that is more assertive, certainly, as you saw, when President Xi came out of the box, according to their readout, starting with Taiwan. I mean, that was not a shy move on his part. And so we sat down with Ray Dalio, who, as you know, is a student of China, spent more than 30 years going there. He was there just within the last couple of weeks meeting with leadership in advance of the summit to get their perspective. And it was really important, at least for me, that Ray has a different perspective on how the Chinese regard it. We think of it as a zero-sum game. Are we up, are we down? They have a longer-term view based on their history that basically has to do with a tribute system, is the way Ray put it. This is part of what Ray had to say.
So this tribute system is a hierarchical system. It recognizes that there are differences in power and that the important thing in dealing with other countries is how it affects you in your trade and your safety. And so we're now entering, I think, in their view, a period in which there will be a tribute system type of arrangement in which the relative powers are what matter. Okay, we don't have a world court that's going to resolve our problems and so on. So it's a relative power question. The desire is not to take over and conquer, They view that as a Mediterranean concept. But it is to have your family well, your country well, and then to operate with the rest of the world where there's the recognition of relative powers. Therefore, the United States, and there are comparable relative powers. I think they think the United States is declining and that they are sort of winning that relative war. But also in the region, there's the recognition, in their view, that there is an environment where the countries in the region have to recognize and respect that power. And so now you're seeing that happen.
Whoever is winning or losing, in terms of that relative power that Ray is talking about, let me give you one statistic that I find interesting. When President Trump last went to China, Chinese GDP was something like 25 or 30% of U.S. GDP. Now it is 60%. So in terms of relative power, economic power, there's no question, but there's a big shift. And President Xi is really aware of that as he's seeing it. And then we can conclude for ourselves whether President Xi thought, in fact, President Trump was coming to pay tribute, as it were.
It's a really nuanced view, and it's important that you bring it to us here, David. Of course, balance of power is followed by Bloomberg Wall Street Week, and we'd love to know what else you have in store tonight.
Well, we have more China, which is actually the race over energy for AI. We have Hank Paulson on, who's concerned about that, as well as Nick Burns, whom you know well, former ambassador there, because China is really advancing quickly in power on renewables as we've cut back on renewables. And then we've got a favorite for us all, which is taxation, and particularly Miriam Mamdani's battle with Ken Griffin over that so-called pied-à-terre tax, and whether that really is going to make a lot of difference to New York City. So we talk about that as well, near and dear to the hearts of all of our audience, I suspect.
God knows.
Indeed. We're looking forward to the show. David Weston, host of Bloomberg Wall Street Week, which you can catch at 6 p.m. Eastern Time on Bloomberg TV and radio. Thank you so much, as always. And absolutely fascinating to hear from Ray Dalio about this concept of relative power when it comes to the U.S. and China, because this is also something we explored in an interview on Balance of Power last night with Democratic Congressman Jake Auchincloss of Massachusetts, who was also talking about the power dynamics at play here. He doesn't think that they favored President Trump. Listen.
The videography and the symbolism has been more interesting. This is the first time since World War II where a president has been in a room and it wasn't clear who the most powerful person in that room was. And that is a statement about how badly this president has mishandled his strategic calculations. He picked a trade war with China last year, lost it. Picked a kinetic war with Iran this year, lost it. And now his loss of power and prestige has been evident by the fact that he is in a room with a bunch of tech titans and Xi Jinping, and arguably all of them actually have more power and influence than he does over the grand current events that are dictating American life right now.
Let's see what our panel thinks about that as we welcome back Republican strategist and Bloomberg Politics contributor Rick Davis and Democratic strategist Jim Kessler of Third Way. Rick, I would love to know what you think of Congressman Auchincloss's remarks there, the suggestion that Trump was potentially the weakest player in this room.
Yeah, I don't agree with that. I think that it's very easy to create a scenario where Trump himself as an individual, for whatever reason, came out of this looking weaker. And some of the pandering that he did to President Xi may actually give people the impression that he was kowtowing, to use a Chinese phrase. The reality is his presidency has probably been seen as the most powerful execution of American power, both economic and militarily in our lifetime. And it has shown the degree to which the United States can hold sway over markets and security around the world. China has never exerted that kind of financial and militaristic influence around the world. They have been choosing a different path to do that, and so I don't buy the argument that somehow the United States is weaker because Trump appeared weak.
Joe Biden's China director on the National Security Council echoes the sentiment of Jake Auchincloss, Jim Kessler, saying Xi has done something Chinese leaders have been working toward for decades, bringing an American president to Beijing as an undisputed peer. Do you agree?
I do agree with that. And look, I think there's a dichotomy here because on the one hand, I agree with Rick Davis in that Donald Trump does project power. America has been projecting power clearly, like Venezuela, other places throwing its weight around. On the other hand, and the Bloomberg article you cite gets it exactly right, Xi Jinping was prepared and Donald Trump was not prepared. And this summit was a disaster for America. And Xi Jinping just laid the wood on him right away on Taiwan. And Donald Trump gave the wrong answer on it. And, you know, this is a situation like you want stability, but you don't want stability on China's terms. And look, I think the reality here is Donald Trump doesn't really care about Taiwan. He said this in August of 2024 that it's 9,000 miles away and it's only 100 miles away from China. And, you know, he's given indications that he doesn't really care. Well, that's a major change in the balance of power in that region and with China, which is fair enough. China is, and the United States, we are the G2. And we are competitors and we don't want to be at war with China, but we also don't want to boost them. And I think this summit was a disaster for the United States.
Well, as we hear Jim say that the president didn't give the right answer on Taiwan, the president said he didn't give an answer. He wasn't committal either way. But is that telling in and of itself?
Yeah, why not just restate the same policy the U.S. has had for decades? And by the way, which would have been a real slap in the face to Xi, because that's the last thing he wants to hear from an American president. And I agree with Jim in that this was a really bad summit. It doesn't reflect on my view of the power of the world, power of the United States around the world, but this was a poorly planned, poorly executed summit on our behalf. Fundamentally, if an American president comes to your country, it should be pre-negotiated well in advance what's going to come out of that, because the power and the prestige of the United States going to Beijing is an important and symbolic measure that only we can bestow on a country like China. China coming here, nobody's really going to care. But when a president of the United States goes to Beijing, all the world's eyes are upon it. And in this case, it really wasn't very well planned. I don't even know why the president was there, because there was no perceived goal other than stability. We had stability before he went there. In fact, today, I would say there are a lot of people scratching their head wondering what message did Xi get from Trump being there unprepared.
Wow. I think they agreed on a lot here, actually.
Yeah.
Rick Davis and Jim Kessler, really fascinating. Thank you both for the insights and a great panel. Rick, of course, Bloomberg Politics contributor, a Republican strategist. Jim Kessler, Democratic strategist from Third Way. We've got an important conversation ahead for you. I want you to stay right where you are with Bloomberg TV and radio. It's the last day for Jay Powell as chair of the Federal Reserve. And Kaylee, we have the perfect voice for the occasion.
Yeah, Lael Brainerd will be joining us, of course, former Fed vice chair and former director of the National Economic Council during the Biden administration. Wonder what she makes of the moves we're seeing in the bond market today as well. That's next here on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all very much in the red. Stocks are falling as inflation jitters lift bond yields. Right now, the S&P under 7,500. You recall it closed at a record yesterday. We are on track for a winning week, but right now looking at losses with the S&P down 0.7%, lower by 53 points. The Dow back below 50,000, 49,641 on the Dow, down 0.8%. NASDAQ Composite Index also down by 0.8%. NASDAQ and the NASDAQ 100 Index are both retreating from records. The VIX right below 18 right now. The 10-year, 4.58%. We've got the 2-year currently yielding 4.07%, with the 30-year at 5.12%. Gold is down $89 the ounce to $45.62, down 1.9%. West Texas Intermediate crude right around 105 a barrel. WTI up 3.9%. Brent crude 109.13 barrel of Brent up now by just about 3.2%. Just getting word that the Equal Employment Opportunity Commission plans to cut employer data reports on race and gender, that according to B-Law. Also, word of job cuts at Starbucks, the coffee chain cutting an additional 300 corporate jobs, its largest move to hit cost reduction targets. And Papa John's international shares are advancing, up by 6.2%, after Reuters reported that the investment firm Earth Capital is working with the pizza chain's largest American franchisee to take control of the company and take the company private. Recapping, S&P down 58 right now, down 0.8%. The 10-year, 4.58%. Also, we've got the 30-year at 5.12%. Round 2 of the PGA Championship underway in Newtown in Pennsylvania. At last check, South Africa's 21-year-old Aldrich Potgieter sits atop the leaderboard at 4 under par. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie, checking on the markets for us. Thank you so much. And what a story the bond market in particular seems to be telling today. As Charlie was running you through upward pressure that we are seeing, yields up about 10 basis points on the 10-year. The 2-year yield, as Charlie mentioned, back above 4%. The short end of the curve is not signaling that it expects easier monetary policy to be coming anytime soon. In fact, there's a live conversation as to whether or not the Federal Reserve is going to find itself in a position in the not so distant future where it has to consider tightening policy and hiking rates once again, even though clearly that is not what President Trump has been pushing for, not what he is hoping that his new Fed chair, Kevin Warsh, will deliver. Because yes, it will be Chair Warsh, no longer Chair Powell. Today is the last day of Jerome Powell's term on top of the Fed, and what a time he has had, from a few inflationary events like a trade war, COVID and the emergence from the pandemic, the shock emanating from Russia's invasion of Ukraine, the whole story around transitory inflation, and then, of course, a whole separate story unrelated to the economy itself around the renovation of the Fed's building here in Washington and the pursuit of him as a result. Let's just get a recap of the chairmanship that was Powell's.
Thank you very much, Mr. President, for the faith that you have shown in me through this nomination. The spread of the coronavirus has brought new challenges and risks. In response, we have eased the stance of monetary policy to provide some more support to the economy. The effect on inflation will be neither particularly large nor persistent. We expect that they'll be transitory or temporary. The word transitory has different meanings to different people. I think it's probably a good time to retire that word.
It looks like it's about 3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. I won't see you next time.
All right, hold your hard hats. We're joined by an important voice on this final day of Mr. Powell's tenure as chair, and that would be none other than Lael Brainerd, as we told you. With us in studio, the former director, National Economic Council in the Biden administration, former vice chair, Federal Reserve, now at Georgetown. It's wonderful to have you with us here, and we have many questions about Jay Powell's tenure, your firsthand experience, but I do have to start with what's happening here in the bond market. This is overwhelming the stock market today. Is this everything about the PPI, CPI we saw this week? Is it about the concern of it getting worse because of a closed Strait of Hormuz, or is there more going on here?
Well, I think there are a number of things going on. Obviously, there's some carryover from overseas where the UK government dynamics are carrying over into the U.S. at the very long end. But as you say, both CPI coming in very hot and PPI, input prices, freight, suggesting that we're going to see additional pressures, upward pressures on consumer inflation in the months ahead. And of course, really very few people expect the Strait of Hormuz to be open and that oil to be moving into global markets, certainly not before the end of May, probably not well into the summer. And that means that as Kevin Warsh enters the Fed, it is a inflationary set of risks that he has to contend with.
Well, therefore making it very difficult to pursue rate cuts. But how high is the bar in your mind to actually tighten policy further? How hard would it be to hike rates, knowing that this also could ripple down and have a potentially negative growth impact?
Well, I think the day one job for Kevin Warsh walking into the Federal Reserve is to move the Fed away from the easing bias that has now been in place since late last year. It's no longer appropriate. We've had a massive inflationary shock. It's piling on top of earlier inflationary shocks, and we're seeing that core PC inflation is moving up, likely to come in around 3.3%. So the first business for Kevin Warsh is to actually move away from that easing bias. And of course, that's exactly the reverse of the reason the president gave for trying so hard to replace Jay Powell.
I was taken by your op-ed in the FT, in which you talk about inflation pressures in the future. When people expect inflation to persist, you write, it tends to change pricing behavior by businesses, and a temporary shock becomes a persistent one. You know about this because you've lived it. What does it mean for the second half of this year?
Well, I think we started to see some of that in the PPI data with margins going up.
Okay.
And that is the kind of behavior when consumers expect gas prices to keep going up, then those gas station margins can go up as well. We are seeing it in freight costs. Everything is going to be affected by diesel, packaging costs for food. So we still have some inflationary pressure coming for the consumer in the months ahead. And when I talk to consumers, and you can see it in the consumer surveys, their inflation expectations have jumped much higher, but they also just are very resigned to prices never coming back down. So they say, I hear about tariff refunds. I'm never going to see those refunds in lower prices. I see gas prices going up. When am I actually going to see some relief? So I think that concern about a series of supply shocks really leading into changing inflation expectations is one that the Fed has to show they're taking seriously.
Well, and of course, for consumers, if your wages are not keeping up with this, it feeds into the sentiment downdraft we have been experiencing. We saw that borne out in the CPI with wages being outpaced by inflation for the first time in 3 years. When do you expect that this starts to have a greater impact on the economy itself, on consumer demand overall, on demand for labor as the Fed contends with the other part of its dual mandate?
Well, what's interesting, as you said, average hourly earnings actually negative for the first time in a very long time this month. And it does affect consumers on the lower end. So what we are seeing, I think, with consumers on the lower end, I hear from them that they are using, where they have access to credit, they're using credit more. They're running down their buffers. When you look at those overall retail sales numbers, though, those were very strong, I would say, given where we are with oil prices. And that just speaks to the K-shaped economy, the very top of the consumer income kind of distribution, really driving that ongoing uplift to consumption. So that's why we're seeing, I think, this big vibe chasm, consumer sentiment being extremely negative, but consumers continuing to power growth.
Speak to the significance of this day for Jay Powell. I don't know what happens inside the Fed on a chair's last day. Are there fireworks? Is there a cake? We're wondering. Maybe there's an official handling of the gavel. But as we recall the stylings of Jay Powell and the challenges he faced in dealing with this administration, will the relationship between the chair and the president ever be the same again?
Well, I think that will be the biggest legacy of Chair Jerome Powell, is just the integrity with which he led this institution and really protected its independence during a time when the president mounted a series of unprecedented actions, firing a governor, undertaking a criminal investigation. So I think the chair's legacy is really going to be around preserving the independence of the Federal Reserve. And I think he actually gives Kevin Warsh a much stronger position to start from than might have been the case otherwise.
But what does it do to Kevin Warsh's starting position that Chairman Powell's still going to be hanging around, not as chair, but as a governor? He says he wants to keep a low profile, but what impact do you expect that will have inside the Fed?
Well, I certainly know from working with Chair Powell when he was Governor Powell that he's very constructive. As he said, he will be low profile. I really expect that to be the case. So I imagine, and he of course worked with Governor Kevin Warsh, I expect that they'll establish a good working relationship. What it means, of course, is that the consistent dissenter, the CEA chair for President Trump, Stephen Myron, is rotating off, at least for the time being. And so that actually makes Kevin Warsh's job a little bit easier if, in fact, he decides he is going to move away from that easing bias and recognize there may be two-sided risks to rates.
Speak about the cultural shift inside the Fed when a new chair shows up. This is obviously a very close group of people. You go behind closed doors and make very difficult decisions, but I'm sure that there's a camaraderie there and a style that's impacted by a new person holding the gavel.
Well, the staff are absolute professionals. I mean, these are people who have deep expertise, but they understand that they are providing advice and depth. But the policymakers, the chair is leading on policy. And so they will offer up that same sage advice, uncolored by their own views, to the incoming chair. And similarly, I think board members and the regional presidents tend to be very serious. They take the data very seriously. You've heard how they're parsing the data right now, how they themselves are shifting, but they are also very collegial.
Well, of course, a lot of conversations do happen behind closed doors, but we also hear frequently from Fed governors or officials on the FOMC, and it seems Kevin Warsh thinks it maybe is too frequent, at least judging by his testimony in his confirmation hearing, not even just in terms of speeches and the like, but in putting out a summary of economic projections, for example. I wonder what you think we might expect in terms of a shift in the, at the very least, amount of guidance that financial markets are given by the Fed.
It is possible, given that he will now be making the recommendations on the statement and will also be making recommendations on what kinds of communications the committee's making. There are a number of things he could do. He could decide to put forward a statement that doesn't include forward guidance at all. He could decide to drop his press conferences or move to every second press conference. He could guide the committee over time to decide to no longer issue summaries of economic projections. So those are all things that he could do. The question mark, yeah, so I think that is the question mark, if in fact he wants to be leading the Fed and providing that voice that is the kind of preeminent voice on Fed policy. He may find that he wants some of those tools. And in particular, the every meeting press conference has raised the chair's voice relative to other members.
We all remember trying to gauge what Alan Greenspan was going to say based on how fat his briefcase was. We would have paid good money for a news conference back then. Do you expect that regular news conferences will follow each meeting?
I think that was one of the question marks that his testimony left open. What he won't be able to change is the number of times that the regional presidents and board members speak.
Right.
And so it would be, I think, to his disadvantage to retreat from the field and leave the markets to interpret based on other members of the committee alone.
All right, so great to have you, the former vice chair of the Fed and former director of the National Economic Council in the Biden administration, Lael Brainard, here with us on Balance of Power. Thank you so much. And of course, we'll have more in the late edition at 5 p.m. right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed. This is Carol Massar, Tim Stanovic live here at Bloomberg headquarters in New York City. What a week. So much going on. And then you take a look at what's just going on this Friday. We've got a global bond sell-off. We've got yields surging from Japan to the United States, rising oil prices once again, spooking investors. We've been talking about this a lot around this table, but you definitely saw it play out.
It's almost like it's finally catching up.
Yeah, I mean, you look at the
oil prices
charts.
have been high for 11 weeks.
Well, and everybody says, listen, none of this is going to go away, right? Anytime soon. People are talking about the end of the year. They're thinking about higher gas prices, and all of that plays its way through the economy.
Okay, so that's just part of the backdrop. We got a great roundtable to talk about this global bond sell-off and the macro. Priya Misra is here from JP Morgan. Martin Norton joining us too from Empower.
Looking forward to that combination. And it's a wrap on President Trump's visit to Beijing, what you need to know. We're also going to get into how Andy Jassy is rewriting Amazon's playbook for the AI age. It is the cover story of Business Week.
Brad Stone going to be joining us. He literally wrote the books on Amazon. So looking forward to that conversation. Also, a read on the consumer.
Yes.
Food costs.
Yes.
Wine costs.
Spirits costs.
And what our summer picnic might look like and might cost.
With Blake Leonard. She is over at Stu Leonard's Wines and Spirits. She's president, but she's getting ready to take over, co-take over, I should say, and lead the company into the next generation. Let's get you going, though, with a check on that trade, including what we're seeing in the Treasury trade here in the U.S. Here is Charlie Pellet.
Thank you very much. Lots of red on the screen today for the Dow, the S&P, and NASDAQ. Pulled back from records, but interesting to point out that it looks like, as of now, that we could see another up week on the S&P 500 index. Here's what's going on right now, though. Red on the screen with the S&P down 49 at 74.51. This time yesterday, we were right around 7,500. A drop today of 0.7%. The Dow Industrials down 403, drop there of 0.8%. And NASDAQ lower by 194, drop there of 0.7%. All of this with the VIX back below 18 and the 10-year now at 4.59%. The 2-year, 4.08%, and the 30-year, 5.12%. Our coverage will continue. Right now, we've got spot gold down $92 the ounce, 45.59, drop there of just about 2%. Crude pushing higher, WTI 105.13 a barrel, up now by 3.9%. Brent crude 109.07, up now by 3.2%. So bottom line here, stocks are falling as inflation jitters lift bond yields. Bill Ackman says Pershing Square has built a new stake in Microsoft, taking advantage of a decline in the company's share price to invest in a business that he says is stronger and more resilient than investors think. Microsoft shares are up now by 4.5%. Round 2 of the PGA Championship underway in Newtown in Pennsylvania. At last check, Aldridge Polgieter of South Africa sits atop the leaderboard right now at 4 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is a Bloomberg Business Flash.
It is indeed. All right, Charlie, and we'll be checking in with Charlie throughout the hour. Want to get to a bunch of stuff that's going on, but before we do that, we kind of need to set the macro of one of the big stories of the week, and that was the meeting between U.S. President Donald Trump and, of course, Chinese President Xi Jinping. There were a few deals. I feel like a pledge of stabilization, Tim. But the risk for both, and it was very clear, is Taiwan.
Taiwan, also Iran. That's a side issue as well. Just a meeting between the leaders of the two largest economies in the world. Investors, though, I think, want more. On the ground with the president throughout his trip, Bloomberg News Washington correspondent Tyler Kendall. She joins us from Beijing. Tyler, what was the most important takeaway from this meeting?
Well, Tim, I think you guys just hit the nail on the head there. It appears that the takeaways have been dominated around developments when it comes to Taiwan. We had Chinese state media reporting right after President Trump took off from here in Beijing that China feels that Taiwan is the #1 issue in the U.S.-China relationship. Now, U.S. officials made very clear that their position on Taiwan has not changed, but President Trump did appear non-committal when pushed about a $14 billion weapons package that has been queued up. And And we're starting to see some pushback from Taiwan, even breaking within the last hour or so a reported statement from Taiwan's Foreign Affairs Ministry urging President Trump to move forward with that security assistance. That was really the biggest point of contention amid a summit that we saw both sides really trying to push forward this idea of strategic stability. And perhaps that's the other big takeaway here, which is that the dialogue is going to continue, and it's going to have to continue because we're still waiting on a lot of details about some pledged investment deals or purchase commitments. In fact, you saw soybean futures falling because there was this expectation that we would see a firmer announcement around agricultural purchases, but that never ended up materializing. So a lot of big questions here. Yes, we got that Boeing deal, but there was an expectation that we could see some sort of breakthrough around NVIDIA H200 chips since Jensen Huang was on that trip. That didn't happen either. But Tim and Carol, both of the sides did seem to commit that there will be this U.S.-China Board of Trade and Board of Investment. But again, that is just basically a commitment to kickstart the process for that more formal mechanism to usher in more trade and investment between the two countries. I will quickly add that we did get confirmation from China earlier today that Xi Jinping will travel to the U.S. this fall.
Promises, and lots of pomp and circumstance. We'll see ultimately how this all plays out. Tyler, we know it's been some long days for you. We really appreciate it. Have a super safe trip home. She is, of course, our Tyler Kendall. She's there in Beijing for Bloomberg News. All right, so investors maybe not getting all that they wanted with the meeting between President Xi and President Trump. I think some were looking for more deals. What investors, though, did get today, a global bond rout as investors shed government bonds around the world, propelling borrowing costs to multi-year highs amid intensifying fears that war-driven inflation will force central banks to pursue higher inflation and higher interest rates, I should say. And I got to say, you're seeing it play out. There's a little bit, Tim, of a pullback in terms of the equity side of things. Not necessarily coming undone completely, but some of the high flyers that are certainly
the stocks.
Yeah, exactly. are much more sensitive to higher interest rates. You're definitely seeing a pullback. So let's get to it. Priya Misra is with us, portfolio manager of the JP Morgan Core Plus Bond ETF, here on set with us in New York City. Also, Marta Norton, she is chief investment strategist at Empower, and she is in the Bloomberg News Chicago Bureau. We do have a lot to get to. Priya, I've got to start with you. 10-year real yields headed for 7-week closing high. You just look around the globe and you see this rising rate environment. I do think about it. Is it just something that goes away if this U.S. war in Iran stops, or not necessarily?
Not necessarily, because, we need the Strait to open. So the Strait's not open, which is why energy prices are rising. We also need the global, so there's a global term premium increase. You see this in UK, you see this in Japan, now you're seeing this in the US. I think concerns around debt and deficits, that's a global issue. That's why
and
term
that
premiums
doesn't go
are
away
increased.
like that.
Exactly. Wars are expensive. Wars are inflationary, wars are expensive. It's not clear that, sort of governments have figured out a way to deal with this debt. So I think that is with us. I think the rate range is higher. I do think that the rate move has now reached sort of more of a, I would say danger zone, meaning now risk assets are paying attention to it. I think there's a self-correcting mechanism here. As you see the tightening in financial conditions, I think then the market starts to move from, is this just inflationary to is this stagflationary? Do we start to see that growth impact? So I think now every other market's paying attention to the bond market. The fact that we've sort of broken those psychological 4.5% on the 10-year, I think now it becomes a little bit more dangerous, not just for the bond market, but also for the broader risk complex.
Well, that's a perfect segue to bring in Marta Norton of Empower, where she's chief investment strategist. Marta, as Carol mentioned, some of the higher flying areas of the equity market taking a little bit of a hit today. The stock's down about 2.2% right now. I'm curious what you're seeing in the macro that's supportive of stocks or not supportive of stocks. What's your view?
Well, I think when we're looking specifically at those high-flying areas, I mean, the rally has been fierce, not just from April 1st, if we're looking at, a semiconductor index somewhere around 55% over this short period, but over the course of 2026, this has been one of the areas that investors have flocked to. So I think the idea that we would see a pullback in some of those areas that have just been bid higher, I think that makes sense regardless of what's happening in the bond market. But there's no question that when we start to think about higher rates, a 4.5 on the 10-year. That, of course, is an impact to borrowing costs, and that's a concern for valuations. And valuations outside of select areas, valuations for the broad U.S. market are not all that cheap. So I think there is some risk more broadly to what we're seeing in the bond market.
Well, Priya, come on back in here, because I think we keep talking about this disconnect between records on Wall Street versus sentiment not so great. We saw inflation numbers, of course, this week, and we're just trying to make sense of what's right, why the disconnect. How do you reconcile the differences?
So I'll say 2 points there. One is the AI revolution that we're under. I think we are somewhat hypnotized by the fact that we're seeing AI earnings, we're seeing AI capex. If that's going to revolutionize the way we do business, and you're seeing companies, invest a lot, earn from it. I think that's the reason why equities have done so well. You take AI out, capex of the rest of the economy is actually not that strong. The cyclical sectors, I would argue, the labor market is stable. It's not decelerating, but it's not exactly re-accelerating. So I would say that's one. The other one is the K-shaped economy. I mean, there's a lot of evidence. The New York Fed's done some great work to show that K-shaped economy is at play even right now. The upper part of the K is able to continue to spend. The lower part of the K, that inflation really starts to bite. At what point do the tax refunds sort of run out when the lower part of the K continues to weaken and the upper part starts to falter? I think that's the point where, that disconnect that you're highlighting starts to unravel, because then, we have to question, okay, the AI thing might still be ongoing, but the rest of the economy is now starting to struggle with the energy prices.
Priya, it's something Tim and I talk about. Like, when does those who are struggling start to have an impact on this economy, and we start to see it play out? Marta, come on back in, because the AI trade, though, has been tremendous, the CapEx, and we increasingly see, the big hyperscalers tapping the debt market to pay for all of this. Was it Alphabet, $3.6 billion selling of bonds in the biggest ever yen deal by a non-Japanese company? It's they've raised close to $60 billion. Okay, I get that. But when the rest of the economy, or a big chunk of the economy, isn't enjoying some of that spend or that exuberance, doesn't that come to roost at some point?
Well, it's so fascinating because it's not something that we're used to seeing. When we think of the U.S. economy, we think of the U.S. consumer. And now all of a sudden we have this dark horse running alongside with AI spend, and we see that in the GDP numbers, right? We're seeing way more spend from the AI side supporting the U.S. economy. And what I think is really interesting in this is that we can have some pressure on the U.S. consumer, and yet I don't think that necessarily means that the AI capex slows down. So we almost have this second engine to the economy that I think maybe gives the U.S. economy a bit more shelter, or maybe more resilience than what we would expect overseas, and potentially means that some of these areas within the AI trade still have some value, especially those that haven't been bid to the same degree as say the chips.
Marta, if I can just question you on beyond the AI side, when you think about companies, you think they can pass on the cost increases? Because I think that's what it's going to come down to. As we're thinking about, will the Fed have to come in and hike? If you start to see core services inflation starting to pick up, or core goods inflation pick up, you think companies have the ability to price to increase prices here?
Well, what's interesting is, we did see the PPI number and the CPI number, and we see this major move in PPI. And the question, to your point, is whether we're going to be able to see those companies pass along the price increases. Now, maybe there is some cover in the sense that inflation is high and companies can arguably justify, hey, inflation is high, I need to pass along a bit of the price increase. But there is a little bit of just fraying along the edges for the consumer. So I think there could be the possibility, like we've seen in the past, where companies do eat some of the pain from inflation, but earnings are quite strong. And so maybe there is the potential for them to eat some of the extra cost pressure, but maybe not see earnings collapse altogether.
Priya, one thing that we are promised as folks who, I guess, whether we like it or not, if you buy an index, this is what happens, productivity increases as a result of these investments. When will we see those, if we haven't already, and how will they materialize broadly?
Great question. And one that actually, it's important for the macroeconomy. It's also important to understand what is neutral rate. Because if you listen to the new Fed Chair Walsh, she's talking about these productivity gains actually potentially lowering that neutral rate. You know, I go back to the 80s and 90s. We had the computer age, 80s, 90s. Robert Solow actually came out and said, you see computers everywhere except in the productivity statistics. It takes a while for that to show up because, number one, companies have to start to absorb AI. Number two, you have to restructure business processes, and then it has to show up in the data. So number one, I don't think we're seeing it in the data. If you look at the productivity statistics, they are high, but they are high across the board. They are high because companies realized after COVID that they have a shortage of labor, they have to automate. I think that's what we're seeing in the productivity statistics. We're not seeing AI. It could take a while for that to show up. So, and you know, again, then it has to be measured as well. So I think right now we're in this sort of low hire, low fire. We're seeing GDP statistics being high because it's driven by CapEx. Let's start to see AI being adopted by the rest of the business world, you know, corporates that are not technology focused. And then we start to see what are they doing with labor to get a sense of, are we seeing it in productivity? You know, I am a long-term AI productivity bull. I just think that might be 5 years down the road. And it could take us a while to figure out how, do we first actually invest a lot more in order for us to use that AI before we start to say, here are the productivity gains. So I think we're a long ways from there.
Well, Marta, come on back, because I do think we're also, we're watching this spend. There's a lot of excitement. It does feel like it's going to take some time. Is there any signs where you see that AI trade a bit stretched? Some questions out there, especially where we have Cerebras, right, coming out with their IPO. Might they challenge, NVIDIA? Like, I just feel like it's early going that maybe some of the leaders today might not be the leaders of tomorrow.
I mean, absolutely, that's the case in my view. It's very hard. We're in a very long race. So when we're looking at a marathon, we don't know who the winner is at the second mile or the third mile. We really have to get closer to the end game. And I think that's absolutely right, that when we look at AI deployment, we're very much in the early stages of that. Right now, I think a lot of companies have employed some measure of AI work to help improve maybe some PowerPoints and the like, maybe some research processes, but we're not really seeing it embedded in the workflows. And when we think about the AI trade, it has broadened out over the past year. So, we've started to include memory chips, obviously, in the AI trade. But the real broadening out is when it extends to the broadest of the economy. And I think we're still a ways off from that.
Just got about 50 seconds, so 25 to each. Marta, first, we've got NVIDIA, we've got a G7 meeting of finance ministers. What are you watching out for next week?
Well, I can't help but keep my eye on NVIDIA and just see what this looks like as we get that final mark on the AI trade.
Yeah, I agree. Sentiment will definitely be affected. What about for you, Priya?
Retail earnings. I want to see what are companies doing. Are they able to price, extend those price increases? Are they eating it in the margins? Because here's the thing, the labor market is not allowing consumers to pay a lot more. Wages are actually decelerating while we know inflation's picking up. So is it a margin story or is it actually inflation picking up?
All right, good stuff. Can you guys just come back every Friday? Please, please.
Absolutely.
Okay, well, we would love it. Really appreciate it. Of course, Priya Misra joining us right here. She's portfolio manager of the JP Morgan Core Plus Bond ETF. Marta Norton, chief investment strategist over at Empower out there in Chicago. We're coming back in just a moment.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all declining. Stocks are falling as inflation jitters lift bond yields. Right now we got the 10-year 4.58%. S&P pulling back from a record yesterday, holding above 7,500. Right now 74.41 on the S&P, down 60. Drop there of 0.8%. Dow Industrials down 462 on the Dow, a decline of 0.9%. NASDAQ and the NASDAQ 100 index also retreating from records. They are both currently lower by 0.9%. The Bloomberg Mag 7 index is down 0.6%. All of this with the VIX just above 18. The stocks, by the way, the Philadelphia Semiconductor Stock Index trading lower by 2.6%. The 10-year 4.58% now, with the 2-year 4.07%, and the 30-year at 5.12%. Gold down 2%, $45.56 the ounce. West Texas Intermediate crude up by 4.1% right now. WTI 105.34 a barrel. Barrel of Brent 109.33, up now by 3.4%. A day after its 68% surge in its first day of trading, Cerebra Systems giving back some of its gains yesterday. Right now, that stock is lower by 4%. Round 2 of the PGA Championship underway in Newtown, Pennsylvania. At last check, Aldrich Palgiter of South Africa sits atop the leaderboard at 4 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, gotcha, Charlie. Well, it is one of the largest market cap companies. In fact, I think it's the 5th largest. We're talking about Amazon, founded by Jeff Bezos. He's still chair. It's now run by CEO Andy Jassy. He's now 5 years.
I can't believe that.
Since he took over as the chief executive officer.
It seems like just yesterday.
It does. Oh, how time flies.
It really does.
Hey, and what's interesting is Jassy was, as Brad Stone writes in the cover story of Bloomberg Business Week, he was once Jeff Bezos' deputy and the head of Amazon's cloud computing arm, massive computing arm. 5 years into his tenure as CEO, he's killing projects, cutting staff, pleasing Wall Street, and steering the everything store through its greatest challenge yet.
His impact and role at Amazon. It's the cover story of the new issue of Bloomberg Business Week. It's also the Bloomberg Big Take. For more, let's head to the Bloomberg News San Francisco Bureau. It's where we find Brad Stone. He's the editor of Bloomberg Business Week magazine. You can read it online at Bloomberg.com, on the Bloomberg, and pick up on newsstands. Brad, also the author of several books, too, about Amazon, including The Everything Store. Brad, so much coverage when it comes to Amazon, especially of the post-Bezos era. The thing that I want to know is why Andy Jassy still drives himself to work every day in a 1998 Jeep Cherokee. Like, seriously.
Is the Maserati at home?
I mean, but
What's
also like, even, I don't know, like, I thought CEOs these days, from a security perspective, like, everything was so, is so tight and secure. And like, I know Bezos had a minivan for years too, but anyway, that's something
I thought that was interesting. They've got these corporate values that they promote internally and externally, and one of them is frugality. The idea that you're saving every dollar for the customer. Walmart does the same thing, and I think the way Andy's such a Amazonian. It's where he's worked his whole life. He embodies the principles, and so I think it shows up in his personal choices. Which include. He wore to the Business Week photo shoot what he called his 8-minute jacket, and it's a sport coat he literally bought in 8 minutes in a scramble for a customer meeting once. And so it's just the kind of guy he is.
All right, so you know this company like no other, and Tim mentioned you wrote The Everything Store, you wrote Amazon Unbound. Why is now a really good time to be writing about Andy Jassy?
Yeah, I mean, for tech companies right now, there is only one thing that matters, and that is, where are they in this great AI race? And do they have the leading models? Do they have the right partners? What kind of money are they spending on data centers? And this is what investors are watching and with bated breath, because the numbers are so large. And Amazon got a slow start. They had an opportunity to invest in Anthropic early, which they didn't. Some of their early models that they developed in-house haven't really been considered state-of-the-art. But I think it's become apparent over the past few months, maybe the past year, that Amazon's catching up in a number of ways. One, they've gone and Andy has formed partnerships with Anthropic, with OpenAI. OpenAI renegotiated its Microsoft deal essentially to avoid the exclusivity contract, so ChatGPT models could be on AWS, Amazon Web Services. Amazon redid Alexa. They call it Alexa Plus now, and they're making these chips, these Trainium chips that are in some ways competing with NVIDIA. And Amazon's offering is very Amazon-like. It's come to Amazon, you'll have a sort of menu of all the models, and you'll do it more cost effectively than you might elsewhere. And frankly, like AWS is now growing at a pace that it hasn't grown in a couple of years. Like the market has sort of turned, and so it does happen to be 5 years for Andy Jassy, but you can make an argument now that Amazon has caught up, and it is one of the names that is leading us, whether we like it or not, into this new era.
You know, as you write in the piece, Amazon invented this category with AWS and cloud computing. Andy Jassy and Jeff Bezos sort of conceived this together years ago, and he was the head of AWS before he became CEO of Amazon. How did what he saw happening at AWS as a result of AI inform the way that he makes decisions about AI at Amazon?
Mm-hmm. Well, I mean, I think they have a very good sense for what customers want, what the demand signals are, and no surprise, I see this in my own kind of personal habits. I'm experimenting more with AI. I think everyone kind of feels it, and what Amazon saw probably earlier than most is that customer and corporate demand for AI services was maybe even higher than folks even anticipated, and so they're spending $200 billion in CapEx this year alone building data centers. We visited one of them in Mississippi. It's the lead to the piece outside Jackson, Mississippi. These massive buildings that are rising up from the clay. And basically, one thing that Amazon can do better than almost everyone, because they are so early to the cloud computing movement, is stand up these data centers, and they're doing them all across the country. They're putting their own chips in them, and they're promising that capacity to companies like Anthropic and OpenAI, who can't even themselves get enough compute. So it does seem to me that Amazon's pretty well positioned right now, particularly for the bull cases in AI adoption.
So does he have his LA raised girlfriend, now wife, to thank for him being CEO of Amazon?
Right. So I don't think so. I mean, we talk about Andy Jassy's history, and it was almost a peculiar set of circumstances that got him to Seattle in the first place. You're right that his wife wanted them to spend a couple of years earlier in their careers on the West Coast, and maybe Seattle was a bit of a compromise. But he went early to Amazon. He joined in 1998. It was just a bookseller. Andy Jassy pioneered the at the time it was CDs, so the music category on Amazon. He was early on the marketing team, and then he was the first shadow or sort of technical advisor to Jeff Bezos, which is basically the person that's going to follow the CEO around. And he became a kind of disciple. And then when they conceived Amazon Web Services together, he broke off and ran it with a lot of autonomy for 15 years. So it's this extraordinary story, probably lots of good fortune that he was there at the beginning of this momentous internet revolution.
But it wasn't always totally without speed bumps. You point out in the piece that, Bezos admonished him at one point publicly in a meeting, and, he basically said, "Why should I ever listen to you about anything ever again if you get these numbers wrong?"
Ouch.
I mean, it probably wasn't personal. It was the sort of comment that, Jeff demanded excellence in meetings and had a brusque way, particularly early on, of conveying that. But, Jassy tells that story to illustrate to young people that, like, even this resonated with me, that even if what are you concerned about when you go into big meetings with your superiors? Well, you're concerned that you'll look foolish. And he said that there were instances when that happened, and the next day everything was fine, people moved on, and so, like, he didn't end up worrying about that anymore, and it gave him new confidence.
I am curious too about the relationship between Jassy and Jeff Bezos, and I think increasingly we see people like Jeff Bezos or Tim Cook of Apple, like they are the ones who are dealing with Washington and all of those issues, and then there are other folks like really running the company. But talk to us about, I mean, is Jassy involved in the politics and so on and so forth? Because Amazon, of course, as you know, has its fans and it has its foes, like of people who are really critical of the company.
Yeah, I mean, I think Andy does have his own relationship, certainly with the president and the White House. But I want to make one distinction, which I thought about a little bit and wrote about in the Business Week Daily newsletter this morning, which is we are surrounded by leaders in corporations and even political movements who are kind of, inextricably linked to their organizations. And so you can't imagine, say, Tesla without Elon Musk or the MAGA movement without Trump. And, Bezos really did architect an orderly and model CEO transition. And he did it 5 years ago. He's kind of stepped out of the way. He's executive chairman. He's very involved as an executive chairman, definitely probably helping Jassy to manage Washington, introducing and talking about evangelizing for new technologies. But, you have to give them credit, in this day and age when the key man risk, to use the SEC term, is so high at companies. Like he gave Jassy the reins and he really stepped out of the way. And I think it's worth saying at a time when, you've got Palantir or Tesla or SpaceX going public, where you can't even imagine what happens to the market value of one of these companies if the key guy, the key figure is no longer there.
And Brad, you make the point in the piece too that early on in the transition, he had to make some really tough choices as a result of some overhiring during the pandemic, a somewhat bloated corporate workforce that I think many would argue. How was he seen internally and externally as he was doing that, and what exactly did he have to do?
Yeah, probably not, very, very popular. He's laid off a good percentage of the company because of, as you say, there was overhiring during the pandemic. Andy also felt like Amazon was too bureaucratic. He wanted to remove layers. And then, of course, somewhat spoken, somewhat unspoken, you've got AI making the company more efficient. And, when you take opportunity away from people or you reduce the ability to promote, or people feel like promotions are closed off, it creates conflict and more. And, and this is not unique to Amazon. This is probably across business, certainly across Silicon Valley right now. So he made some unpopular choices. He also killed some prominent projects like the Go store, that just walk out technology in supermarkets, Amazon Fresh grocery stores, different robot delivery, drone, delivery robot projects. But he's also placed bets elsewhere, like the satellites. They're creating a satellite internet service, and they're going to be opening a new supermarket, new superstore in Chicago.
Right.
So, I think there's a lot of people who have a lot of respect for him, and like with a lot of companies, it's not unanimous.
Great deep dive. As you know, this company like no other. Brad Stone, editor of Bloomberg Business Week magazine. Brad, thank you. His story, it is the cover. Find it on the Bloomberg and online at Bloomberg.com. He's, of course, the author of many books, including 2 on Amazon. Tim and I back in a moment.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the red right now. The S&P 500 index pulling back from yesterday's record, now trading below 7,500, 74.34 where we stand, down 66 for the S&P. That is a drop right now of 0.9%. Stocks are falling as inflation jitters lift bond yields. The Dow down 480, back below 50,000, down 1%. NASDAQ and the NASDAQ 100 index also retreating from records. They too are down by 1%. The VIX just above 18 with a 10-year at 4.59%. We do have the 2-year currently yielding 4.07% and the 30-year 5.12%. Gold, $45.57 the ounce, down now by 2%. West Texas Intermediate crude, $105.55 a barrel. WTI now up by 4.3%. Ford shares down almost 7%. Its blistering rally screeched to a halt today as a broader market sell-off cooled enthusiasm over the automaker's potential to benefit from the boom in energy demand for artificial intelligence. This slump, by the way, follows a 21% two-day rally for Ford. Again, Ford shares right now down by roughly 7%. Round 2 of the PGA Championships underway in Newtown, Pennsylvania. At last check, three-way tie at the top. Alex Smalley of the U.S., Aldrich Paul Geeter of South Africa, and Australia's Min Woo Lee, all 5 under par. Recapping, S&P 500 index down 69. That is a drop right now of 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. So about a year ago, we were kind of coming off President Trump's Liberation Day, higher or uncertain tariff environment. We were kind of up in the air about a lot of things. And at the time, we were forecasting, put out a story at Bloomberg just ahead of Memorial Day, that the price of a cookout was going up.
Beef prices were an issue then, too.
Yes,
Yeah.
right? And that was,
Yeah.
well, the story got into a lot of the issues were domestic ones that were impacting the prices of things. And then I think about this year, Tim, what's going on?
Okay, U.S. war in Iran, higher
Right.
energy prices, higher gas prices, inflation prints just this week reminding us that inflation is outpacing wage growth. Not so good.
Not so great. So what does it mean for our summer picnics as we get ready? Please, please, to kick off summer. It's just around the corner.
It was felt like 45 this morning. That was the feel-like temperature.
I still
51
had-
degrees in New York
I
this
still
morning.
had layers. I hear it's
Yeah.
going to be like 80 degrees on Sunday.
Yep.
For more, let's head to Stu Leonard's Wines and Spirit store. It is in Norwalk, Connecticut. That's where we find Blake Leonard. She's the president of Stu Leonard's Wines and Spirits. She's also part of the next generation that will take over running the store founded by her grandfather. She will take the reins as president along with a cousin from her dad, Stu Leonard Jr., keeping it in the family. I love that. You are a certified sommelier from the Culinary Institute in Napa. You've worked for many other families, too, in the wine business, including the well-known Gallows. Blake, welcome. How are you?
Hey, thank you so much for having me today. And, since it's Friday, I wanted to start off just cheersing you with an Aperol Spritz right here.
Oh, my God.
I feel like she's seen Stu Leonard do this a few times on our show. Yeah, learn from the best.
I love you, but I do resent that there wasn't one sent to us. That's all I'm going to say.
I know.
I'm just going to say.
I think the interstate liquor laws, that's a big issue. Truly.
That is true.
Yeah.
I don't know.
Okay, maybe we can pick some up. Carol.
We'll figure
we're
it out.
right here in Spritz season now, so I'm excited.
Hey, talk to us though about the environment before we get into the summer season, what people are interested in terms of wines and spirits. But talk to us about the consumer, what you guys are seeing.
Yeah, well, I was the other day just visiting one of our wine suppliers, and he was saying that it cost him over $2,000 more just to get a container of wine here into the U.S. right now. And that's, just one part of the whole transportation piece, for getting wine into our wine stores.
Wow. So you couple that with actually selling the wine in a time when we're hearing more and more about young people not drinking as much, this idea of dry January actually lasting the entire year. What does that mean for the overall business?
Well, you also see customers here on the store, and I was just talking to a lady the other day who was just talking about how much more it costs her to fill up her huge, van that she drives with all her kids in the back. So, everyone here on the store floor is definitely feeling it. I think one good thing, and I was hearing all the stock prices before, but about being a family business is that we can, work with our suppliers and hold those costs. in a lot of instances, we'll split, that transportation cost with our suppliers so we can keep prices here on our store floor family friendly.
And you guys have not yet seen price increases, my understanding is, due to fuel, correct?
Yes, we have not. Here in the wine business, as you started off with the tariffs, that was big last year. And for this year, really no one wants to raise the price of wine right now. And I always look, this is a great new rosé that just came in. It's a new fresh vintage, but we're retailing this under $15. And if I were to go and sell it over $15, what happens to sales is they go down. So you really have to be price sensitive with those barriers there. And we look at it as hopefully a temporary thing, and trying to look at the longer picture.
Is the idea on it with a product like that, and if I'm thinking about margins correctly, that you take a little bit of a hit there, but you get people in the store to buy that, and then they buy other things that don't have that have bigger margins?
Yes, well, and one of the things that I love doing is I'm like a little, wine detective out there, but I love going every year. We go to a wine show either in Paris or in Italy, and we get to meet firsthand with a lot of these multi-generational families who are making unbelievable wine, and we get to bring them back and sell them in our stores. And really, they're wines that over deliver for the price, and we often say they taste like they're twice the price. So really trying to bring not only the price point, but also the story back for our customers, because we think that now more than ever, that's what customers want to hear about.
I'm always amazed, like when you're over in Europe or Paris and you just order, I don't know, just a little wine, nothing big, and it's just great. Like, I feel like over the years, and this industry, like, it just feels like, we keep getting told you don't have to spend a lot of money to get a great bottle of wine.
Yeah, no, you don't. And right here, this is a Corsican rosé that I have, and this is also one of our best sellers. It's a Provence rosé, under $15. A female winemaker. She won the top 100 winemaker. One of the top 100 winemakers in the world. She was awarded a couple years ago. So there's great value out there. You do have to spend time looking for it, but that's what we really strive to do for our customers here on the store floor, as well as educate them.
So let's talk a little bit about the next generation of Stew Leonard's and sort of the timeline for you and your cousin taking over. And also, I'm curious about, with a background in wine and spirits, what you can then do in your approach to the grocery business, a historically low margin business, a very challenging business that, you have to work with the ups and downs of the economy and the macroeconomic environment. What is your plan for Stew Leonard's when you take it over?
Yesterday, all of my cousins and my dad, it was work, but we got to spend the day all together in the city listening to other family businesses talk. And it was a really awesome day. But one of the biggest takeaways I had listening to Jim Perdue speak, and we got to meet him afterwards, and hearing Enterprise as well and Panda Express, they all stick to their core values. So no matter what happens, is sticking to their core values. And when I look back at our business today, I grew up drinking milk from stews, and my kids today, they're also drinking milk from stews, but it's organic. And so if we had 20 years ago tried selling organic milk, it would have been way too expensive to really for our customers at that time. But we've evolved, and so it's kind of just a slow evolution over time. And that's one of the things that always sticks out to me, is that my kids are drinking organic whole milk now.
Blake, I just want to mention, we have a headline crossing from Reuters. SpaceX picks the NASDAQ as its listing venue for its massive upcoming IPO. On that, do you guys ever think about going public?
We've definitely had offers, and we have, offers to either go into partnerships or to be purchased. And it's always something we think about, because in my generation, it went from 4, in my dad's generation now to over 13 of us. And now in the 4th generation, there's over 22 great grandkids. So it's definitely something we always think about, but really what we want, and my cousins and I all just met recently to talk about this, is we really want to keep this a family business and want to continue, the decisions we get to make every day are really, ones that we don't have to rely on anyone else for that. So
listen, so fun to catch up with you. Stay in touch.
Thank you very much.
Especially as we kick off the summer season. Blake Leonard, she's the president of Stew Leonard's Wines and Spirits, joining us out there in Connecticut.
Coming up next, stocks on the move. Once again, a redhead crossing the Bloomberg terminal. According to Reuters, SpaceX picks NASDAQ as its listing venue.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, we are getting ready to head into the last hour of trade on this Friday and also for the week overall. Carol Massar, Tim Stenevec live here at Bloomberg headquarters in New York City. We'll talk about the equity trade because, it's important. Down about 66 on the S&P 500 despite a week where we've had a couple of records, down about 0.9%. We're down almost 1 full percentage point on the NASDAQ 100, 0.9% lower on the Dow Jones Industrial Average. But we've talked a lot about what we've seen in the Treasury trade as we've seen a global bond rout. You've got a 10-year note with yield of 4.59, so we've just seen this move up. 2-year note shorter and 4.07. 4.25 on the 5-year. I know Tom Keene was talking, I think, about the 30-year that has bumped up a lot as well. But you have just seen rates around the world go up on really concerns over the price spike that we've seen, particularly in energy costs.
Yeah, it's just interesting that it's happening today, and it took,
I know.
That's
it's not
something
like it's
that's
new,
notable.
right?
Exactly. Yeah. What happened yesterday or early today that would actually spark this?
Yeah.
I'm looking at the SOX too, Carol. Off its worst levels of the day, down 2.7%.
Yeah.
In the SOX, 30 components, 6 stocks in the SOX are higher, 24 are lower.
Yeah, which is very different from what we've been seeing as of late. I'm Carol Massar, along with Tim Stenevec. Let's get to some stocks on the move for you. With us to do that is Bloomberg News equities reporter Avalon Purnell. She's here in studio. Good to have you here. Let's start with Boeing.
Absolutely. That's ticker BA. It's currently falling about 3.1%. That's after the airplane manufacturers received a smaller than expected order for jets from China. Trump said that China would buy around 200 aircraft, though he later suggested that maybe they'll buy up to 750. The details remain murky, but Melius Research is writing that while China is a large market, maybe it's not as important as it once was for Boeing. And more specifically saying that you can't be 100% sure that you'll even get those jets sold.
Because that's the problem. As George Ferguson pointed out yesterday from our Bloomberg Intelligence team, that has been the challenge with China orders in the past. And you pointed this out yesterday in the newsroom, Carol, a commitment to buy something doesn't necessarily mean that plane will be delivered.
Right. Exactly. Trade tensions are something that he mentioned, also geopolitical. If something happens with Taiwan, all of these things could impact those orders.
Yeah, right? You want to see signs, and make that...
You want that plane to be delivered and that money to be...
Exactly.
I want the deposit. Yeah. I want a big deposit because these things are expensive and it takes years to build them, right? You want to go to Microsoft?
Yeah, let's go to Microsoft.
Yes, that's ticker MSFT, currently up about 3.9%. Biggest intraday leap in about a month. That's after Bill Ackman said that Pershing Square has built a stake in Microsoft. It's really capitalizing on the recent declines in that company's share price. He said that Microsoft's 365 products remain deeply embedded in large companies, which we already know. We use Word, we use Excel, and strong demand for Azure shows that maybe some of those concerns that investors have about Microsoft's growth are likely misplaced. Also worth noting that while Microsoft shares are up, Google's are down a tiny bit. So that's Alphabet's parent company, after he said that he sold Google in a response on Twitter as well.
And it's interesting. Microsoft's down about 12% year to date, right? So, he just is out there kind of endorsing the company, right? He's not pushing for any kinds of changes or board seats or anything like that.
Not yet. Okay. But who knows? That could come later.
Yeah. Sorry, I'm just speculating.
Okay, what's next?
Dexcom, another question of
this is on Carol's list today too.
Is it the number one gainer in the S&P and the NASDAQ 100? It's like all right, tell us the story.
Yes, that's ticker DXCM. Had to bring something from the healthcare world. It's currently up about 5.9%, most intraday since February. That's after activist investor Elliott Management took a stake in the diabetes company and struck a deal to name at least 2 independent directors to their board. Separately, Dexcom also offered a really rosy long-term outlook at its investor day earlier this week. Also worth noting that Dexcom CEO was actually on BTV earlier today.
And said,
he said that customers taking GLP-1s have actually higher utilization of their products, which that's always been a concern for investors of what exactly happens if people are taking GLP-1s. Do they really need these continuous glucose monitors?
Well, they still want to monitor it. Maybe
for those who have diabetes, Absolutely.
They're
Yeah,
trying-
I know people, and these meters are kind of game changers because you have apps and you can constantly monitor, and they've worked really well.
And this company also sees the next opportunity being those people without diabetes who want to monitor their glucose too.
Yeah. Like, I get it. I totally get it.
He was also on our program back in January. He
Yeah.
joined us from CES, the Consumer Electronics Show. Jake Leach, the president and CEO of Dexcom.
No, I mean, it's, you look at the population in the United States, but growing around the world of folks who are dealing with diabetes, and GLP-1 drugs are certainly going to help, but nonetheless, for those who've got it, it's a great way to monitor. So interesting to see. But I was kind of surprised, right, to see such outperformance among all the names in those major averages. Avalon, thank you. Really appreciate it. Avalon Purnell, she's Bloomberg News equities reporter right here in studio. For more conversations, be sure to check out our Stock Movers podcast. 5-minute episodes, big winners, big losers. You can find it on Apple, Spotify, or anywhere you get your podcasts.
Hey, we got a great program coming up next on Bloomberg Business Week Daily. If you are sticking with us on radio, YouTube, and Bloomberg Originals, Joe Doe's going to be joining us because we are talking rare earths. They took, a big part of the backdrop of the China visit was what we're doing with rare earths, what China's doing with rare earths. Well, Bloomberg News out with a great story. The U.S. needs another decade to fix the $1.2 trillion rare earth crisis.
I think about the conversations we've had with folks in that space. And again, it's like a lot of focus, a lot of money, but the needle hasn't moved very far in terms of U.S. production when it comes to rare earths. Stick around, folks. If you're watching on TV, the close coming your way in just a moment. Tim and I continue on radio.
From ABC News, I'm Mike Dubosky. Harvey Weinstein's sexual assault case has ended in a mistrial after a jury could not unanimously decide whether to convict Weinstein of raping Jessica Mann in 2013. ABC's Peter Haralambous.
This was multiple days of deliberation, the jury sending back a note yesterday saying they were having trouble reaching a verdict, and the judge ultimately throwing out the case today after the jury said they could continue to be unable to reach that verdict here.
Weinstein was previously convicted of the crime, but the New York Court of Appeals overturned that verdict. We're learning that Dr. Stephen Cornfield, that lone American who initially tested positive for hantavirus, may not have been infected at all. ABC News medical contributor Dr. Alok Patel says it may have been a false positive.
Dr. Cornfield had 2 PCR tests that were sent from samples in the ship, and one came back negative, and one came back, quote, slightly positive or faint positive line. So out of an abundance of caution, he was placed in the biocontainment unit and then was closely monitored for any progression of symptoms, and then follow-up tests came back in negatives.
Meanwhile, the CDC now says it's monitoring an Ebola outbreak in the Democratic Republic of Congo. ABC News has learned President Trump plans to drop his $10 billion lawsuit against the IRS. In exchange, the government would create a fund to pay out alleged victims of government weaponization.
Talk of a $1.7 billion fund to pay out claims to those who say they were unfairly targeted by the Biden administration has outraged congressional Democrats.
It's utterly fraudulent what they're doing there.
It's another grift by the President of the United States.
I mean, it's outright corruption.
Pennsylvania Republican Brian Fitzpatrick says he opposes the Secret Service's request for $1 billion, a portion of which would be used to secure the new White House ballroom.
Shows a lack of priorities.
His opposition could prove key if Democrats stick together. Stephen Portnoy, ABC News, Washington.
You're listening to ABC News. An Iraqi national has been detained in New York after newly unsealed court documents link him to nearly 20 reported terror attacks across Europe and Canada. ABC's Chuck Sievertson.
An Iraqi national firebombed a Bank of New York Mellon in Amsterdam, tried to set off homemade bombs at the Bank of America in Paris, coordinated an attack against Jewish institutions in the U.S., and stabbed 2 people in London, all to stop the U.S. and Israel from waging war on Iran. 18 attacks total, says a criminal complaint unsealed Friday in New York. It calls Mohammed Bakir Saad Dawood al-Sadi a high-level member of Kataib Hezbollah with close ties to the Iranian military's Revolutionary Guard and Hezbollah.
More questions for FBI Director Kash Patel following an Associated Press report that he took part in a snorkeling trip around the sunken USS Arizona during an official trip to Hawaii last summer. More from ABC's Chief Justice correspondent Pierre Thomas.
The White House is standing by Patel, calling him a critical member of the team. The FBI did not deny that the snorkeling event took place, calling it a historical tour to honor our heroes who died on the USS Arizona, not a party.
The USS Arizona War Memorial Site honors the more than 900 U.S. sailors and Marines killed when Japan bombed Pearl Harbor in 1941. And today marks the last day for Jerome Powell as chairman of the Federal Reserve, but he has said he'll stay on at the central bank through 2028 as Fed governor. Mike Dubusky, ABC News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are 55 minutes away from the closing bell, getting ready to wrap up the trade on this Friday, May 15th, also for the week overall. You've got stocks, to be fair, they're down across the board, just down about 1% on the NASDAQ 100. We've been lower earlier in the session, still down about 0.9%, Tim, on the S&P 500. So probably no record today, although we've seen that throughout the week.
You never know what can happen in the next 60 minutes.
That's true.
Hey, look, I'm going back to the stocks once again, Carol. Still 24 names lower in the stocks, 6 higher today. ARM Holdings down 8%, Intel down 5.5%. But look, to be fair, this is an index that this year is up more than 64%. So a little bit of a give back.
I know. I keep joking. If I just threw everything all in on the stocks this year.
Why didn't you? That's what John Authors would call his hindsight hedge fund.
Yes, exactly.
That he does every year.
I know.
Yeah.
You just got to keep just moving ahead. Coming ahead in the next 2 hours, we're going to talk about rare earths. Tim and I have had a couple of guests actually this week in the rare earth space. So the U.S., according to this great deep dive that our team has done, the U.S. needs another decade to fix the $1.2 trillion rare earth crisis. So Joe Doe knows this space like no other. Every time we have a guest, we're like, Joe, what do we ask? So he's sitting down. We're going to talk to him in just a moment.
Also, we got planes, trains, automobiles, and buses.
Buses.
Yeah, the CEO of Flix North America, the parent company of Flixbus and Greyhound, is going to be stopping by. Questions about demand for intracity busing and intracity buses in the era of a decline of Spirit Airlines, an increase in gas prices, with things getting more expensive.
My daughter pops on a bus from Boston to come up to New York or come down. Yeah. I'll get it right someday. Hey, and the most compelling new watches of 2026, only as Chris Rouser can do. Of course, of the Bloomberg Pursuits team, he's going to stop by a little bit later on.
All that and more over the next 2 hours right here on Bloomberg Business Week Daily. First up, though, check out the day's trade and top business stories. Charlie Pellet standing by. Hey, Charlie.
Hey, thank you very much. Do want to begin with a developing business story. Just getting word that SpaceX has tapped NASDAQ as the listing venue for its long-awaited IPO. This is according to a Reuters report. Elon Musk's rocket, satellite, and AI company aims to price its offering as early as June 11th to list on June 12th. Mark the calendar. Ticker SPCX. This according, again, to Reuters. Stocks lower across the board. Inflation jitters lifting bond yields atop topic we've been covering right here on Bloomberg Business Week Daily. S&P right now down 75 at 74.26. This time yesterday, we were trading above 7,500, on track for a record close, down now by 1%. We've got the Dow Industrials down 488 now, lower by 1%. NASDAQ Composite Index down 308 for NASDAQ, a drop right now of 1.2%. The SOX, the Philadelphia Semiconductor Stock Index, Carroll's all in, down today by 3%. The VIX just above 18, the 10-year 4.59% with a 2-year 4.07%. Spot gold right now, $45.54 the ounce, down 2.1%. WTI, rising oil prices a major concern as well. Right now, WTI is at 105.30, up by 4.1%. Barrel of Brent right now, 109.22 for Brent crude. That is a gain there of 3.3%. A day after its 68% surge in the first day of trading, Cerebras Systems giving back some of those gains. Right now, Cerebras trading lower by 5.9%. And round 2 of the PGA Championship in Newtown in Pennsylvania, at last check, 3-way tie at the top. Alex Smalley of the U.S., Aldrich Pulgeter of South Africa, and Australia's Min Woo Lee, all at 4 under par. Recapping S&P down by 1%. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. Well, as we mentioned, we talked rare earths a lot this week. We were joined by 2 CEOs of rare earths companies, Lippy Sternheim of Realloys, Randall Atkins of Ramaco Resources. And for good reason, rare earths loomed large in the background of President Trump's visit to China. For the past year, the president has waged a campaign to break America's dependence on the rare earths that remain Chinese leader Xi Jinping's unbeatable leverage over the global economy. Remember, it was just last November that President Trump pledged ending U.S. reliance on rare earths would take just 18 months.
Yeah, easy peasy.
Not so easy. Joe Doe is Bloomberg News corporate and economic statecraft reporter. He joins us here in the Bloomberg Interactive Brokers studio. The rare earths that matter so much to the U.S. still remain out of reach. Why?
Why do they still remain out of reach? The main reason is it takes 20 years to develop a mine from the moment you find a deposit to the time that it's actually being produced commercially. And also the idea that if you're doing all these mines, you've been doing the exploration for a number of years and finding where all the deposits are. And then this is also a pretty, mature industry, and it's mostly been mature and done by China for 20, 30 years. So if you suddenly decide yesterday that you want to equal a behemoth of a commercial industry, probably impossible to do it in 18 months. And to be fair, I would say the administration does seem to understand that it's going to take more than 18 months. But you're right. There are certain time limits that our own Pentagon have put on to ourselves. And I could go on and on, but it's a lot.
It's a lot. All right. And we've not, even with the money that has come from the government or the contracts and the focus and the attention, we haven't really made any, or what progress, if anything, have we made so far?
We've put money out the door. Yeah. We've put promises out the door. Those are important because even the promise of government support does attract private investment. And we've seen it across the supply chain, right? We call it a mine to magnet supply chain. That's how the U.S. is phrasing it. The mine being obvious. You pull rare earths out of the ground. You then separate them. Those separated materials effectively are then combined in a chemical way to create a magnet, a high-powered magnet. And the high-powered magnet is what goes into movable objects, basically. So electric motors, wind turbines, and data centers. But that's really complex, right? This is not just like a widget, if you will.
You cover statecraft, and your beat went from metals and mining to statecraft, which was a very natural development, because if we think about the way that statecraft is being practiced right now, we could look at the Strait of Hormuz and the way Iran is controlling that. That's a big part of that, and that has to do with natural resources.
Yeah, I think the same thing. Like, is this China's Strait of Hormuz?
That's exactly where I was going.
Their control.
Yeah. I mean, listen, we put together this lovely documentary that just went out today, along with this story that you guys were mentioning.
Congratulations.
Which was terrific. Our docs team is incredible. But like one of the things that we talk about in that story is like, it's incorrect to look at this as if the United States is going to come in and just take over and compete with China on the same level and the same volume. The win is 5 years from now, 10 years from now, the United States, Japan, South Korea, Spain, France, the UK are all on some level, and Australia and others, producing rare earths and or permanent magnets. Even if that's a 1%, 2%, 3%, 4% slice, that's successful. Because right now, the whole pie is China. And that's not just like my opinion, right? This is, you talk to the guys you talked to this week, right? Yeah. Realloy and Ramaco Resources. You talk to the guys who are in this space. They have been saying that for years. They're like, Joe, the point is, like, if we can look 10 years from now and say, like, well, we got 1-2%, that's huge. So understanding what success is does matter here. And I do think it's important to say that there are many people in the government, in the Trump administration, that do get that they're not sitting there behind the scenes saying, well, we need to be 90% of the market next year.
Right. But God, there's so many questions. I know you've talked with us. How did we get there? How did we just give it away?
It's dirty. It's not a very profitable industry.
Yeah.
I think those are kind of the main 2 points, right? So in the 1980s, the United States is still the dominant producer of permanent magnets. But like, you know, I mean, listen, let me put it this way. Talking to various people for months and months and months, if you look at the real supply chain of going from the rare earth out of the ground to the magnet, the midstream, right, where you do metallization and oxidation, it's like, it's just a part of the process, right? Like those things standalone aren't like these massive profit drivers. And even then, when you get to the permanent magnet, like if you talk to OEMs, like big guys, big names that everybody's heard of, and you ask them like, well, why, like, would you buy from an American or from an Australian? They're like, yeah, at the right price. But like, you know, we're procurement officers. Only so much of our procurement goes toward permanent magnets because you know what else we have to procure? Like real things, big things. So it's great that the Chinese make these at low cost because that's like a small part of our budget. And it's like, if you start telling that to like any of these companies are saying, we're coming in to do this, what they are also admitting to themselves is we're coming in to do a business that has small profit margins.
Why would they do it then? Like, I mean, to be realistic then, is this, I understand it from a national security perspective.
Yes. Like, why would American companies do it?
Yeah. Or is it going to have to be
guaranteed contracts or rise in tension between these two countries?
I get that, but then does it have to be supported by the government in some ongoing way because it is such a great business?
I think probably so, right? Like this is where you don't find too much disagreement among, let's just call it Republicans and Democrats, right? They're aligned in the idea that like, yeah, you can't have a single source supply chain on something that is absolutely essential to modern technology. They do agree with that. Like the example I use often, because I covered steel for a long time, right? It just so happens that 65% of the steel consumed in the United States on a per annum basis is made in the United States. Now, why is that? Well, a big part is steel is ubiquitous, right? Another part is steel is heavy. It costs a lot of money to move it everywhere. So you want the plants as close to possible to all the construction sites, which are everywhere in the United States. To some degree, that is true of what we're talking about here, right? If we're talking the data center boom that you guys are talking about every day, the valuations that you're seeing come up on the Bloomberg terminal on a daily basis, the number of permanent magnets that are needed for those is massive. I mean, like one person put it to me, they're like, if you look at this one data center in Texas, this one data center in Texas is the equivalent of half of demand in the United States of America for permanent magnets.
Well, why couldn't, they say necessity is the mother of invention. You get 10 years out from this, very briefly, companies have said, well, we can't get these rare earths from China. We have to find a new way to do this stuff. Can that happen?
Well, I think that's where we're at right now, right? Yeah. It's like, it is the idea that you're starting from scratch on an industry. That's the thing. In an industry that already has a dominant industrial size supplier, right? Yeah. And that dominant industrial size supplier is saying to the world, without actually saying it, every time you're about to get out of the starting gates to start a business, we're going to flood the market to crush you.
Yeah. Thanks, but no thanks. You know, I'm just thinking coming back from Milken, everybody talked AI and data centers. No one talked really, at least in my conversations, about investing in rare earth mining companies.
You got to go to a different conference.
Or doing those
Carol.
businesses. I guess so, but it's just interesting. Everybody understands the supply chain, the demand, the power, but this is a part of it. Joe Doe, why are you so smart? He's amazing. He's Bloomberg News corporate and economic statecraft reporter. We are so lucky to have him here at Bloomberg. We're back in a moment.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Down Friday, pulling back from records. We are on track, however, for another winning week. That will be 7 in a row for the S&P 500 index on the week, looking at a gain right now of just about 0.6%. So what's happening today? We are seeing a sell-off. Stocks are falling as inflation jitters lift bond yields. 10-year 4.59%. S&P at 74.25, down now by 76, drop there of 1%. pulling back from yesterday's record. Indeed, yesterday we had a close above 7,500 for the first time ever. The Dow now back below 50K, 49,604 on the Dow, down 0.9%. NASDAQ and the NASDAQ 100 index also pulling back from a record. Right now, the NASDAQ Composite Index is down by 1.2%. The SOX down 3.1% today with the VIX right at 18. 10-year yield 4.59%. The 2-year 4.08% on the 2-year with the 30-year at 5.12%. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. Again, the S&P 500 index trading lower by 1%. Briefly, SpaceX has tapped NASDAQ as the listing venue for its long-awaited IPO, that according to Reuters. All of this set to price on June 11th as early as, and to actually list on June 12th. The ticker symbol, we're learning, SPCX. Golf, round 2 of the PGA Championship in Newtown, Pennsylvania. At last check, Aldrich Polgieter of South Africa is at the top of the leaderboard, 5 under par. Polgieter, by the way, 21 years old. Carol and Tim, that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. How about this?
Okay.
A bus company with 1 million followers on TikTok?
Wait, what? All right.
If you're listening on radio, it's like a TikTok dancing person with a bus. There's some lips on the bus. And the bus is just going everywhere in the world. It's a green bus. It's a Flix bus, Carol.
Can I just tell you, one of our producers, Cece and I, she discovered this TikTok account, and we just went down a rabbit hole. There it is, the bus continuing to dance. And I'm just going to say, we were laughing.
This is why you can't get TikTok on your phone, Carol.
This is why what?
You can't get TikTok because you would be in that rabbit hole.
Oh my
forever.
God, we were laughing so hard, and it's their TikTok presence is really entertaining.
Well, if you're Flixbus, you do have 1 million followers on TikTok. The company operates in dozens of countries in Europe, North America, South America, Asia, and Australia. Here in North America, they own Greyhound and Flixbus. Back with us is Kai Boyson, CEO of Flix North America. He joins us from Dallas. Kai, it's been almost 2 years since we last spoke. It's good to have you back on the program. It's a very different environment than when you last joined us. Flights are more expensive. Jet fuel is there's shortage of jet fuel in parts of the world. Here in the U.S., gas is more expensive. How is your business right now?
Our business is strong. I mean, intercity bus is the most cost-effective option by far. I mean, if you just look at New York City and DC distance, and people can travel on bus as a fraction of the railways or airlines cost. Budget clearly matters. And fuel increase also drive shift demand historically from personal cars to intercity bus. And that's what we're seeing it right now.
You know, it's interesting. I have a daughter who is up in Boston and who has taken Amtrak several times, but she's also increasingly taking the bus. It's less expensive. I think maybe less delays she's seen. But it's interesting. And I think she was a little bit surprised how much she liked taking a bus.
That's spot on. I mean, what we see is Generation Z are less likely to have a driving license. They like their comfort and convenience. And spot on, reliability plays an important part of the equation right now. And we have increased our reliability massively. I mean, 97% of the time, we depart on time, within scheduled time, and 85% we arrive on time. That's second to none and way better than airlines and railways. So what we see is a continued increase in the number of passengers on our buses year after year.
I'm wondering about the split between Flixbus in the US and Greyhound, and sort of how you position those two brands and how you're positioning the Greyhound brand, which is seen, I think, by a lot of people as a real legacy brand in an environment where there are some newer upstarts.
I mean, Flixbus and Greyhound are two very strong brands for us. Approximately more than 40% of our business is in Flixbus, and more than 50% is in Greyhound. And what we do mostly is Flixbus really strong in the East Coast and the West Coast, shorter distances, and where Greyhound comes in, it connects multiple states together and becomes the pipe for the long distance travel.
Tell us a little bit about the demand that you're seeing. I mean, has it increased year over year? What moves the needle? And I know some of what we've been thinking about here in the newsroom is like when you saw the Spirit shut down, did you guys see an uptick in business?
Oh, yes, significant increase in demand with the Spirit shutdown. We saw over that weekend more than 30% increase in ridership on overlapping lines. I think we have more than 120 overlapping lines with Spirit. So that was an opportunity for many travelers to experience a reliable and comfortable service. So intercity bus is clearly a strong alternative when there is a kind of disruption with the airports, airways, airlines, or railways, or especially when there's a peak travel period. We are a very strong alternative to them.
What's the sweet spot, though, for somebody who makes the choice, okay, I'm not going to fly, I'm actually going to take a bus instead? It works for something like New York to Washington or New York to Boston, for example. It doesn't work for New York to California.
It depends what you're looking for in that instance. I mean, if our strongest competition is when it comes to the travel time is up to 12 hours. So that's where we're really strong versus alternative modes of transport.
So what does that look like in the US in terms of city to city?
I mean, that covers the vast majority of Northeast lines, HVs, all the city pairs mostly. It covers also multiple, I mean, if you look at the Southeast, we cover majority of cities there. If you want to move from one region to another and you have the time, then what we offer is reliable service, clearly on-time performance is stellar. And the second one is comfortable service. Your first-class seat, you rest and relaxed, and you've got Wi-Fi all the way through, a strong Wi-Fi network. And on the way, you can see and enjoy the United States, the beautiful scenery, where possible.
Kai, coming into you, we really were kind of surprised. Our producer, Cece, who fell into your TikTok account and kind of shocked that you guys have 1 million followers. I am curious, tell us about what goes into what you guys program, and has that every time I see the dancing bus, it does make me laugh. What has that done in moving the needle in terms of bringing in younger customers? And I am curious about your, the demographics of who are getting on buses.
I mean, we welcome all walks of life, and we've got everybody from every segment. But you're right. We attract disproportionately young people, Generation Z mostly, coming on our buses and enjoying. And how we attract them, I mean, number one is clearly being on time, reliable service. They want to make sure that they don't have any surprises like they see at the airports, long queues or delays and cancellations. That's number one. Reliability is really important. Connecting more locations. I mean, we connect more than 1,800 stops in this region, and that's far more than airlines as well as railways combined. And not only cities, we reach the rural communities. So it's possible for anybody to hop on a bus and travel all the way to its final destination without changing actually mode of travel. So what happens that with that on our mind, that what we see is we continue to grow lines, add new lines to our network. I mean, just in the course of last 2 months, we added more than 25 lines to our network, new lines, to make sure that our network is growing and we are meeting the demand out there. So the growth is out there for us with the reliable service.
But the demographics, who's getting on the bus? Is it increasingly a younger population? Is it a mixture? Has it really not changed in the last few years?
I mean, one of the bigger segments for us is clearly young segments, students, university students. That's where we attract, but we also attract the retirees who got the time and like to travel on a reliable platform. And some people prefer not to fly. They come to us as well. So all walks of life, we welcome, and we have kind of presence from all walks of life. But you're right, Generation Z and students are one of our biggest segments.
We're speaking with Kai Boysen of Flix North America, CEO, joins us from Dallas. Hey, Kai, the areas of innovation for Flix busted for Greyhound. What are they? You mentioned Wi-Fi. Is it Starlink? What? I mean, I guess you don't even need Starlink. You could use cellular. But like, you know, how fast is it? Where can you innovate to continue to attract younger demographics?
I mean, obviously, we work with one of the prominent telecommunications service providers here in the United States, and we're very happy with the service.
So it would be like, that would be like a Verizon, AT&T, a T-Mobile type of company?
Yes, correct. One of those, yes.
Okay.
And in addition, we also do real-time actually updates to our services, just pre-onboarding, during onboard service, and after offboarding. What is really critical is to make sure that our travelers, our passengers are up to speed as to where we are, when we're going to arrive, if there's any delay. So it's really critical. Our platform enables that massively. And also not only with the passengers, with the bus operator, all coming together, making sure that we provide a seamless experience. I mean, our motto is kind of happy experience, happy rider experience always comes back with incremental actual revenue for us. So we're going the extra mile to make sure that each and everybody is happy with that experience. And that comes with reliability, comfortability, and obviously cost effectiveness. Bringing that all together with many connections will make that difference. And innovation for us is not only kind of once we've got the customer on board and that's done and dusted. No, innovation is a continuous process. We always look out, what are the best search options available? What are the best pairs that we can bring so that we can provide the option to our travelers to travel from, let's say, from a distance, that it needs to actually connect with multiple buses. So it's a continuous operation, and we leverage AI in that way strongly to find the optimal service.
Kai, before you go, we do want to squeeze in, we got about 40 seconds left here. Are you seeing any bookings around the World Cup, especially as we've heard other options are really expensive? Just quickly.
Okay. Yes, we're seeing a strong demand already with the peak. And we know that World Cup is a huge large-scale event, and it's going to make a difference. Ridership is increasing. Early bookings, especially in the Northeast. We cover all 16 cities. So this is a large-scale event, and it's going to put pressure on the infrastructure for cities. And what we do is we increase, where we see an uptick in demand, we increase our schedules. So we help reduce the pressure on the city infrastructure, and we work very collaboratively with the cities and local transit authorities to make sure the fan experience is superb.
All right, we got to leave it there. Hey, have a great weekend, Kai. Thank you so much for carving out time for Tim and me. Kai Boyson, he is CEO of Flix North America, joining us on this Friday.
Coming up next, we are talking energy. The CEO of Enbridge joining us next on Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. A lot of red on the screen. We've got 20 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ. They are all very much in the red right now. But let's head over to the First Word breaking news desk for today's afternoon call. Here she is, Jordan Fitzgerald.
Thanks, Charlie. The main U.S. averages are down but off their lows. The S&P cash is down about 1%, with the NASDAQ down about 1.2%. Taking a look at the Dow, Salesforce, Microsoft, and Cisco lead, with Caterpillar, Nvidia, and Boeing declining. SpaceX is set to IPO as soon as June 11th, according to a Reuters report. And Ford shares are down, partially offsetting 21% of gains that the stock notched over Wednesday and Thursday. Energy is set to be the only S&P sector to close in the green today, as oil futures climb on a lack of positive news out of China regarding opening the Strait of Hormuz. Wrapping things up, gold and Bitcoin are in the red, and yields are climbing. I'm Jordan Fitzgerald from the First Word Breaking News Desk. All yours, Charlie.
Hi, thank you very much, Jordan. Have a great weekend. And to hear live breaking news over your Bloomberg-type squawk, SQUA on your Bloomberg terminal. A golf update. Round 2 of the PGA Championship underway in Newtown, Pennsylvania. We got you covered at last check. Aldrich Polgater of South Africa sits atop the leaderboard at 5 under par. And an invitation for our listeners in New York, Boston, and Washington, D.C. We'll bring you live play-by-play coverage of the PGA Championship starting right after the closing bell here on Bloomberg Radio. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Daddy, can I drive?
Yeah, sure, why not?
Let's get behind the wheel.
Do I look like I drive a minivan?
Shut up and drive.
Don't drive angry. Don't drive angry.
I'll drive. Shotgun.
This is the drive to the close
If you had access to a car like this, would you take it back right away?
on Bloomberg Radio.
All right, everybody, we are under 18 minutes until we wrap up trading on this Friday and for the week overall. Carol Master, Tim Stanovic, live in our Bloomberg Interactive Broker studio. We did see oil climbing today as President Donald Trump left a meeting with Chinese counterpart Xi Jinping without any meaningful progress on increasing energy flows through the Strait of Hormuz. Traders, though, focused on the lack of concrete takeaways from that meeting, particularly as it relates to meaningful pressure on Iran. This is according to a senior energy trader at CIBC Private Wealth Group. This is, I have to say, at this moment in time, what everybody is still very focused on.
The perfect time for us to have Greg Ebel on the program. He's the CEO of Enbridge. It's got a market cap of about 120 billion US. Its shares are traded in Toronto. They're up this year more than 15%, and it is one of the largest energy infrastructure companies in North America. Welcome. How are you?
Great. Thanks for having me.
So, are you great? What are these higher prices?
Well, you know, for us, consider us like the FedEx or the UPS of the energy business. So whether the prices are high or low, I don't make any more money, but I like lots of volume and carrying it along.
But the concern is demand destruction in
sure.
environments with prices such as these. So that's why I asked.
Yeah. So
because if demand goes down,
then
people
aren't
the
moving
FedEx
as
and
many
UPS
products.
won't be needed as much.
True. Fortunately, the way we structure our pipelines is we get paid often for 10, 15 years before we even build it. So we're going to get that fee whether it's used or not. But I like my customers to make money, as you could imagine, and I like their product to flow. But I don't want it to be so expensive that their customers get grumpy about the price, right? So I'm hopeful that we'll get back to more normal prices, whatever that may be defined as.
Well, hopeful for when?
Well, as soon as the conflict is over or the straits are open, and you were talking about that a little bit earlier, we'll have to see how that shakes out. But look, I'm optimistic that that'll be the case. Then there'll probably be several months of normalization, if you will. So, you know, look, I wouldn't be surprised to see these prices stay high for several months after the conflict. But ultimately, and you can see this in the backwardation of the curve, right? Not to get too
no, we talk about this a lot.
Hey, you're at Bloomberg. Bloomberg, you can do whatever you want when it comes to backwardation of the curve.
Yeah, so you're down even sub 90 if you go out a few months, which says something. I do think, though, there's probably a risk premium of $8 or $10 now on the base of oil. So you can pick your base price. Is that 50 or 60 or 70, which now means it's more like 70 or 80. We'll see, but I would think before people go back in the water, no pun intended, they'll have that.
If we become more of an exporter of oil to Asia, is that a good thing for you guys?
Yes, I mean a good thing in multiple ways. I mean, first of all, that may mean that we'll bring even more to the from Canada down to the United States. The West Coast,
because we get a lot of our oil from Canada.
5 million barrels a day. It's absolutely critical, and it allows us on the Gulf Coast of the United States to project power. The United States government projects power not through military but through energy, which I think we see that being proven writ large today. So as the Canadian oil comes down, it's processed, used throughout the United States. Much of the other oil produced in the United States, lighter oil, for example, out of the Permian, is shipped out of an export facility, a number of export facilities, but the largest one, you can imagine who owns that, Enbridge, the largest one, it moves about 30% of the exports out of Corpus. That's an opportunity to really show power. And then now kind of, hopefully there's some momentum change in Canada where maybe there'll be pipelines built to the west coast of Canada and the opportunity for more production there, which could, I think it's a little early, but it could lead to opportunity for companies like Enbridge.
Are you seeing anything move? We've talked about the strained relationship between the United States and Canada, which is kind of crazy considering the history, and this has been one of our very trusted neighbors. But are you seeing signs that is there something you're seeing that the headlines aren't showing about that relationship? Has the oil slowed? Like, what do we need to know?
Well, the oil hasn't slowed, and the relationship on energy has only grown. So I think one of the things where cooler heads have prevailed, and look, the two countries have, as you say, a storied history together, have been great partners right from the get-go. You have never seen the discussion of tariffs on oil or gas from Canada to the United States, and vice versa. So I think the leaders, whether
because it would cripple the U.S.
It would not be great,
but not great.
But if you banned it from Canada, it would not be great from Canada's perspective either, because its number one market is the United States by far. Very little at this point in time goes off the West Coast or any other way. So it's a lose-lose, and I think the leaders recognize that. So that's a positive.
Given what has happened with energy prices this year, is it easier to navigate the politics of pipelines?
No.
Not at all.
No. Look, there are three factors now. It used to be people were asking you what color of molecule or electron you had. Nobody's asking that anymore, right? They're asking how quickly can you get the energy I need, and why is that? Energy security, energy reliability, and the number one issue in politicians' mind, affordability. So, building more pipelines, building more energy infrastructure of all kinds is critical to that affordability. But it doesn't make it any less complex. I flew into Cisco, Texas the other day to open a 400 megawatt solar facility, right? Most of our business is oil and gas, but we also do renewables. And as I flew in, pump jacks were going with oil, filling tanks, windmills were there, solar were there. There were guys with cowboy hats and there were guys with French cuffs, men and women, union, non-unionized. And I think it's a recognition of we need it all.
Well, are renewables going to grow faster long term than oil and gas?
Well, it starts from a much smaller base.
Right.
So I think they're all going to grow. We need it all. If anything's been proven in the last few years, those economies that it went entirely one way or the other are hurting big time. Look at Europe, right? A deindustrialization of Europe, and those that are only using, say, coal only are finding some severe air issues, if you will, right? The United States, North America, has always had a bit of an all-of-the-above process, and, that swings and moves around with different politicians, but ultimately, right across, red states, blue states, you find us using everything.
But it's still tough, the pipelines.
Tough.
There's a lot of time we've seen
Very
it, certainly
tough.
in this area and just around, right, that you do get pushback. Just got about 20 seconds. I mean, that is part of the...
It is a big challenge, but
it.
I'm being asked by more governors who didn't want to talk to me before, particularly in places like the Northeast, which you're paying some of the most expensive gas in the world. You shouldn't be. And the only way to solve that is through pipelines. So those governors want to talk to me.
I know. We're a gas house, man. My husband's like, shut off the lights, do this. I'm like, all right, what am I living with my dad? No, I'm just kidding. Greg Ebel, this was really entertaining and interesting. He is the CEO, of course, of Enbridge, joining us right here in studio. We're back in a moment. Counting you down.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody. Is my mic up?
Yeah, your mic's up. My chair is not
Bueller?
up. That's the
Bueller?
problem.
We're just like falling. My
There we
hair's
go.
falling. Like, I don't know. It's been that kind of a week. Like, Tim, you okay over there? You guys are seeing how the sausage is made.
Gotta get my chair set. Now I'm good. Now I'm good.
Let's talk about what we love to talk about here in New
Trains?
York. Everybody loves, it's always, you get to the newsroom and it's like, man, that ride in. What kind of delays? We all love to talk about
That's
our
why I
ride
take
in.
a helicopter.
Yeah, well, some of
Not
us are
everybody can
luckier
do
than
that.
others.
Not
Tim
everyone can do
Stenovec.
that. I know.
I just, what do they call it? Teleport?
Transport?
What did they do in Star Trek?
They call it New Jersey Transit. That's what they call it for
I
you,
dream of
Carol.
that day where you just close
Actually,
your
no,
eyes.
you're not. You're Path Train. Is that New Jersey Transit? It is. Yeah. Is it? I don't know. Or is that
I don't know who owns it.
Charlie will tell us.
Yeah, Charlie will help.
Well, New Jersey Transit and the Long Island Railroad. Maybe it's Port Authority.
Yeah, maybe it's Port Authority.
Yeah. I don't know.
Here. Hey,
So this is off to a great start. New Jersey Transit and the Long Island Railroad are operating with disrupted service to and from New York City. On Friday, crews are working to repair damage from a fire on the tracks near Penn Station that occurred on Thursday. New Jersey Transit warned commuters that Midtown direct train service is being diverted through Hoboken until the end of the day on Friday. The commuter lines, rail tickets, and passes are being cross-honored by New Jersey Transit and private bus carriers, as well as several stations along the Port Authority of New York and New Jersey's PATH trains. I was on a subway a few years ago that got disrupted due to a track fire, and I was in the front car, and I could see the tracks.
And the fire?
On fire.
Oh my gosh.
Or see the fire on the tracks, rather. And we had to actually walk through the subway tunnel to evacuate the train car.
So they opened the door and then you had to get out on the side?
Yeah.
That must have been fun.
I wouldn't say it was fun. I was really late to come in here. Okay. But we didn't have to walk very far.
How narrow was the walk? Was it
it was a little ledge that we walked
right?
back to the subway platform behind us. Yeah.
All right. Yeah, it's never good. I mean, it takes just a little.
We didn't have to walk on the tracks. We walked on this ledge above the tracks.
Oh, okay.
On the wall.
Okay. Yeah. Right.
Because you don't want to get near that third rail.
Nope, never go by the third rail. No, it doesn't take much, right? I mean, a fire is not a little thing either, though.
But that's why they say don't throw trash on the tracks, because that is what leads to train fires.
And everybody listens.
Yes.
That's a no. All right, so that's coming at, God, is there anything upbeat?
Yeah, how about NVIDIA billionaire donating $175 million for a new medical school? We're talking about Mark Stevens. He's an NVIDIA director. He and his wife are donating $175 million to help build the first new medical school in the San Francisco Bay Area in more than a century.
I think that's really interesting. The school will be at the forefront of applying AI technology to healthcare delivery, according to Mark Stevens, and will enroll about 120 students per class after completing a multi-year accreditation process. So, boy, AI and technology. Gotta love it, right?
Stevens first joined NVIDIA's board back in 1993. It followed an investment from his former venture firm, Sequoia Capital. His early bet on the chipmaker has pushed his own net worth to $13.9 billion. That's according to the Bloomberg Billionaires Index. NVIDIA is a company that's worth about $5.5 trillion now. The next round number higher, Carol, a $6 trillion NVIDIA.
I wonder, what was that original investment? Did you say what it was? We don't know.
No, it just said his early bet on the chipmaker has pushed his net worth to $13.9 billion.
Remember what we were saying? Just tell your kids, find a good startup. But you can't always. You can't always.
Yeah, early 1990s. Go invest in NVIDIA.
Yeah.
That would be
right.
Buy
the socks, Tim. Buy the socks.
Thanks, Carol.
I'm gonna get T-shirts made up. Listen, what goes up also goes down. We know that. Nothing goes up forever. Although, look at
what.
We've talked about this. The market, it's an advantage for everyone to just see it to keep going higher.
If you're long the market.
If you're long the market. But it's
there are two sides to every trade.
It's higher than it was 2 years. I don't know what our point is. I know what our point is. We're counting you down to the close on this Friday, getting ready to wrap up the trade. Folks, just got about 2.5 minutes to go. We're going to head over to our TV colleagues. Isabel in for Romaine, Isabel Lee, and of course, Katie Greifeld is there. We're going to head over there. The closing bell starts now.
On this Friday, full market coverage right here on Bloomberg. It starts with a global simulcast right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day on this Friday afternoon, Katie Greifeld and Isabel Lee in for Romaine Bostick. And here to help take us through the closing bell, it's a global simulcast. We're joined now by Carol Massar and Tim Stenovic. We bring together all of our various audiences to talk about this drawdown in the S&P 500, Carol. We were just discussing whether or not this was sort of a delayed reaction to all of the hot inflation prints that we've gotten this week.
Tim has been, you've been saying over and over, it's why today did all of a sudden equities decide to react?
Or why did bonds decide to react today?
The global bond market, right? Why today did they catch up with the news?
I mean, maybe oil is, a little part of the story, but we've seen these numbers before. Brent contracts to $109 a barrel.
Is it because nothing came out of the U.S.-China?
WTI, $105.60 a barrel.
I mean, you could say maybe it's Friday. Maybe people don't want to hold risk into the weekend, but certainly we've seen plenty of Fridays where that isn't the case, but certainly some sheen coming off this rally, Isabel.
Our guest earlier just said maybe people are waking up to the jet lag, so maybe there is that. And we had a note just come in minutes ago from Keith Lerner saying that this is a Teflon market. I mean, there are few risks starting to stick, but maybe overall people are still optimistic. But yeah, Maybe they're just realizing, and they decided to react once and for all.
Well, when bond yields start to move up, you start looking against that against other asset classes or investments, or what you get in terms of a yield on the S&P 500. You start to, kind of make these comparisons. So we'll see what investors do.
Absolutely. We'll see, if we get any truth socials, too, from the president. We know that he has cared about the bond market in his second term, but crickets so far. Meanwhile, we take a look at how we're closing on this Friday afternoon. The S&P 500 looks like we're going to finish about 1.2% lower. Remember this time yesterday we were talking about 7,500 on the big index. You can see that's closer to 7,400 today. The NASDAQ also down by about 1.5%. The Dow down as well. The little guys also taking it on the chin as well, with the Russell 2000 firmly in the red, Carol.
All right, let's go back to the S&P 500. Just doing a refresh here on my Bloomberg. Most names in the index lower today. 360 names in the S&P 500, guys, losing ground on this Friday. 141 to the upside. And Isabel, you had 2 unchanged.
Looking at the IMAP, it's mostly red, but you see pockets of green energy up by around 0.7%, but the rest is really down. Tech is down by nearly 2%. Materials down by nearly 3%. Health is also down by 1%, and the list goes on, but definitely mostly red there on your screen.
Yeah, a ton of red there. All right, so let's go to some of the gainers in today's session, and I'm going to go to the number 1 gainer in the S&P and the NASDAQ 100 today, and that is Dexcom. Ticker is DXCM. That's stock up at its highs more than 9% today, but still finishing with a gain of about 6.5% for the Friday trade. This is after the maker of continuous glucose monitoring devices gave a long-term growth outlook at its investor day that impressed analysts. You also had the activist investor Elliott Investment Management taking a stake in the company and struck a settlement that will put 2 independent directors on the board. That deal stipulates the 2 will collaborate to appoint those 2 new directors who will add board expertise in medical technologies and operations to help the company scale. So keep in mind, a little perspective here. The market cap for this company peaked above $63 billion back in 2021. It's declined since then and has about a $23 billion market cap today. And we've seen it cut its revenue outlook in recent years, citing some execution problems. We also saw a new CEO take over in January, the former CEO becoming executive chair. So they've had a lot going on. But nonetheless, this was a much more bullish day for Dexcom in today's session. Let's flip it on over to, those glucose monitors. I want to credit my co-host, who's just brilliant.
And where is he?
He's like, you got to do Dexcom, and then you got to do this next story, because you got to talk about ice cream, because sometimes people who eat ice cream have to have these glucose.
I didn't say that part.
Well, sounds like you did.
I just thought it would pair nicely. It's like a fine wine.
I'm going to get to pizza in a moment, because you could also, tie this together. Let's talk about Magnum ice cream. We did see this stock move up almost 11% here at the close, finishing just off its highs. The most since the stock's December listing. Reuters reported that the private equity firms, including Blackstone and Clayton, Dubilier and Rice, are exploring potential bids for the company. Reuters citing people familiar with the matter, saying that the firms are monitoring Magnum's share price, waiting for summer sales before deciding whether or not to pursue bids. Company spokesman declined to comment to Bloomberg. We should point out this record intraday rally coming after Unilever spun off Magnum ice cream in a triple listing in Amsterdam, London, and New York in December.
Yummy.
But they own Ben & Jerry's. They own, I think, Klondike's. And
More of a froyo kind of gal.
Are you? Froyo.
Nothing like original tart, no flavor.
Puppies like froyo, too.
Oh, no kidding.
Just going to put that out there. All right. In keeping with this theme, you have some ice cream. Sometimes you have ice cream after pizza. Sometimes you have ice cream before pizza in my house. All right. So Papa John's also higher in today's session, just up almost 6.2%. This is, again, Reuters. Well, they've been working hard. Reuters reported investment firm Earth Capital working with the pizza chain's largest U.S. franchisee, who controls around 10% of its domestic restaurants, to take the company private. Reuters cited 3 sources, which it did not identify. So, yeah, this is going on. So we'll see what happens with this one.
Okay.
I'm just hungry now.
How about some socks?
Okay.
To eat?
No, you can't eat these chips. But the Philadelphia Semiconductor Index off its worst levels today, but still closed down 4%. In fact, you had only 4 stocks in the SOX actually move higher today. Skyworks, Qorvo, Astera, and Qualcomm. ARM Holdings fell more than 8.4%. Nova fell 8.4%. You had Intel fall 6%. Look, the SOX is still up this year, more than 60%, but a little bit of a give back. in chip names today. Next, let's talk about Ford. After surging more than 21% in the last couple of days, Ford shares are taking a bit of a breather, finishing down today by 7.5%. It's actually the most in more than a year. A bit of a cooling in the enthusiasm over Ford's potential to benefit from the boom in energy demand for AI. Remember, it was Ford's energy storage business and possible future tie-up with AI hyperscalers that led to this rally. Still, even with today's decline, Ford shares are still more than 11% higher since the close on Tuesday. That was the day before the rally started. And speaking of rallies fizzling, Cerebras Systems, after yesterday's blockbuster IPO, I think we could call it, shares fell today by just about 10%, still closing the day at about $280 per share. Remember, it was $185. That was the IPO price, and they did close higher yesterday by about 70%, Katie.
All right, well, let's take a look at the bond market, which was on fire in a bad way today. You can see that sell-off really taking place throughout the curve from the short end to the long end. You can see the 10-year yields rose by 11 basis points, a similar amount when it comes to the 20-year Treasury yield as well. For both the 10-year and the 30-year yield, we're looking at the highest levels in about a year here. The 30-year yield well above 5% at this point. The 10-year Treasury yield just kissing about 4.6%. It's going to be interesting to see, you know, if this sort of sell-off momentum continues into next week or whether, again, this is just a risk-off sort of Friday. Don't want to be too long headed into the weekend, but certainly some eye-catching moves and levels themselves.
Yeah, no doubt about it. Also eye-catching, you know, we talk so much about the $90 trillion great wealth transfer, that massive shift from the older generation as they pass on and pass it on to maybe their wives or their kids or their grandkids. Well, part of this...
Min, thank you so much. Min Lo there in Beijing. Now, President Trump's comments, of course, on the Strait of Hormuz and everything else, that Min was also really explaining are fueling inflation concerns. Shaukat Bunglawala, EMEA, head of multi-asset solutions at Goldman Sachs Asset Management, joins me now. Shaukat, we've made it through Friday. It's just been a big week, like the last couple of months have been, because you have AI pulling in one direction, you have inflation concerns, and then there's an added layer of geopolitics. What do you think is driving the markets right now?
Sure. So firstly, great to be on, Francine. Thanks for having me. So I think that firstly, it's worth noting that notwithstanding what's now roughly about 10-week closure of the Strait of Hormuz, global growth's actually held up pretty well. U.S. growth is expected to come in at around 2% for the full year. We saw Q1 GDP at 2%, and in some ways that's related to the overall effect of an oil price increase, which has been considerable, not actually weighing in on growth as much as was presumably forecasted originally. Some of that's to do with, obviously, the high levels of inventory that we went in with before this particular conflict. Some of it's related to some of the physical shortages, perhaps not being able to be substituted. Jet fuels just being able to be dealt with by airlines cancelling low-value routes, which we've seen, of course, in Europe. But you've also seen this extraordinary amount of AI capex that's continuing to fuel the boom, and the fiscal policy tailwind as well. And that's resulted in global growth actually holding up reasonably well. But as you say, we are now seeing headline inflation pick up.
Yeah, do you worry about the U.S. or Europe more?
Europe, certainly. I think the overall picture in terms of the U.S., because it's got a steady labour market, overall non-farm payrolls are actually still positive. They're above expectations. Jobless claims are still pretty benign, and therefore the U.S. growth picture actually looks reasonable. Europe has got a bigger challenge. It's certainly more impacted by elevated energy prices. You've seen that with Eurozone PMIs coming down now below 50. German industrial production is surprised to the downside. And you're seeing headline inflation now through the flash estimates of around 3%. That's up from 2% at the beginning of the year. The UK similarly around 3.5%, and that introduces more of a policy dilemma.
I mean, I was going to ask you about the policy dilemma because you could see quite a big divergence between what the Fed does and what the ECB. I mean, the ECB is caught between a rock and a hard place, right? And they're saying it quite openly that they're not really sure what happens next.
That's fair. I think in the US you could expect to see the Fed just stay on hold. It's got the luxury of being able to wait, given it's got a steady steady labour market backdrop and a reasonably resilient growth picture. Europe doesn't have that. Europe's growth in the first quarter was about 0.1% quarter on quarter. It is impacted that bit more by an energy supply shock. You're seeing that through headline inflation. So the growth inflation mix in the UK introduces that dilemma. What we'd expect is that the ECB is going to have to increase rates. It may well expect that's going to have a downside impact on growth as well. So it may be a temporary
studio. Chris, welcome. Happy Friday.
Hi.
What are you wearing on your wrist right now?
I am wearing a Studio Underdog avocado.
Ooh.
Oh my God, I
that's a
love
cool
it.
one. You wrote about that last year, didn't you?
I have, yes, it's in my rotation. I was going to pretend it was that Audemars Piguet partnership watch because it's so colorful. Yeah.
Well, we'll talk about that in a second. I want to start with sort of the run of the gamut here because they're not all $363,000 watches nicknamed the billionaire's handshake that have diamonds and grade 5 titanium automatic movement. You could actually pick up a cool watch for $1,700.
Yes, that's true. That's right. I always say that. You can pick up a cool watch for a lot less than that too. So I did my annual roundup of my favorite watches of the year so far. I call them the most dazzling watches that came out this year because actually in the first half of the year, a lot of the watches come out. That's when the big trade shows happen. So like we kind of know what the landscape is for the rest of the year. And the prices ranged from $1,700 up to more than that.
I want to make sure people know you're legit. I'm talking about this. If they don't follow you on Instagram, you do spend a good portion of your time away from New York City, actually in the land of watches.
That's true, Switzerland.
Holding these things, talking to the people who make them, and really getting to know them.
Caressing them, they're petting them.
Taking pictures of them and great pictures for your Instagram.
Come home,
but you do.
Come home with Popeye.
What are these events that you go to?
The big event is called Watches and Wonders, and it's a big trade show in Geneva. It's got dozens of brands. It's from Rolex, Chopard, Patek Philippe, down to smaller independent brands that you wouldn't necessarily know, like Norcane, Bremont, Chrono Swiss, which I love. And around that fair, in the town of Geneva, there's dozens of other little showcases of little brands that occupy hotels. So like everyone in the watch world comes to Switzerland in April to kind of see all these things. And then LVMH has their own watch week, which is actually in January. So that's brands like Tag Heuer and Hublot and Bulgari and Louis Vuitton. So yeah, a lot of the watches we've seen so far, and I've seen a lot of them.
Do you have like a favorite as you go? Like I don't know if it's fair to ask you that, but like, do you see something and you're just like, oh my God?
Yeah, people ask me that a lot. I don't have like a single watch that I like covet. I think one of the keys to covering luxury is that you have to like all this stuff, but you can't really want it. Otherwise, Hannah Elliott is like the key to this. She's in $1 million cars all the time, but if she was going around wanting one of them, it just would not
be fun.
But I really like Vacheron Constantin. It's a really great, sophisticated brand. One of them is in this list that we did. They're too expensive for me to afford. I also like Jaeger-LeCoultre, which is a watch brand where the watches actually flip over to protect the face. And it's very old-fashioned. It's a polo watch. People would play polo to protect their watch. So I'd love one of those one day.
Can I just tell you, I really think this is adorable. Is it the Rolex, the dial?
Yes. So one of the cheapest watches on the list is a Rolex.
Well, you know, it's a certain type of list. If the cheapest
I never
one
pick the cheapest, but anyway, go ahead.
That's not the cheapest though.
No,
it's one
that's
up,
true.
Carol.
But,
so
okay,
it could
one
be.
up.
Yeah. You could still get it.
So it's the 100th anniversary of the Oyster Perpetual movement, which is really key to Rolex's history. It was when they figured out that they could screw in a case, an Oyster-style case, and make it waterproof. And it's a self-winding movement, which is why it's called perpetual. It's automatic. It winds itself. And when they came out with this watch 100 years ago, they had a woman, the first woman to swim across the English Channel was wearing the watch. So it was like the first celebrity athlete endorsement, and it made the watch go through the roof, and it's still a very popular watch today, of course. So in honor of that, they made a very colorful dial. Colorful is not Rolex's vibe at all.
No, but that's why I love the contrast, right? It's like this classic, iconic brand.
Yeah,
and then throwing
and
this
it's like a party. Yeah, it says
totally.
Rolex 100 times on the dial in different colors.
Can we talk color? Because I do love the watch you have on, but let's talk about this craze and this kind of mashup, if you will, between two brands.
Yeah. So a few years ago, Swatch did a partnership with Omega. Omega and Swatch are in the same house of brands.
Even I knew about this.
Right. It really penetrated like mass awareness, and they made the Moon Swatch, which was a spin on the Omega Speedmaster, which went to the moon, the Moon Watch, and they made a bioceramic
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. Worst day for the U.S. stock market since March as bonds got hit. A sell-off in global bonds halted a rally in stocks. Concern is intensifying that central banks will be forced to tighten policy to keep inflation in check. Today, the S&P down 92, wrapping up the week, heading into the weekend at 74.08, down 1.2%. Dow Industrials down 537. Yesterday, you recall at this time, we had the Dow above 50,000. We wrap up the week at 49,526, a drop today of 1.1%. NASDAQ down 410, retreating from a record there, along with the NASDAQ 100 index. Today, NASDAQ was down 1.5%. The VIX above 18 with a 10-year, 4.60% right now on the 10-year. 2-year, 4.07%. The 30-year, 5.12%. Gold, $45.34 the ounce, down 2.5%. West Texas Intermediate crude up 4.4%, $105.63 a barrel. Brent, $109.37, up today by 3.5%. Bottom line here, the Dow, the S&P, NASDAQ all declined today. S&P again down 92, drop there of 1.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast.
important relationships what maybe weren't so important.
Yeah, and last year, Carol, when we first started reporting on these emails based on the cache of emails that we obtained, we Bloomberg exclusively obtained, we wrote about a number of these individuals. But what is really a public who had been with Epstein for been with Epstein for decades. He was the founder of L Brands. Peter Mandelson, who based on reporting we did last year, after we reported his correspondence with Epstein, he was fired. So having that kind of visualization, seeing it, will resonate differently, give you a better understanding of of the individuals who surrounded
Hey, Jason,
Epstein.
one of the things that I know we talk about with you, and Tim and I always talk about it, and I think you guys have pointed out, and other members of the Bloomberg team, just this concept of following the money. And I do wonder, that piece where we talked about his Centurion card and how many cards and what they were used for, it just gets back to the amount of money that was in Jeffrey Epstein's orbit, or that he accumulated. How tough is it to track all the money trails, and is it ultimately really understanding Jeffrey Epstein going to come down to understanding the money?
Absolutely. I mean, that's what I believed from the beginning, particularly even as it relates to the worst crimes that he was prosecuted for. Ultimately, never went before a jury. Related to sex trafficking as well. I mean, following the money is crucial. We're continuing to do that. Not only that, but members of Congress are doing the same thing. Senator Ron Wyden, Democratic senator from Oregon, he has been following the money for many, many years, trying to get additional information from banks who moved money for Epstein. And still trying to get information out of the Treasury Department based on these suspicious activity reports that banks filed, when they spotted signs of potential financial crimes. So that aspect of it is not done, and to kind of unravel all of Epstein's web of financial transactions and just where he was moving money to, what the money provided in terms of support for his sex trafficking. Those are still unanswered questions, and that is really, really difficult. It's really difficult, to track them, to follow the money, to track his spending.
Do you think that's one of the reasons, and I mentioned this story, Ava Benny Morrison and Srinath Rajan writing earlier this week, Jason, about the billionaire owner of Epstein's Island is battling these zealous voyeurs. So people, using drones, going on jet skis, and they're, they were on our program earlier this week, and they talked about how people don't necessarily believe what they've read about Jeffrey Epstein. There's some people who believe he's still alive, and this interest is like prompting people to go to what was known as, quote, Little St. Jeff's, and it's actually creating a problem for the new owner.
Yeah, I mean, first of all, that story was fascinating. I mean, I was unaware that was actually taking place. statement, that 5-minute speech, if you will, that she gave around Epstein and her relationship or her non-relationship with Jeffrey Epstein, I should know. So no, I mean that's kind of mysterious. That's still one of those lingering mysteries. What was, what prompted that?
Well, I will say when your stuff pops up on the Bloomberg and any story about Jeffrey Epstein, it always is among the most read stories on the Bloomberg. People are just curious, and I do wonder if we'll ever know it all, but there's certainly a lot more info to come, and we look forward to all of that you put out there. Jason, thanks so much. Have a great weekend.
Thank you.
Jason,
have a great week.
Yeah, you too. Jason Leopold, he's Bloomberg News senior investigative reporter, FOIA Files newsletter author. You can catch it, just check it out on the Bloomberg and at Bloomberg.com. We're talking food again.
Yep.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. As we have been reporting, sources tell Bloomberg federal prosecutors are scrutinizing valuation practices at BlackRock Private Credit Fund. The Manhattan U.S. Attorney's Office has been seeking information about the BlackRock TCP Capital Corp and has brought in executives for questioning as part of that investigation. U.S. equities down Friday here. Winning week, believe it or not. The Dow, the S&P, NASDAQ all declining today. The S&P retreating from a record, wrapping up the week, heading into the weekend at 74.08, a loss today of 1.2%. On the week, however, stocks gained for a seventh consecutive week, with the S&P this week up by 0.1%. But to be clear, a down Friday. Dow Industrials back below 50K, 49,526, down 1.1%. Both NASDAQ and the NASDAQ 100 index also down from records, down 1.5%. The 10-year 4.59%. Today, stocks had their worst day since March. Bonds got hit. The 2-year 4.07% with a 30-year 5.11%. Gold down 2.4%, 45.40 the ounce. Everybody's watching crude. West Texas Intermediate 105.44 barrel, up 4.2%. Brent 109.21, up by 3.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stenovic, live here in our Bloomberg Interactive Brokers studio. A story that our team broke just a moment ago, exclusively here at Bloomberg. Federal prosecutors are scrutinizing valuation practices at a BlackRock private credit fund. This is according to people with knowledge of the matter. Olivia Fishlow is Bloomberg News private credit reporter. She's been working hard at our Bloomberg newsroom, and she joins us from the newsroom right here in New York City. Olivia, what have you found out?
So we discovered that there were federal prosecutors looking into the BlackRock TCP fund, which is a publicly traded private credit fund that BlackRock owns. And specifically, they were looking into valuations around the fund and trying to see what the processes there are for the vehicle.
How are these BDCs typically valued? How do they value their assets?
So BDCs, they compile private credit loans, which they don't trade like on a public market where everyone can see what's going on. So it's up to the managers and their board of directors. And they also have like third-party valuation agencies that they go to as well. And they sort of all work together.
So there's not one standard way that one BDC is valued versus the next.
Definitely, yeah. So they'll disclose it in their filings for the fund, but just basically, if you're an investor looking into the fund, you sort of just have to rely on the quarterly disclosures of the valuations of the loans, and that's sort of your only insight into that.
So what are they? So we have to be so careful, right? Because they're looking into something. So does it mean that there's not necessarily anything wrong? They just need to answer some questions, or that's what we're going to wait to find out.
I think that's what we'll wait to find out and see. But I think a good way to think about it is more broadly, there's just been a focus for private credit around valuations. And, that's coming from a lot of different places. And, Jay Clayton has spoken publicly about it. We've seen other agencies speak about it as well. So I think it's definitely a wait and see situation.
And I should point out this BlackRock fund that's at question, or at least being looked at. We did see the stock trade lower in the aftermarket. It's still down just about 1%, but it was down a lot more. I think it was down about 7% here. We also did see shares of BlackRock dip lower. They are still down about 1.5%. All right, what's the next date or thing that we should be watching in terms of this story?
Well, we will keep looking into things, keep everyone updated. And then just for like private credit broadly, we're also looking into more disclosures from the funds, which will be public as well. All right. We will see.
Kiss away your weekend, kiddo. I'm just telling you. Olivia, the reporting you and the team have been doing in the private credit space is just unbelievable. So thanks so much for jumping on with us. And
thank you. Thanks for having me on.
Highly recommend everybody check out. It's an exclusive here by Olivia Fishlow, Bloomberg News private credit reporter, joining us right here and the team. So it's on the Bloomberg. Ava Benny Morrison also involved in that story. You can find it on the Bloomberg.
Well, speaking of the weekend, it might be good to go out to eat.
Yes, yes, and yes.
How's that? Well, our next guest is behind nearly 20 different restaurant concepts in cities in 9 states in the Middle East. We're talking Dubai and Riyadh in the Middle East. even on a Ritz-Carlton yacht. We're talking Bourbon Steak, International Smoke in San Francisco, Wit and Wisdom in Sonoma, and many, many more. We've got Michael Mina with us, chef, founder, and executive chairman of the Mina Group. Welcome. How are you?
Wonderful. Thank you. Thank you so much for having me.
Nice to have you.
Wow. You didn't bring food, which is okay. But looking at your website, we are just like, okay, we need a steak right now.
Yes.
What is the, when you have so many different concepts, range from seafood to a lot of different variations of steakhouses. What would you say is the concept that ties everything together that people should know you for?
Well, I think part of the allure and part of the great part about being a chef is being able to be creative and to be able to work with your team and come up with great concepts. But the concept that we have the most outlets of is bourbon steak, and so we have the most bourbon steak restaurants, and so it's probably the one that I'm most known for, and it's also the one here in New York at the Essex House, and so it's probably the one that I'm most known for. But I started out in 1991 with a restaurant called Aqua in San Francisco, and that was a fish restaurant, and that was kind of the launch restaurant, and the second one ended up at the Bellagio when the Bellagio opened, and now that is Michael Mina.
It's not an easy industry. You know this. I don't have to tell you. And yet you have variety, in terms of what you offer. How do you kind of keep it going? How do you, again, like in an industry where margins can be tight and
Yes.
slim, costs are high, we talk about higher food costs, like it's a tough business.
It really is, and I wouldn't sit here and say that I have the answers. I have all the answers. I think that anyone that thinks they have all the answers in this industry will wake up one morning and realize that there's a lot. That's what's so great about it is it's constantly evolving and it's constantly changing. And you think about it, like in our industry. You have to really try to work very hard to stay relevant in this industry, but you also have to work really hard to build loyalty. And I would say that one of the biggest factors of success in this industry is loyalty. And, that's where we're 3 generations into it, and I have close to 40 restaurants, and I'm very blessed in the fact that we've just had so many great loyal customers, and that's what gets you through the down times.
Yeah, that's the thing that I thought was really interesting during COVID. It's just even well-known restaurants and chefs and groups, how difficult it was because it is such a kind of slim margin business and it can be really tricky. And it just, I thought, the successful guys will be no problem, but it was amazing.
Well, you also got to remember, you're in an industry where shiny objects, you got very creative people that love shiny objects and love to chase shiny objects. And I'm one of them, right? And so getting really disciplined about what your business plan is going to be and then sticking to it, that I would say that's just as hard because, there's an allure to like, oh my gosh, look at this beautiful project that somebody's, offering you and everything else, but it might be way outside of your scope. And I've made those mistakes and look back at them and I'm like, okay, I think kind of, unfortunately, I have to say with age now, I kind of have learned to not chase the shiny objects and say, okay, this is our lane. This is what's going to be best for us.
One of the reasons we wanted to talk to you is because you have this footprint around the U.S. and Washington, D.C., ranging from Hawaii to Arizona to California to New York, restaurants in Florida too. I'm wondering about sort of regional strength that you're seeing right now in the U.S. Where are the pockets of boom towns right now?
What's interesting is you see cities that I'll tell you, like I have 14 bourbon steaks. Our number 1 bourbon steak is in Nashville. It's number 1 in the company and number 1 by a little ways as well. And, you'll see, and obviously like, if you're going to go compete in a city like New York or a city like San Francisco or Los Angeles, there's a lot of competition. They're always great cities and they're always going to be, there's always a big upside to being in those cities. They're great for your brand. They're great for your clientele.
Why is the Nashville one so successful?
It's really interesting. It's a lot of times you get to a city right at the right time. And I think we got to Nashville, you know, close to 10 years now, and we got there at the right time. It's at the top of the JW Marriott. And it was really interesting because when we opened it, everyone was like, you're coming to Nashville and you're opening a steakhouse. There's a lot of steakhouses in Nashville. I said, but but you have to say, okay, I believe in what we're doing, and this is how we're going to do our steakhouse, if that's what you're doing. And we happened to really hit a real niche there that was missing in their steakhouses.
Can you tell us, you talk about just, some of the things that you guys have to deal with, and we're thinking about your exposure over in the Middle East, Dubai.
Yes.
What can you tell us about what this war has done?
It's done a lot. I mean, we're at the Four Seasons. We do all the food and beverage at the Four Seasons in the DIFC, which is the financial district of it.
Yeah.
And the hotel had to close.
Yeah.
And so it definitely, there's an impact, obviously, on travel. There's a major impact on travel, but I think that, uncertainty is never good for our industry. It's it's never good for, I guess it's not good for a lot of industries, but I know more about mine. And so I would say for ours, uncertainty is not good. And I think that, people don't necessarily want to be out celebrating as much during those type of times,
Yeah.
What about more domestic challenges like beef prices here in the U.S.
Yeah.
and sourcing beef at a time when cattle herds over the last couple of years have been smaller, beef has been more expensive. You have this challenge with the president now wanting to import beef and those tariffs not hitting those beef importers.
Yeah, beef prices have gone up.
Yeah.
Beef prices have gone up, and also too when fuel prices go up, beef prices go up.
Where do you
as
get your
well.
beef?
All over. It really depends regionally. So depending on where we are regionally, but we'll buy Japanese beef, we buy American beef, we buy from many different ranchers. We'll buy regionally depending on where we are. We'll buy certain cuts from certain farms and certain ranchers. But really, we do not. We don't say, okay, this is what we're going to use across the country, because I think for us in particular, sometimes it's really enjoyable to get to work with a particular ranch and really get to spend that time with them when they're localized.
I'm just hungry.
Okay, I got one for you, Carol.
You do? Okay.
What's the best way to cook a steak at home?
At home?
Yeah,
okay.
at home.
Well, I'm going to tell you how we do it at Bourbon Steak.
Okay.
But
Can we do it at home?
You can do it at home.
Okay.
It takes a little bit of a commitment.
Okay.
It takes a little bit
I'm
of
ready.
a commitment. Okay, so you can get some ghee or some clarified butter. Okay, and
We have ghee on the stove all the time.
okay, but you can freeze it so you don't think you're going to throw it away. Okay.
Yeah.
So the best way to do it is to take it and make what we call like a double boiler, or put it into an oven at like 120 degrees in the oven, and slow poach the beef for about 30 minutes. Like if it's a steak, slow poach it, and it'll stay under rare. It's just and you can put some herbs in it, some shallots in it, and then strain that and throw it in the freezer, that butter, so you can reuse it. And then after you slow poach it, then grill it on a really hot grill or sear it in a really hot pan. And that'll keep it from shrinking. And it doesn't saturate the meat at all. Like, you won't even know that the meat was actually slow poached in the butter. It gives it a great flavor. It tenderizes it, keeps it from shrinking. Great with filet, like
So double boiler in the oven.
You can do it on a double boiler, or you can just put it in your oven, but just keep your oven really low, and keep a thermometer in the butter, and don't let the butter go over 130 degrees.
Boom. There it is.
Yeah.
Not as difficult as I thought. I think I'm going to actually try this.
Yeah, or you can, if you want to make a tiny investment, you can get you can go to Williams Sonoma and get a chocolate melter, and it'll do the same thing. You just
Oh,
put
yeah.
the butter where the chocolate would go.
Yeah. Oh my God, Michael, come back soon.
Oh, thank you
This
so much.
was really sweet.
Thank
very,
you.
Very
Thank you for having me.
sincere and just fun to hear what your world is up to. It sounds busy. I know you're
Yeah.
going to go cook.
Yeah, thank you so much. Thanks for having me.
You bet. Michael Mina, he's chef, founder, and executive chairman of the Mina Group, joining us, of course, right here in studio.
Hey, just to check on how markets have done today and for the week. The S&P 500 today fell by 1.2%. In fact, over the last 5 days, kind of around the world trip, just up about 1/10% over the last 5 days. The NASDAQ composite fell today by 1.5% over the last 5 days, just down about 1/10%.
All right, so interesting day and interesting week. But again, I think we're up for 7 weeks in a row on the S&P 500. So we've seen quite a bounce, certainly, as you know, it seems like we got the ceasefire, but it just seems getting the details and everything, the Strait reopened. I mean, that continues to hang over us. We're getting ready for a super big week next week. We've got G7 finance ministers and central bankers meeting in Paris. You've got NVIDIA earnings. You've got Walmart reporting. You also get the Fed minutes from the last meeting. And this is going to be the first Fed minutes presided over by Kevin Warsh.
And you're leaving for a couple days.
I am. I'm going to go work on a project. TBD, more to come.
I'm Tim Stenivek, along with Carol Masser. Let's take a look at some stocks on the move this week. We're joined by Bloomberg Television markets correspondent Nora Melinda. Nora, you're watching the week. Where do you want to start?
A lot happened this week. I feel like there's been a lot to digest.
Yeah, a lot of earnings.
Yeah.
Totally.
Let's start with our best performing stock this week. That was Cisco in the S&P 500, ticker CSCO. Of course, we did see some of its peers being pulled up with it. The stock gaining 22% in the past 5 days alone. This is, of course, after the company delivered better than expected sales forecasts. They also did announce plans to cut thousands of jobs. They really want to focus on the fast-growing AI market that we've been talking so much about this year and previously. They did say that the layoffs will affect less than 4,000 jobs, but you know, the people are really celebrating the fact that they are really fixating their focus on artificial intelligence, and that's what investors really just want to hear in this moment.
Stock is up 53% year to date, Cisco.
Yeah.
Go figure. Super interesting. No, I mean, I think they got the memo and have certainly been all in. Let's go to Carvana.
Yes, Carvana. So this one on the flip side, shares lower by about 14% this week. This is a stock, of course, that we know tends to be high beta, high momentum. So not uncommon to see volatile swings from a name like this. Ticker CVNA. So we did see shares, of course, lower. This is after people are still digesting how they feel about the margins in the company. Of course, we know also this year they did have some short seller reports coming out of Gotham City. And so investors are really grappling with how they feel about this name more broadly. And we do know that they did have a stock split that happened, a 1-for-5. And so, or sorry, excuse me, a 5-for-1. And so investors still kind of debating how they feel about that. And of course, that also adds some volatility. So this is one of the names selling off with the macro, of course, in the background and everything. One of those speculative names like Carvana, you're going to see get hit.
On fire, though, during the pandemic.
Right.
Oh, yeah.
It was that name.
In a big way.
That thing has been
right?
all over. Yeah.
Speaking of up and down, but certainly up in a big way, Intel.
Now, this was a pretty Intel shares down about 13% over the past 5 days, seeing its
So not a good week, but it's been on a tear.
It has been on a tear. No, let's
it's gone parabolic.
Put it into context, right?
She's doing the week. Let's be
yes,
fair,
we're doing the week, and then we'll get to the year.
Okay.
The year, though, we do see up 195%, right? So stark number that we're looking at, but it is on its sixth straight day of losses. We are seeing, of course, this broader sell-off in artificial intelligence. When people are seeing any sort of risk-off sentiment, you're going to see names like Intel getting hit. But when you think about fundamentals and you think about how the street is viewing it, this is a stock that's really been on a tear, but taking a breather this week.
All right.
From the end of 2024
what
to now,
What is
it's
it?
up 440%.
Yeah, not too shabby.
So that's over the last year and a half, basically.
Yeah.
Not too shabby. Nora Melinda, thank you so much. Bloomberg Television, markets correspondent Nora Melinda. For more conversations like this, our Stock Movers podcast, check it out on Apple, Spotify, or anywhere you get your podcast. Most read story on the Bloomberg at this hour.
I know what it is.
President Trump's more than 3,700 trades astonish Wall Street insiders. It's a story that just crossed about 10, 15 minutes ago.
I thought
Where'd you think I was
You were going
go?
private credit. That's the second most read story
That's
on
the
the
second
Bloomberg.
most
It's
read.
BlackRock's private credit funds valuation being probed by the Department of Justice.
All right, our thanks to our team. I'm going to forget somebody, so get in my ear. Lauren, Brendan, Derek, Alice, Ryan, Stephen, Mark, Austin, Sophie, Lauren, Justin, Elizabeth, Sebastian, Talia. Thank you, guys. It was a rough week. We're all exhausted, but we love you. We couldn't get it done without you. Do not go anywhere. Balance of Power starts now.
This is Balance of Power, live from Washington, D.C.
Tonight, non-committal. The Trump-Xi summit ends with few concrete breakthroughs and a warning from Beijing on Taiwan. President Trump says he made no commitment on the island's future, and questions remain over what comes next for U.S.-China relations. We'll discuss with Senator Chris Coons later this hour.
And market tremors, global bonds sell off, and the S&P 500 tumbles the most since March. As fears grow, the war with Iran could drag on. Meantime, President Trump facing fresh scrutiny over more than 3,700 first-quarter stock trades involving big companies with business before his administration.
Plus, a Washington institution, Martin's Tavern, has long been a Georgetown backdrop for presidents, justices, and power players. And now, after a nod from Saturday Night Live, the storied D.C. restaurant is getting a fresh spotlight. Joe Matthew takes you inside this hour.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power alongside Kaylee Lyons. I'm Joe Matthew. Just a couple of hours from now, President Trump set to arrive in Washington following a days-long summit in Beijing, meeting with China's Xi Jinping and bringing with him some of the country's top tech and business CEOs. President briefed reporters aboard Air Force One on his way home. Listen.
Doesn't want to see a movement for independence. He says, look, we've had it for thousands of years, and then at a certain period of time it left, and we were going to get it back. They had the Korean War. A lot of things happened. And all this. But no, on Taiwan, he feels very strongly. I made no commitment either way.
Made no commitment on Taiwan. The president will decide soon on a planned multi-billion-dollar weapons shipment for Taiwan.
What about NVIDIA's H200 chips? There was this expectation that maybe there could be a breakthrough there for the Chinese market, considering that NVIDIA's Jensen Huang was a last-minute addition to this trip. So a lot of big questions about some of those top issues, though Joe and Kaylee, both sides did confirm that they will look to establish a U.S.-China Board of Trade and a U.S.-China Board of Investment, essentially geared to help trade flow between the two countries. But at the end of the day, it's just that. It's a commitment to create those mechanisms, but it doesn't mean that those mechanisms are created just yet.
Well, so I wonder for a lot of this, how much we'll have to wait and see if it's finalized in September when President Trump has Xi visit him at the White House.
That's a really good point, Kaylee. In fact, one of perhaps the biggest deliverables is that the dialogue is going to continue, which goes back to this idea of strategic stability, that the two sides are going to keep the conversation open. As Chinese state media confirmed earlier today that Chinese President Xi Jinping has appeared to accept the president's visit for a state visit in the fall, one of potentially 3 additional face-to-face meetings that we could ultimately see between the two leaders. In fact, we heard from China's Foreign Ministry earlier today saying that Chinese President Xi had, quote, agreed with President Trump on a new vision of building a constructive China-U.S. relationship. So the idea that they are going to talk about more of these issues, we heard the Chinese president talk about the idea of opening up the Chinese market more, though we didn't really see those tangible steps taken quite yet. So a lot of big questions here that still remain, but one thing that is emerging is that they are going to keep that dialogue open.
All right, Bloomberg's Tyler Kendall reporting live from Beijing all week for us. Thank you so much. And joining us now for more analysis after President Xi warned that Taiwan could lead to, quote, clashes between the U.S. and China is Becca Wasser, defense lead for Bloomberg Economics. And Becca, as we emerge from this summit, I wonder if we should be understanding the term clashes to just be simply rhetorical clashes, or if we could be talking about real physical military clashes here. What would that look like?
So first and foremost, Taiwan has been the biggest flashpoint in U.S.-China relations. We've heard threats like this from Xi Jinping in the past, in part because that's his form of deterrence, trying to make it so that the United States will not come to Taiwan's aid if Xi Jinping decides that he wants to unify with the island and try and take it by force. But those threats have not been effective thus far, and we've seen continued support from the United States, even with President Trump's recent comments, which do align with the longstanding policy of strategic ambiguity. But as you note, these clashes could potentially occur in the future, and that is the thing that the Pentagon has been preparing for quite some time. And a lot of the war games that I ran for the Pentagon were actually looking at a potential U.S.-China conflict over Taiwan.
So you've been spending a lot of time staring at this island. What kind of options would the president be facing if he did decide to defend Taiwan in the event of a mainland takeover?
It would be an all-out effort from the United States if that decision were to be made. And so all of the military forces that we've seen being brought to bear in Iran, we would see that and perhaps even more with Taiwan. And it would require a great deal of air and maritime forces, as well as supporting forces in order to try and help Taiwan defend from a potential invasion, which, you know, Taiwan has really been ramping up their own indigenous defense efforts in help with U.S. arms sales. And that's something that the Pentagon has continued to push, even amidst some of these, you know, questions about this next tranche of arms sales. But it would be very difficult for Taiwan to be able to hold the line alone without support from the United States and perhaps other regional allies and partners in the Indo-Pacific.
Well, and do we have the capability to do that, at least if this were to happen in the near term, given everything that we have expended in the Middle East, knowing a full replenishment of those munitions could take, what, years?
Years. That's absolutely right. And you see China definitely paying attention to all of those expenditures of munitions, including those high-end missiles that would be so relevant in the early days.
or blockade and has projected more force into the South China Sea than at any point. So an increasingly well-armed and aggressive China needs a counterbalance to maintain the status quo across the Taiwan Strait.
Well, Senator, do you believe that a Chinese invasion or attempted takeover of Taiwan is inevitable? And do you think that that timeline may have been accelerated by the events of recent months, our war in the Middle East and this summit and non-committal dialogue, as we understand it, coming from President Trump?
Look, I think the Chinese are constantly probing for weakness and for whether or not we will stand by our partners and allies in the region. When Japan's prime minister made a statement about Japan being willing to come to Taiwan's defense, and Xi Jinping and Chinese leaders directly threatened and insulted the prime minister of Japan, the Trump administration's failure to stand by our treaty ally Japan in that exchange was noted as a moment of weakness by China. I do think that Xi Jinping has made perfectly clear his intention to reunite Taiwan with the mainland, and our goal should be that that be only a peaceable conversation, not one by force, and that an ongoing dialogue about cross-strait relations needs to be one that is respectful and appropriate, and that we do not encourage or allow China to further build out its constellation of illegal and not internationally supported facilities and positions in the South China Sea. Look, we have a number of interests, but our most important interest in some ways is continued freedom of navigation through the Taiwan Strait, through the South China Sea, and that's an interest shared with our treaty allies like the Philippines, like Australia, as well as many other countries in the region, Vietnam, Indonesia, Malaysia, and the United States has been a critical guarantor of a peaceful and stable Western Pacific for decades. As China continues to try to project force, this was an important summit, and our president staying silent on whether he will go ahead with arms sales to Taiwan, I think was a critical step backwards for our interests.
Well, it's one strait or the other, it seems, Senator, because the president suggested that China was prepared to help the U.S. reopen the Strait of Hormuz. We got some mixed messaging on this, and it's not clear that China agrees with the president on that posture. But here's what he told reporters on the way home on Air Force One. Let's listen.
We did discuss Iran. We feel very similar to Iran. We want that to end. We don't want them to have a nuclear weapon. We want the straits open. We're closing it now. They closed it, then we closed it on top of them. But we want the straits open, and we want them to get it ended.
It would obviously be in China's interest to reopen the Strait, Senator, but do we have any reason to believe that Xi Jinping will help Donald Trump in this matter? And just more broadly, what has China learned from this experience in closing the Strait of Hormuz?
Well, they've learned that a blockade is an incredibly powerful tool, and there's no reason for us to believe that they're going to actively help pressure Iran to reopen the Strait of Hormuz to other countries' ships in addition to China's ships. And frankly, I'll remind you that recent public reporting strongly suggests that China and Russia are helping Iran rearm and are considering sending further armaments to Iran. So Russia has been a close partner with Iran. Iran has provided critical Shahed drones for Russia's daily bombardment of Ukraine. And it is those Shahed drones that are currently being used by Iran to attack civilian shipping, to attack oil and gas facilities among our partner and allied nations in the region, as well as to attack our bases and our embassies. President Trump should be learning the lessons of the Ukraine war and embracing Ukraine, the world's leader in producing interceptors for these Iranian Shahed drones. Our partners and allies like Saudi Arabia, the UAE, Qatar, they are engaging with Ukraine and purchasing interceptors from them. When I had Secretary Pete Hegseth in front of me in my role as the ranking Democrat on defense appropriations this Tuesday, I kept pressing him for an answer to two questions. Mr. Secretary, what's your plan to reopen the Strait of Hormuz to civilian shipping? And why not embrace Ukraine, invest further, partner with Zelensky and Ukraine, because they have the upper hand in developing drone technologies and counter-drone technologies that could help reopen the Strait of Hormuz and help us transition to the future of warfare? He did not have a good answer, in fact, any answer to either of those questions.
Senator, we just have a minute left here, but there were reports emerging yesterday about the CIA Director John Ratcliffe's visit to Cuba. And I wonder if you have any understanding of what that visit was intended to accomplish and what it may mean for whether or not you think we could see kinetic activity there too.
Well, according to press accounts, that was an opportunity for Ratcliffe, Director Ratcliffe, to make an offer of humanitarian assistance of about $100 million. And the Cuban leaders countered by saying, if you want to help reduce the hunger and the blackouts in Cuba, maybe you should partially or fully lift your blockade. It's an indication that there's more pressure being felt by the Cuban regime. And look, I'm no friend or supporter of the Cuban regime, but I do think we need to be mindful of the widespread humanitarian crisis on the very large island of Cuba and the potential consequences of a fall of the Cuban regime after the Trump administration shut down most of our ability to deliver humanitarian aid when they killed USAID last year.
Yeah, they've run out of fuel in Cuba. From his view on the Foreign Relations Committee, Democratic Senator Chris Coons of Delaware. It's great to have you back, sir. Thank you for being with us. On Balance of Power, alongside Kaylee Lyons, I'm Joe Matthew on Bloomberg TV and radio.
which he led this institution and really protected its independence during a time when the president mounted a series of unprecedented actions, firing a governor, undertaking a criminal investigation. So I think the chair's legacy is really going to be around preserving the independence of the Federal Reserve. And I think he actually gives Kevin Warsh a much stronger position to start from than might have been.
It's Balance of Power on Bloomberg TV and radio. Alongside Kaylee Lyons, I'm Joe Matthew in Washington, where we spoke earlier today with Lael Brainerd, the former vice chair of the Fed, about Jay Powell's tenure as head of the central bank. It is his last day as chair. Kevin Warsh now set to inherit a concerned bond market, you might say, and rising inflation data that we saw evidence of this week. Joining us now with his reaction is Christopher Smart, managing partner and founder of the Arbroath Group. He's also former special assistant to the president, the National Economic Council in the Obama administration. Christopher, it's great to see you. Welcome back. You know the landscape here. Oil prices are surging. Gas is through the roof, $4.52 a gallon. Interest rates today surging, pulling stocks lower. So when's the first rate cut?
Well, that's a trick question if I've ever heard one on a Friday afternoon. I think the markets are clearly looking at all of the pressures coming from energy prices. They're looking at the cumulative pressures on inflation that were there before the war in Iran. And they're saying it's really going to be tough to hit that 2% Fed target with any cuts anytime soon. And I think now the markets are pricing in nothing this year and maybe not even next year at this stage. So I think Kevin Warsh is facing perhaps the immediate wrath of the president, but really there's just no way with a straight face that he can come in and try and talk to his colleagues credibly about rate cuts at this stage.
What about the credibility of the rate hikes conversation, Christopher? How high is that bar?
I think it's still high at this stage. I mean, I think there are a lot of moving parts, as any central banker would tell you, in that central bankerese that they quickly adopt when they get into office about, the data. We're still looking to see what's coming into view. And I think for any central banker, the best answer they can give is, right now we're going to do nothing. The shocks from oil price spikes really are meant to be temporary. What really is concerning and what I think they're all going to have their eyes on are things around inflation expectations, which have been edging up, the stability in bond markets, and then the data in terms of what kind of weakness we may see in consumer spending, which has been holding up pretty well, as you know.
Well, so what is going on in the bond market, Christopher? Why the freak out today? This is something that could have taken place at the beginning of strikes against Iran, but 2 months have gone by. And now suddenly today you've got a 2-year above 4%, a 10-year above 4.5%, and a stock market that can't handle it.
Well, that's the mystery of markets. I mean, I think, as you say, the kinds of things that we're seeing today and using as explanations for this sell-off are the kinds of things that, frankly, you have been kind enough to invite me onto your program and talk about for the last many weeks. The CPI print earlier this week was certainly not a surprise. The continuing standoff between Iran and the U.S. Is with no apparent way out is not a surprise. The fact that Xi Jinping couldn't or wouldn't, to my mind, it's really hard to imagine that he really can pressure Iran to change its course any better than the United States can right now. That's not a surprise either. But these are things that happen in markets, right? They all sort of accumulate over a period of weeks and days, and then all of a sudden people kind of look at each other and go, "Ugh, this is really bad." And I think that's what we're seeing on a Friday afternoon.
Well, what was your overall reading of the president's trip to Beijing and how investors should think about it, when it seems that the success was really in the fact that there was dialogue, and at the very least the trade détente seems to be intact? There's clearly pushing stability in the relationship. Is that enough?
Well, I think it's plenty when you think back where we were last fall or even last year, where we were mounting tariffs of 100 to 125% on one another, where we had actually found each other's most sensitive pressure points, with the Chinese cutting off for a time access to critical minerals, and the Americans cutting off China's access to our most advanced semiconductors, and then both sides kind of backed away from that. I think the fact that this was a good summit symbolically, is sort of the diplomatic equivalent of the Hippocratic Oath to do no harm. The fact that the two leaders want to play up the fact that they have a good personal relationship, that's all good. It's not going to solve the underlying structural issues that divide the two countries. But I think it also gives us now a scorecard between now and the next 129 days, which is when Xi Jinping is due to land in Washington for a bilateral summit. And we'll see whether the readouts that, Ambassador Greer, President Trump, and others have given about more orders, a board of trade or a board of investment, will we see those things take shape over the summer months that we can really judge this summit based on the progress that may or may not come out of it. We've seen a lot of these announcements before, particularly when the U.S. announces something and China doesn't. I think we have to be particularly skeptical.
Hey, Christopher, what's going on at the Fed? Did you see this headline today? It broke right after we came to air. The Federal Reserve Board naming Jay Powell chair pro tem. Republicans, the administration at least, are unhappy about this. Should they just name him shadow chair?
Well, I think he's going to be a presence on the board, but I think he's somebody who respects the institution so much that he doesn't want to overshadow, I think, Kevin Warsh's arrival. And I think he'd probably personally like to be out of there as quickly as possible. He's there because of this continuing threat of an investigation that the Justice Department has said it's ready to open up again if the Inspector General finds wrongdoing. I think, as you heard Lael Brainerd say, Jay Powell has been an extraordinary chair through a lot of difficult times, and I think it's probably a nice honor for him. I don't think he gets a pay increase. I don't think he gets a better office, but I think it's a reflection of his defense of the institution that the institution is recognizing at this, unprecedented moment.
And finally, Christopher, I want to ask you, we got financial disclosures for the first quarter in terms of President Trump's trading filed with the U.S. government Office of Government Ethics yesterday. Some 3,700 trades in Q1 alone. At least $1 million in a number of stocks purchased, including NVIDIA, which of course can be sensitive to U.S. policy and things like export allowances. So there's some questions here about the number of trades, the companies that are involved in this, knowing it's coming against a backdrop of people who have found some incredibly lucrative, well-timed trades in things like oil futures around this war in Iran. It's all creating a question around transparency in U.S. financial markets and whether or not some people are armed with information that others simply do not have access to. Do you think that's undermining to the case for U.S. financial markets in some way?
Yes. I mean, it's nuts, right? That people in office are able to, and it's not really just the president, right? It's members of Congress that are trading on maybe not inside information, but clearly advanced views of what's going on or what may come soon. And in any case, they shouldn't be trading on in companies in areas which they have oversight. So I think it undermines credibility in markets. It certainly undermines credibility in government at a time when, of course, Washington is not, anybody's favorite institution in the country right now. So I think it really is problematic, and I hope that at some point Congress will come to terms with this and recognize that part of the problem is on their side of government, but also figuring out a way to ensure that the president is much more transparent and not able to benefit financially from being in office. So certainly when I was at the White House, many of my colleagues, all of my colleagues, were covered by very strict rules around this. And the fact that there have been these shortcuts, I think those need to be cut off.
All right, Christopher Smart, managing partner and founder of the Arbroath Group. Thank you so much.
Great to be with you.
And joining us now for more on that and other stories we're following is our political panel, Bloomberg Politics contributor and Republican strategist Rick Davis, a partner at Stone Court Capital, alongside Democratic strategist Jamie Jackson, founder at Vantage Global Media. Welcome to you both. There's a lot we want to speak with you about, but Rick, I would love your take too on this entire conversation, not just around the president's trades, but some of the trades we have seen that seem almost perfectly timed with policy announcements by the president in which people have made a lot of money. And as Christopher raised, this isn't just at the executive branch level we have these questions, but Congress too. My question is, are we actually ever going to see anything done about it?
Well, you know, it's the kind of thing where outsiders who are running against the system politically are really going to get a lot of attention for this. You know, it's a classic, you know, you get to Washington, you buy into that culture, you're trading off of insider information, you're part of the back scratchers patrol. And so people who are running against incumbents this year are going to have a blast using this issue, because the normal voter, you know, who isn't related to any member of Congress and getting any of that information for their trades is going to be just shocked by the fact that this kind of thing is happening in Washington.
Yeah, shocked. There's gambling going on here. The president purchased NVIDIA, Jamie, February 10, just a couple days before the company announced a huge deal with Meta to fill its new data centers with NVIDIA chips. He also purchased stock in Microsoft and Amazon just before the Pentagon announced deals to deploy their technology in their classified computer networks. What did Democrats do about this?
Well, that might explain why NVIDIA president was seen running to Alaska to meet with
the
president to go on the trip to China. I mean, I think this tracks with what we've seen coming out of this administration. I mean, for example, you have the president's son-in-law, who is very involved in negotiations with Iran, who has a lot of business dealings in the Middle East.
Yeah.
But this is a matter for Congress to conduct oversight.
Well, you do have a lot of bills out there, the stock trading bans that would include the administration. Does this move it over the line?
I think it could, but, you know, the point has been raised that members of Congress trade as well. So there's a lot of conflicts of interest involved, but also the Office of Government Ethics. This is also a matter for them to look into as well.
Well, and of course, the composition of Congress could very well look a lot different after November in the midterms, and certainly so when we think about the new maps that are going to be in play, as we've seen redistricting across a number of states, including in the South, where they're writing out Democratic seats in some states completely. Jamie, I wonder how you view the Democratic response to that. Obviously, states like New York looking to make moves in 2028, but more broadly, how do you compete in that kind of changed landscape?
Well, the recent decisions from the Supreme Court as well as the Virginia Supreme Court have been very disheartening. I mean, that's very clear. But I think it's important to note that the Virginia Supreme Court did not make their decision based on the merits and substance of the actual maps and of the actual fairness issue that was on the ballot initiative. It was simply a matter of how the Virginia legislature went about the sequencing of the actual vote. And so I think Democrats continue to fight. As we know, this was a Republican-led redistricting arms race that started in Texas, led at the direction of the president, and Democrats continue to fight for voting power.
Well, it's on to South Carolina today, where the governor is apparently going to take a swing at this, Rick Davis, and try to eliminate the seat that's held by James Clyburn. This is going to be a situation not limited to this cycle, right? We're going to continue redrawing maps after November leading into 2028.
Oh, for sure. I mean, I don't think there's going to be much of a contest on the vote in this special session in South Carolina.
Yeah.
Vast majority of Republicans are going to eliminate that one minority-majority district that exists in South Carolina. And nobody's going to put VRA back together in anytime soon with this Supreme Court. So yes, if you think redistricting is the top-line issue in politics today, wait till the next cycle. I hate to look beyond midterms, but there's absolutely reason, just like we were talking about, to have Virginia get right back in there, because they were stopped not by the fact that they didn't have merit to redistricting, but the timetable was upsetting. And that applies to a lot of states right now. So, of course, this is a new element in political battles, is to, you know, if you don't like the ground you're given to play on, change it, you know, redistrict and see what else you can do.
Well, on South Carolina, just quickly, this is not just any seat we're talking about. It's Jim Clyburn's seat. Do you think he could win even in a redrawn map?
I do, because let's look at what we're dealing with here. We're still in this unauthorized war of choice with Iran. Inflation is at 22 levels. Gas is up. cost of living is up. There's still a major affordability crisis in this country. And quite frankly, Republican leadership in Congress is running out of available legislative business days to get any real wins across the aisle to the American people. And so while there have been some setbacks on the Democratic side with regard to redistricting, I still think that Democrats have a fight on their hands.
Interesting. Rick, you were still of the mind, though, I believe, that you can, as far as this midterm cycle is concerned, even if Republicans have a 6 or 10 seat advantage on the maps, that the historical implications here in a midterm election and the story that Democrats have to tell, all of the issues that Jamie just highlighted, could still make it possible for Democrats to win the House.
Yeah, I think we're looking at, something like a replay of 2018, where you could have in excess of 30, 35 seats switch. And when you're doing that, you look at the South Carolina example that Jamie's talking about. And let me tell you, that could be turning out to be dummy mandering. You could water down enough, regular Republican districts by trying to divide up, Clyburn's seat that you wind up net loss. I could see a situation where we could lose 2 seats in South Carolina while we're trying to eliminate 1.
We just have 30 seconds left, Rick. The Louisiana primary is tomorrow. What are the odds that Bill Cassidy, the incumbent senator, can even make it to the runoff?
Right now, I'd say he's likely not to make it to the runoff. I mean, in all the survey data I've seen, he's coming in 3rd out of 3. It's become a referendum on him. And the other candidates are better positioned with the Trump voters that are in vast supply in Louisiana. So I worry about that because, honestly, it's these kinds of changes in electoral politics in Louisiana that open the door for Democrats to come in and make a case.
Boy, I'll tell you, it's going to be interesting to watch all of this. Rick Davis and Jamie Jackson, we thank you both for a great panel. I guess the lesson, if you're a Republican, don't cross the president. to talk about its history and its staying power.
When I woke up in the morning, I didn't know what had happened, but my phone had 1 million messages on it. I'm like, what is going on here? So it was very, very, I mean, woke up and when I saw the clip, it was just unbelievable.
Isn't that something? You had the Martin sign right there, though. Now, does Pete Hegseth come here as a regular, or that was just for TV?
I think that was for TV. Okay. Pete hasn't been here. Kavanaugh's been here, but it was a long time ago. I think when he was going to school. Oh, and but Kash Patel has been in.
No kidding.
Yeah, he's been in. He enjoys he food here, so he
behaved himself.
Absolutely.
Okay, so. Yeah. Martin's, of course, is an institution here in Washington, and people have been coming here long before SNL ever got it in the cold open. And I'm fascinated by the product that you sell, because you sell history just as much as you sell food, right?
Oh, absolutely. You know, and that's one of the things is that, you know, over the years, you know, we don't, you know, put any pictures on the walls of famous people that come in like some restaurants will do, because we want Martin's to be a comfort zone, a place where people can come and get a great meal. But as it happens, as it has, you know, over the years, many things have occurred here that has made us into sort of a great political place to come and hang out.
Well, it's a museum when you walk around here. I mean, elements of the New Deal were hammered out in the back cove there. There was a certain proposal made at this booth behind us?
Yes, John F. Kennedy proposed to Jackie Bouvier in our booth here.
The Rumble booth, also something that JFK used for a pretty important project.
Yes, we have a little seat there called the Rumble seat. It's a very interesting half booth, and couples love to sit there. I like to sit there many times by myself. Okay. And yes, John Kennedy drafted a lot of his inaugural speech there.
Ask not what your country can do for you. Ask what you can do for your country.
Right between them, the Nixon booth, which is not lost on us. The fact of the matter is, though, this is a neighborhood restaurant when it comes right down to it. You just happen to be in a very profound neighborhood.
Absolutely. And, you know, I think Martin's, we were one of the first places here. I mean, if you go back and look, when we opened it after Prohibition ended, you know, Georgetown was not the neighborhood it is today. And so it's been just a great time to watch how we have grown with the neighborhood. And Georgetown it's a very unique neighborhood with very rich history. But it's, you know, my father used to say, Georgetown's like a pendulum. It swings up and it swings down.
How about that?
And right now, wow, Georgetown is on the major upswing.
Yeah.
It's really happening here now.
Well, it's just nice to have my sneaky bar here where I'm not going to run into anyone from work, because none of Trump's people like drinking as much as I do. Wrong!
It's not just getting a pint and a meal here at Martin's. You've actually seen real politics, real policy come together in this room.
Oh, absolutely. This room in the dugout, back in the dugout, a lot of the New Deal was sort of formulated in there.
Yeah.
You know, and then that was in the 30s, of course, when we first got open. And then as we fast forward into the 40s, we had Alger Hiss and Elizabeth Bentley, a whole spy thing going on in Martin's Tavern.
Wow.
And then in the 50s, we had the Chief Justices coming down, debating or discussing Brown versus the Board of Education.
Wow.
It was just, you know, so many fun events have happened over the years.
Yeah, well, that really underscores the history of the place beyond its age.
Exactly.
And you're still making history now.
Absolutely.
Is that right?
Yeah, we are. You know, the SNL came in and has used our tavern for a skit.
Yeah.
What more can you ask for? Just so many fun things have happened.
Fantastic.
Does this bar take cash?
They do take cash, by the way, and huge thanks to Billy Martin. Can you imagine the fourth Billy Martin to run that establishment and his whole team down there? They're great people, and I can't believe he missed SNL Live. He woke up to it the next morning.
Yeah, pretty incredible. I want to know what the actual number of texts on his phone was. It had to be in the hundreds, I would imagine.
It's never a great feeling when you wake up and see that 100 people tried to call you. It's usually not going to be good news. For him, it was pretty great.
Definitely. You going to Martin? It's a Friday night. You going to Martin's after the show?
Yeah, let's go right now. I'd say we do that because we've got a big trip to prepare for next week.
We do.
You all packed up?
Yeah, we're heading to Atlanta next week. It's primary day on Tuesday in Georgia, and we're going to have that covered for you with special coverage Monday through Wednesday. Obviously, a number of races that we're focused on, including what has turned out to be a pretty messy Republican Senate primary, as they're looking for a challenger to the incumbent Democrat, John Ossoff.
That's right. He's going to be all on his own on Tuesday night, trying to figure out who he'll be running against. And of course, on the gubernatorial side, it's a lot of names, some of them familiar, that we'll be telling you about. And we've got a Trump endorsement on the line in that race as well. But we'll talk more broadly about the economic themes right now in the city of Atlanta. We'll be joined by Atlanta's mayor and try to get you prepared for a number of other primaries that'll be taking place on Tuesday night. So it's just part of our coverage here at the outset of this primary season that you'll be able to get used to between now and November. A lot of things
This has not been a great time for genius. The people who claim to have it do not seem to qualify for it. The people who diagnose it, others, seem to have a very, very narrow definition in mind. All agree our stone-cold geniuses always seem to have a dark side. I read in Bloomberg Businessweek about the biggest crypto genius of them all, Sam Bankman-Fried. At his peak, he was worth like $26 billion. And that was before he was accused of running one of the biggest frauds in American history. His defense is that he is not a criminal, essentially, just inept. What does it mean to have genius in work, in the marketplace, in life? And who is even to say? To make anything simple takes actual genius, and we're going to try to live up to that name together tonight. It's the Business Week Show. Hello, I am Max Abelson, and I'm not a genius, just a regular, like slightly above average journalist who has spent about the last decade and a half here at Bloomberg News, and sometimes our magazine, Bloomberg Businessweek, writing about Wall Street's money and power. And what that means is I write about ambition and ownership and imagination and survival and risk and second acts and, of course, genius. Tonight, and in the weeks to come, we are going to be talking about those things at this table with people whose lives and careers and ideas are big or interesting or just really fun. So, welcome. This is the Business Week Show. And now. If you consider yourself a master of Wall Street, a connoisseur of investing, a soothsaying financial genius, a brilliant portfolio manager, our guest has very bad news for you. Burt Malkiel's book, A Random Walk Down Wall Street, 50 years ago, had a clear and vivid message, which was that Wall Street genius is really just an illusion, and that professionals in pinstripe suits, at the end of the day, are no better than naked animals. It was a genius and radical idea, because what he had to say is that you should forget them and just buy and hold clear, boring, basic, low-cost index funds. He is here to tell us about it. Burt Malkiel, welcome to the show.
Thank you very much. Glad to be here.
Your book is actually, it's pretty funny. It's a little saucy sometimes, your book. I mean, you say no one in finance can really forecast the future, or at least they can't do it successfully, consistently. You know, I think you use the word genius in quotation marks, and you give it to Ponzi schemers and whatnot. Right now, are there any actual
that we can eliminate discrimination. I mean, for example, opening up our jobs, our economic opportunities to women has been a very good thing, and I think has been generally helpful for women. I think it's the same sort of thing in terms of racial discrimination. I am absolutely convinced that rather than there being just a small coterie of geniuses, that intelligence is very widely distributed in our
those descriptions apply to this guest. Moraba Jah is a space environmentalist, an astrodynamicist, a spacecraft navigator, and the first African-American professor of aerospace engineering at the University of Texas. Last year, the MacArthur Foundation gave him a fellowship that is informally known as a Genius Grant. So, if you want, you could call him a genius, you could call him Professor Ja, but you'd rather you call him Moriba. So, Moriba, welcome.
Great to be here, my brother. Thank you so much.
Really glad to have you. I really love the phrase, a stroke of genius. You were in Alaska with your family in a hotel one morning. I think you were taking a shower.
Yeah.
And you had this feeling and this vision that kind of struck you. And whether or not it has anything at all to do with genius. Tell us about that moment.
I'm in the shower, and I felt a presence. And in my mind's eye, I saw flashes of scenes from like history and allowing myself to let the universe go through me and I guess use me as some sort of vehicle for the work that I'm trying to do. And if I can keep myself kind of in the moment and in a place of compassion and empathy, then I think genius is just what comes through when you allow that to happen.
There's more garbage orbiting the Earth than there are working satellites. You now work not just to make sure that all that stuff is properly tracked, but to be an evangelist for expanding the way we think about environmental protection so that it includes all that stuff. What can those of us who are not scientists, what can we do to help you?
Every day, the technologies that we have are more and more reliant on these robots in the space that we call satellites. And we're tracking about 50,000 things ranging in size from a cell phone to the space station. 5,000 are working and everything else is garbage. So that's like 90% of the stuff is trash. The thing that most people just don't realize is that these satellites that are providing these critical services and capabilities, position, navigation, timing, communications, internet with the Starlink satellites, right? Any of these things can get schwacked, that's the technical term, get schwacked by a piece of junk, and that's game over, and then you lose that capability. So I think more and more people just need to be aware that, oh, well, that space, that's somebody else's problem. No, it's our problem because our way of life, our technology is now going through this infrastructure.
There's a real stereotypical idea of genius that I'm thinking of a kind of solitary genius working by herself or himself off in a fun cabin, What does it mean, what would it mean to be a genius collaborator?
Back in the times of like the Renaissance, people looked at folks like, Da Vinci, Michelangelo, and they said, okay, these are geniuses in their own right? And people say, well, how can anybody be like another one of those? Science has developed so much beyond those days that there's no way for somebody to be able to be, quote unquote, this Renaissance person that knows very deeply things in all these different fields. Like those days are gone, okay? But to me, the real genius is recognizing where you bring in smart people from other fields that complement and augment your own to solve wicked problems.
Yeah, connectedness, connections with one another. Yeah. But my understanding, though, from reading a little bit of your writing, is that you were, I think in your childhood, you felt really isolated.
I did, yeah. my mom was born in Haiti, and she was naturalized citizen. My father, Sierra Leone, naturalized citizen. They got divorced when I was very young, and my father was just very abusive. So at the age of 7, he kidnapped me, and 9 days later, they found me in some apartment in the Bay Area, put me back on a plane to my mom. And my mom had, we had a cousin that lived in Caracas, and so we fled the country because my mom's like, I don't want your father to ever find you again. He never did physically again. But growing up in Venezuela, I felt very isolated. I felt very alone. I came into contact in this void with what seemed to feel like an ocean of infinite love and compassion. And then I realized, I have a choice here. I can choose to meet my experiences with equal anger, or I can choose to act from a place of love and compassion and heal from my pain and make my healing be of service to others. And that's what I've chosen to do.
When the MacArthur Foundation, when they named you a fellow, they said it was because, they used a beautiful phrase, it's because you envision transparent and collaborative solutions for the Earth's orbital spheres. What are those solutions? And maybe when are they coming?
My inspiration for this comes from indigenous people, from traditional ecological knowledge, TEK, I call it ancient tech. And so for me, the vision of my future is seeing Western science and traditional ecological knowledge come together, not annihilate each other, but actually harmonize with each other, so that then that could be the way of the future, so that humanity does recognize interconnectedness, empathy, and stewardship.
Thank you so much for being here and sharing your story, sharing yourself.
Thank you, brother.
Truly enjoyed it.
Thank you.
Coming up next, a genius I would like to be when I grow up.